What's up, Tasty Nation? Welcome to the show. Happy Monday. Hopefully you had a great weekend. My name is Mike Butler. I'm here with Gus Downing, and we are ready to talk all things markets, including football markets. It is my first draft tonight.
Oh, tonight?
Tonight. Kind of early.
Getting them rolling? This isn't the league that I'm in with you, is it?
No.
Okay, this would be a good heads up.
Yeah, surprise.
Yeah, I have. Mine are going off Wednesday and Thursday this week. Are my first two of the season. So I'm excited. Fully researched. You and I both obviously have drafted tens, if not hundreds, of lineups by this point already.
Yeah.
I'm excited to get things rolling and hopefully put my friends into the dirt this year.
Yeah, it is one of those funny things where it's like, if you're an options trader, you're probably a fantasy football junkie or some kind of fantasy junkie. You probably have played poker in your past life. You're probably an engineer of sorts. Like, it's just, everything's just all the same. You know, it's all just numbers.
Yes. Numbers, expected value, law of large numbers, statistics. It's all the same. Speculation, appetite for speculation.
Yeah.
There's a lot of overlap across the board.
Indeed. Speaking of appetite for speculation, NVIDIA earnings this week, it's going to be wild. We're calling it, some are calling it the Monday Night Football of earnings season. They have a 12-point implied move for the earnings announcement on the 26th here, a couple days away on Wednesday after the close. So we'll have an earnings preview written on the tastylive News and Insights tab. So check that out. Probably today, get that done. But yeah, it's going to be wild. Markets are selling off here. E-minis down 20, NASDAQ down 200, down the Russell, chopping around. But Bitcoin continues to just skyrocket here, up another 1,400. Certainly less than the last couple of days, 5K every single day at least. But good to see for those Bitcoin bulls that it is continuing its charge higher.
Yeah, quite the move out of Bitcoin here. I personally am going to need Bitcoin to see something like 120, 130 to realize some gains on my existing IBIT positions. But in a world where we go to 130, it would start something like this. So I'm pleased to see the run as well. I'm pleased to see the run as well. Going to do good things for me in the portfolio. Is Bitcoin a correlated asset with bonds? You guys let me know. That's the way that things have seemed over the past week here. But yeah, just an incredible move. The crypto bulls going crazy, no doubt.
Absolutely. Join us on the YouTube chat if you haven't already. We're streaming live there. Just pop over to Tasty Live and you'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat. We do have a packed schedule for you today. A couple of fine guests. Jermal will be on with Jem a little bit later today. But Gus, why don't you lay out what we've got for the rest of the day?
Yeah, we can. Let's throw the graphic up. Show it to all the people here. We have. Yeah, sorry, off kilter this morning. We got Chris Vecchio coming up here shortly with us for morning news. Following that up, I will be doing my daily segment, Morning Movers, 8 a.m. Central. We're rolling right into the prediction market segment after that. That'll be Mike and I. We're very excited to get that going. And then into the opening bell at 8:30. Stay tuned for Tom Preston coming up at 8:45 for live trades from him. Love TP. Such a great guy to talk to. And then, yes, we have a great interview at 9 a.m. as Mike outlined. Followed up trading charts with Tim Knight at 9:20. Trades from research with Julia at 9:30. Confirm and send with Chris and TP at 10 o'clock. And then risk and reward, I will be right back here with Errol at 10:30. Rolling into the afternoon, we have trade ideas of the day, everyone's new favorite segment going out. You see the order on screen there. Jermal, Mike, myself, Errol, Chris, Ilya, rounding things out. Full hour and 15 minutes of straight trades for you there. Into the afternoon, we have more live trading with TP starting at 1 o'clock. Into what is this? Futures Focus. Always gotta be careful. It's not futures in 5 at 1:30. So exciting day we have ahead.
Yeah. And yeah, you alluded to the trade ideas of the day. People are loving it. I think it's really just, I say this every time, but it's really like a great segment if you're newer or even if you're an intermediate advanced to just get the absolute full breakdown of every trade idea. I don't think I've even done such elaborate detail, like going through what happens if it's a winner, what happens if it's a loser, what happens if this is a vol crush, what happens if that's a vol crush. And it's just a nice way to get the full breakdown of a trade.
Yeah, I've had the same experience. And I mean, sort of unexpectedly, it's been great for me as a trader as well. I feel it's like, having to which it's a good exercise. It's not one that I would necessarily recommend for everybody at home, but having to find an idea every day that you're highly convicted about and can talk, uninterrupted for 15 minutes about is a real challenge. Really forces you to get deep into your bag of strategies of companies and really try to find some attractive spots where you typically might not before. I traded Boston Beer on Friday. That's a new company for me, but stumbled across and found an advantageous position there, which I'm going to check on right now. Looks like we're going to open up a little bit. So shout out Boston Beer. Love it.
Love to see it. No, it is funny you say that because when I first started here, I was working and just answering customer emails left and right. And that's how I learned how to trade, was looking at other people's positions and then analyzing it and then being like, well, you could do this. And that was like my job the whole day. It was literally just like thrown into the fire, learning, forced to learn for sure. But yeah, little Sam Adams kicker today. Love that. But yeah, let's bring in Mr. Chris Vecchio. He's always got stuff on his mind, of course. Chris, how you doing this morning?
I broke the body of my razor blade, right? Like the stick itself. So I was like, yeah, I'll just shave with the head. Like I was a trained violinist as a child. I have great dexterity. Could be a surgeon. Could not be a surgeon. So lots of bleeding after this morning.
Perfect. What a way to start the day. What a way.
Not quite a steady hand. It's like, what was it from Superbad? It's like, you don't have the dexterity or skill to pull that off. I do not.
Did you you went for the grip on the sides, or was there enough stick left to have a little tiny bit of stick?
No, I just took the head itself and like put it on my finger and then gripped it with my other two and kind of just shaved.
You know what? Given the circumstances, I think you did a bang up job. This could be a lot worse.
It was at the very end too, is when I got the cut in like the final minute. I was like, oh, you were so close.
I love that. Yeah, I have I used to have a mirror that would hang in the shower and then it fell, like the suction cup thing fell off and just broke. So now I just have this like literal handheld mirror that I hold in my other hand, and it's insane. There you go. Yeah,
that's exactly what I was thinking of. And that movie now is almost 20 years old, guys. Like that may be a little dated for the audience. Gus, have you seen Superbad?
I have seen Superbad. Yes, a number of times. It's still a classic high movie that you got to watch for sure.
It reminds me, I have to ask Julia if she's watched Hackers yet. There's no chance she has, but I'll remind her today.
More up her alley. Yeah, you've been trying to get me to watch Hackers for a little while as well.
You got to watch it. It's incredible. it's truly incredible stuff.
See, Gus, there's a certain point where, like, at least for me, I'm like, oh, have you seen this? And it's, oh, you haven't seen this? Oh my gosh. And that's an indictment of you. And now when it's like, have you seen Superbad? It's like, please tell me you have, so I don't feel so freaking old. Like that's it's not really going after you. It's more like, okay, thank you. Self-soothing for me.
No, yeah. I've seen most of Jonah Hill's filmography at this point. I love pretty much anything that he's in. And Superbad, certainly no exception.
Careful what you say about him these days. It's apparently true. He's doing jiu-jitsu. And, if he hears you saying any, as real tough guys know, you threaten everyone around you constantly.
Yes, as they say, the loudest dog in the room is the scariest one.
Yeah. Okay.
Yeah, it is. I think E was the one who said he's never seen Austin Powers, and I was just like, okay, come back to me when you've seen that movie. I can't engage in this conversation anymore.
I was, the most recent flight that I was on had Austin Powers' Spy Who Shagged Me, which I have not seen that installment of the series. So crossed my mind to give that a watch for you. There's Jonah Hill doing some jiu-jitsu.
Oh, gosh. He's going to come to Chicago and kick our butts.
I noticed the color of that belt doesn't indicate a ton of experience in this craft. I, too, have taken one Brazilian jiu-jitsu class in my life. I learned how to put somebody in half guard. What do I do with them from there? I don't know. Hold them down till help arrives, I guess.
Yeah. Hey, he's got some
You get out of half guard, you swing over into an arm bar. Now you're really cooking there.
Yeah. What are you looking at this morning? Seems like, oh, perfect. Full mount. Great. Full mount,
cool.
Bleached head. Incredible stuff.
Thank you, producers. Note that the producers have a thing for Jonah Hill. Have lots of photos of Jonah Hill just in their pocket, which is odd.
It is funny,
that was definitely. Go ahead.
Dana White it has said that Mark Zuckerberg like actually is a weapon. Like he actually has trained enough to be lethal. So that's hilarious to me because I can never see Zuckerberg in any other way other than him surfing it with his full dry suit on with the sunscreen on his face. That's a good picture. If you can find that picture, that is an incredible picture of Zuckerberg. But yeah, apparently he's changed his tone a bit.
To what extent? What's the quote here? What's he implying about Zuckerberg? He's not saying Zuckerberg can hang in the UFC.
I don't think that. I think he's pretty close though.
Interesting.
No, he's just letting you know, like if you see Mark Zuckerberg out in public and you're thinking about fighting him, like, think twice.
Yeah.
If I get to Mark Zuckerberg, there's been a security failure somewhere along the chain.
Truly.
Yeah, like Zuckerberg's be like, no, guys, sorry, security team.
That one's too
I've got
cool.
this.
That's too cool.
That's way too cool.
That's way too cool.
That's the coolest picture I've ever seen of Mark Zuckerberg. Yeah. I don't know where you guys found that.
That's way too cool. That's got to be AI. But no, there's a different one where he's in a wetsuit and he's got tons of sunscreen all over his face. That's the one I'm thinking of.
I've definitely said 4th of July, happy 4th of July to people using that photo.
Yeah. Yeah, it's way less cool. Trust me. That is actually one of the most incredible pictures I've ever seen of him too. What a day. What a day we've got so far. But yeah, anything crossing your mind this morning in these markets?
Besides making Jonah Hill and Mark Zuckerberg look real cool.
We're gonna bingo card this morning. There it is.
All sorts of places.
That's what I'm talking about. Yes.
Oh my God.
He's not even surfing. He's using one of the fake ones, the foil ones. Yeah.
Gosh, he doesn't even need to be worried about melanoma anymore. Hasn't he seen Moderna's new drug? Get rid of that sunscreen, Mark.
You got a GoPro? What's he got going on?
It's like an actual propeller behind the surfboard. So he's actually just.
So he's not even foiling. It's completely fake.
Yeah, he's synthetically surfing.
I see.
But
he looks like one of those Victorian queens.
Yes. This is the picture that pops into my mind when I hear Mark Zuckerberg, just so everyone knows.
Queen Elizabeth. Okay, so what are we watching here today? So obviously what's happening in the precious metal space and the crypto space is top of mind still because over the weekend, U.S.-China trade war, U.S.-Canada trade war picked up with 50% tariffs going both ways here. And we see Besson's unveiling a new financial package of doom of sorts. That's not the exact quote, but it's pretty darn close to what he said he's going to hit Iran with here. Oil prices are in though this morning, right? And so if the sanctions are going to be truly about the economy and the risk can stay low while the oil flows, then all the better. Apparently, Axios is saying that there's a 400% increase in ships transiting the Strait of Hormuz over the weekend. So oil's coming out of the gate a little bit softer here, down almost 2% right now, which is good news for everyone. But gold and Bitcoin, those are probably the two most important things to watch at the start of the week. Bitcoin's getting up there, guys. We're starting to look at territory getting close to 80K again. Here in the futures market, gold crossed $4,700 an ounce right now. And I saw a great stat over the weekend. Silver has not touched a new 52-week low in over 4 years. So strong this market's been. So we now have a turn higher in these scarce assets with this pressure in energy markets, pressure on the long end of the bond curve. Stocks can do their own thing at the moment. We have a fun macro trade now in the works thanks to Scotty B's intransigence and refusal to heed to just not interfering in the bond market. That's really all I can say nicely here. I've been told to be a little bit nicer about how I talk about the Treasury Secretary. It's hurting his feelings.
Oh, I tweeted something mean about him this morning, so I guess I'm picking up what you're laying off of there. I noted that in every picture I've ever seen of him, he looks like a villain in an animated Disney movie. I don't understand why they take such villainous, dark angles of him all the time.
Yeah,
he also punched Elon Musk in the face. So listen, you love him, you hate him. It's true.
That's the fight that needs to be commissioned. The Zuck versus Elon fight.
Yeah,
I think
we talked about it.
Yeah,
they were going to do it in the Coliseum.
Yeah, which would have been insane. So
cool.
The aliens would have come and just struck us down if that's what happened.
I'm for it. If we're going to have the billionaires fight, let's use the billionaire resources to have them fight somewhere cool.
It's true. But yeah, crude oil getting out of backwardation a little bit. We're less than 2 points now between the September and October, and then these back months fading a little bit. But this is, of course, a living, breathing thing. So I don't really read too much into it, but it's nice to see that it's not above 90, soaring into the hundreds for sure.
Yeah. And can I, I made a roll here, if you will, because I was trading a GCV6 contract. I have a few different gold things on right now, but about a week or so ago, I put on a position in GCV6, looking for, just a small move to the upside. And it was a $5 wide spread. So it was in at the 42.35, 42.30 there. It was put on for $1.40. On Friday, it was decaying down to 60 cents there, guys. And with 31 days to expiration, I do not need to hold a position. That's decayed down to more than or less than 50% of its original cost. Move on. But gold's breaking out. So don't want to move on too quickly. Instead, I actually rolled up the position into the 44.75, 44.50 short put spread here, collecting $8.30 of credit on now that $25 wide strike. So $1.40 on $5 wide was a little bit light, but now that this thing is really ripping higher here and vol's expanding a little bit, I want to take advantage of that, and I'm feeling pretty confident on gold. So instead of $5.25, $8.30 is a little light. It'd preferably be closer to $8.33. Oh wait, that's not pretty light. That's only 3 cents, or should be 3 cents off of our preferred 1/3 of the width. So I have that on gold right now. I like rolling up when it's a position that we've milked most of it. It got far enough away from the short strike where when you're $400 or $500 away in a product like gold, 30 odd days to go. I mean, look, if it's 60 cents and I have 30 days to go, guys, I'm making $2 a day holding on to that position. It's time to move on and look to extract some premium elsewhere. So that's the big adjustment for me. Otherwise, just delightfully holding on to the 45.50 call spreads. Put 10 of them into the follow account last week when Bitcoin started breaking out. So we may be looking to monetize that fairly quickly now.
Love it. Yeah, Bitcoin has been crazy, and we've been idly positioned for this rally just by picking up Delta, holding shares. Like I had 100 shares of ETH for so long after getting put 100 shares of stock, and then I just closed those shares for scratch, kept the premium for net profit. IBIT had 100 shares, got into a new position, sold a 40 put to buy a 50 call in December for $1.70 credit. I just recently closed the another position where I sold a 35 put to buy 2 45 calls. That was a almost $400 winner into the rally last week. So we're looking good in terms of upside exposure in IBIT, at least right now. And MicroStrategy, same story. Short this one's actually a diagonal spread, 110, 140, long November, short October, call diagonal spread. And looks like MicroStrategy is going to continue to open higher with Bitcoin up again today.
MicroStrategy is the number one. That's fine. Show goes on, Gus. I was taking a look at our top movers and what's been discussed the most over the weekend here in social media. Surprise, surprise. MicroStrategy has the most 24-hour upvotes across all subreddits on Reddit right now. SLS is number 2, SpaceX 3, NVIDIA 4, SPY 5, ES, which is Evercore Sciences, not the S&P futures. Evercore Sciences, ES 6, GPS 7, Meta 8, DTE 9, and GLP 10. MicroStrategy here, Mike, I know that you've been trying to pick this up, and maybe Sailor can survive another day or so. It would have been nice to see him get knocked out just for the sake of clearing out that over-leveraged whale, as we did with situational awareness for semiconductors back in July. We saw how that turned out. We saw this worked out with Bitcoin previously with FTX. You get rid of the guy who's mucking around in the system and over-leveraging things, and the market can finally bottom. But evidently, Besant did that trick, that little favor for the market here. So listen, MicroStrategy, Coin, I think we should be looking at Coinbase here, quite frankly. The volumes that we've seen in the crypto space over the past week have been astronomical. Last week, we had the highest short covering window in a 24-hour basis in Bitcoin ever, right? There have been bigger 24-hour liquidity events in Bitcoin, but this was the biggest short covering one ever where shorts are vaporized. So clearly something's going on right now. And a lot of people are getting back into the game here. If there are pullbacks in some of these, in Coinbase in particular, I'd be interested in selling a put spread there.
Yeah, IBIT had more share volume. The last day I checked it, I think it was Thursday. It had more share volume than SPY, QQQ, DIA, and IWM combined. So that tells you everything you need to know about like you said, the reintroduction of the volatility in the space, but also the participation for sure.
Looks like we're going to open up at 44.80 or so in IBIT. There's 40 minutes to go, so a lot can change there. But it's a market that just continues to run.
Yeah.
We get to 46 or 47. I'm at 25 days to expiration on the 45.50 call spreads here. So those were put on, and this isn't a short premium trade, right? So I'm going to be a little bit more flexible with how I manage this. But those were purchased for 43 cents. And right now they closed at $1.08 on Friday. So, I've got some room to run here. It's a nice little lotto ticket that's working out. But I think Gem and I are actually on the same page about this. If we obviously approach markets very differently here. But what Besson's trying to do right now is effectively cap yields. The Treasury Secretary coming out and saying that yields are too high, they're disconnected from the fundamentals, and I have asymmetric information that lets me know the true yield level that you plebes couldn't possibly understand. So I'm going to gently guide us there. Okay, the market's not going to buy that nonsense, and so it's going to find another outlet. And the outlet is killing the currency. If this was any other economy in the world, it would be a currency crisis. I know this because I wrote something on Turkey many years ago about how they were heading into a currency crisis. And the firm I was working at received a letter from the Turkish government asking me to stop talking about them negatively, lest the firm be banned from operating in Turkey. So I still haven't been banned from Turkey myself. One day, not a fan of authoritarian regimes. So if Iran, North Korea, China, if any of them want to put me on the ban list, feel free to do so. But no, if this was any other country in the world, we'd be talking about a currency crisis, an emerging market currency crisis right now.
Yeah, especially when this narrative came out, I think it was Tuesday, 7:32 Central AM, when all the markets ripped in different directions based on this, exactly what we're talking about. It wasn't a changing of the tide. Things were said and the markets were just like, no, we're not doing that. So I think that speaks volumes, where the market is so steadfast and strong that it just basically completely ignored the situation that was trying to be forced into the market.
Yeah, and bonds faded the next day, and while they're not doing terribly today, Mike, I told you I was going to fade that move as soon as it happened, right? As soon as I saw it, it was like, oh, $4 billion. This is why bonds are rallying, a liquidity operation. The 110, 109 in 18 days to go. It's working out great so far. It's currently trading at 108.28 ticks. So yeah, it's back up half a point today here, but it's already in the money, and I'm just happy to let this sit because I think that bonds, the bond market's not going to take this, right? And just if President Trump, still the funniest president we've ever had, saying that if what Besant's doing doesn't work, he didn't direct him to do it, but he could always do the ultimate intervention, which is get the U.S. military involved. So hopefully, while I'm downtown today doing all this filming for the company, guys, Trump doesn't decide to bomb Bond Street or something, because Bond Street is a place in Lower Manhattan, a few blocks from Wall Street, and I just that's not how you defend the yield curve.
Yeah, I would agree.
I was thinking more have the military go to people's houses and just make them buy bonds. We can do this grassroots from the ground up and prop bond prices up there.
I'm gonna get a knock on my door. Close your puts.
As a long TLT holder, I would be safe. I would be passed over by the U.S. military in this situation. I would say, guys, I got 600 shares, and they would say, okay, you're good.
Yeah,
that's a true patriot.
Yeah, patriot that got assigned.
The leap call out in January is alive and well in this portfolio.
Guess that's the draft. You were drafted into a long TLT position.
Yes,
Congratulations.
I guess I was drafted twice because I got assigned 200 shares, and then in my infinite wisdom dove back in for another 4 contracts. I'm up getting assigned on those too. So we are deeply long TLT. I am patriotic. It's Liberty sandwiches today for me.
I think it's
good for this country.
Yeah. I mean, we're at multi-year lows, so why not play for a little pop? But yeah, this is an interesting market for sure, and it seems that the weakness is still in here in the E-minis and Nasdaq specifically. If we look at the recent ranges, and in last week we had almost 6 days of red in a row, but it looks like we're going to be heading lower, at least right now in this morning session with 35 minutes to go.
Well, this week, really, it's about those software earnings. I know that you guys are going to cover them, and you're going to cover NVIDIA shortly here. But software before NVIDIA, and then Jackson Hole at the end of the week. So if you're trading bonds, really the last, even NVIDIA, financing concerns. Broadcom's big debt offering, has that not spooked people a little bit in this market, right? Share prices have come in a bit. They're talking about $60 billion offering and competing with issuance from treasuries. So this is going to be a very interesting week. I know it's NVIDIA and then Jackson Hole, but it's really so much more than that. I'm pretty excited here for the coming days.
Yeah, it's another week of kind of a split earnings card where it's not just tech. It's not you obviously have NVIDIA on Wednesday after the close, but Zoom, Salesforce, Best Buy, Affirm, like it's a hodgepodge of different items here.
I did not know that Best Buy still existed.
Yeah.
Oh yeah. Yeah, got one I drive by every now and then. Let's give the dollar stores some love as well. Dollar General, Dollar Tree going off on Thursday. I remember I had a ripper of a leap on Dollar Tree back in like 2022, 2023, something like that. They had a great year. One of those years. Dollar Tree will have a special place in my heart.
Yeah.
How's Dollar Tree doing names like LVHM and what have you? Do we get an hour K-shaped economy trade still playing out here? I'm looking for things that are non-AI related or thematically not tied to AI, just for the sake of diversification. So this piques my interest here, Gus.
Well, Dollar General might be even less related to AI than Dollar Tree of the dollar stores. If you ever seen somebody stop smoking a cigarette to come inside and ring you up, that's Dollar General. AI might still be Allen Iverson to them. So yeah, I don't know. Perhaps K-shaped economy. Especially I'm surprised we didn't see more of a run out of these dollar stores as we were seeing the capital rotation out of tech. We had that little 2-month blip on the radar during this summer. Very recently. The Dollar General, Dollar Tree obviously stood to gain from that and did a little bit, but I would have expected to see these, benefit the most from rotation into small caps, and as people become concerned about these big bloated companies, maybe the most is a bit of a stretch, but more than what we saw.
Yeah,
I'm surprised that you would besmirch my process like that, Gus. You know what I do before I get on air. Am I just some Dollar General cashier to you?
It's a major sign of acceptance in their culture. Okay, I appreciate it when the Dollar General employees stop smoking their cigarette to come inside and ring me up. All right, especially if it's pretty new. It's like, stay out there and finish that cigarette, man. I'll go see what kind of terrible things are in the frozen section here and come back.
Yeah, these two we used to trade a lot for earnings because they would have separate earnings times. So like you would watch Dollar Tree, and then whatever Dollar Tree did, you would just do it in Dollar General or vice versa, and it hit a lot. But unfortunately, this week at the same time, sad.
Well, there was always the ratio like Dollar Tree to Target, Dollar Tree to Walmart, because Walmart really, I think culturally, particularly in the Northeast where there's not so many Walmarts, is always viewed as kind of like a Southern, less cultured kind of institution. But the reality is, if you look at Walmart's business, and it hasn't been that way in 20 odd years. It's been more middle class, upper middle class, particularly as it got into groceries. It's really expanded out its clientele. So Walmart sits in, it's not a Target brand or Target clientele, but it's approaching that more and more these days. And it's less of a Dollar Tree crowd, less of a Dollar General crowd. So when you see DLTR, right, DLTR is hitting its highest level relative to Walmart going back to August 24. It's been 2 years. Is that a sign of Walmart weakness, or is this another piece of contemporaneous evidence within the broader consumer ecosystem that there is weakness afoot, and consumers are downshifting from perhaps higher priced goods, companies that aren't exactly local, affordable, and looking for more reasonable alternatives here? So I know Ilya has been talking about things like this. I don't see a trade out of this yet. Obviously, DLTR versus Walmart has nearly doubled since late May, given the ratio there. It was about 0.65. It's now 1.28. But thematically, again, end of August here, we're getting through Jackson Hole. I'd like to have some trade ideas in my pocket that are unrelated to anything going on with NVIDIA this week, because there's plenty of movement coming on the pipeline. NVIDIA is the domino that's going to knock down everything. It could be memory, it could be cooling, it could be semi-caps, right? All of it is going to be touched by NVIDIA. So for me this week, things that are not related to NVIDIA.
Fair enough.
Feels like a smaller and smaller basket these days.
Mm-hmm. Well, Chris, appreciate your time. And I think, again, you did great on the shave. with you did your best you could with what you had. Isn't that the famous phrase?
I guess, I could have sucked up and, used one of my wife's leg razors and just use that stick. But the brain wasn't doing much thinking this morning.
Yeah, that's par for the course, my friend. But we'll see you a little bit later today.
See you at Confirm and Send. Send your questions in research@tastylive.com, 11 a.m. Eastern, 10 Central Time.
Love it. Love it. Send those questions in and join us on the YouTube chat. Also, if you have not already, we're streaming live there. But E-minis down 12, NASDAQ down 177. We're going to take a quick 90-second break. You're watching Tasty Live. Hello, everyone. Welcome back to the show. We got some morning movers, and I'm ready for it. I have no idea. Sometimes I can get a feel like he might talk about these things, he might talk about this, but it's like there's not much going on right now.
There's not, and I will admit I did have to scrape the bottom of the barrel to find some good stuff today. First story is clear cut, needs coverage, and after that I was grappling a little bit, but I got some exciting topics to go off of today. First one, which I just keep talking about this company on Morning Movers, but Alibaba. Alibaba shares set to open down today. They announced they're going to issue $10.2 billion worth of new shares in the Hong Kong market. So dilution risk coming in. They're doing that to fund their recent AI push, which has been intensifying aggressively over the last 3 months, obviously present for the past few years. This comes just days after I last talked about Alibaba because they reported a 75% drop in profits due to heavy AI spending. Now they're doubling down on that and saying they're going to issue more shares to get more money for more AI spending. So the market growing just a little bit tired of all this AI spending news from Alibaba. As we've seen, AI spending, you used to be able to just spend as much as you want. It was always cool. Now you got to be a little bit more tactful with how you do your AI spending, and the market deciding that this is a little bit too much money out on the balance sheet for Alibaba right now. So yeah, you see that dip in the market happening there. These shares are going in the Hong Kong market, not the U.S. market. So U.S. shares set to open down 3 or 4% today, as we're seeing on screen here. Actually, this is much more aggressive than 3 or 4%. So yeah, things are rapidly changing. Hong Kong market closed down a little over 10% on this news. So we'll see if the U.S. market grapples to reach those depths as well. Although obviously catching a little bit off the bottom here.
Yeah. big sell off from basically Friday, late Friday, over up in this 125, 130 level. But yeah, I mean, Baba, it's funny because like these companies, we used to trade them a lot more, but I have not made a Baba trade in years. And it's like it is super whippy. And if you like that super volatile situation and you have that two-sided market appetite, Baba is one of those products that can give you that. You just got to be strapped in for the ride.
Yes. Oh, yes. Yeah. The moves that Baba takes, I mean, it's very reminiscent of Meta to me, honestly, just in terms of as a trading vehicle. It feels very similar to Meta being involved in it. Just takes these giant swings on a percentage basis intraday over the course of a week. You blink and it's at a completely different level. But if you're directionally correct, the rewards for that are handsome, to be sure.
100%.
Next thing I have on the docket for today, excited to get to talk about this company. I don't think they've been getting enough love since IPO. That's Jersey Mike's. Jersey Mike's subs set to open a little bit higher today. Not crazy exciting news, but Wall Street has issued coverage at buy ratings pretty much across the board. And everybody likes their different terms. Buy, undervalued, underweight. You pick the term that you prefer, but the analysts are saying they like Jersey Mike's and could see some upside here. So the market responding positively to that, propping things up a little bit just before open today. The superior sub sandwich chain in America by a margin, in my opinion. I think there's a clear step down to the next tier.
Yeah, I do eat this more often than I ever thought I would. So I agree. But yeah, they are good. They're kind of like a McDonald's type now, where there's one on every street corner. Yes. It feels like.
Not to the extent of Jimmy John's here in Chicago, which is incredible. I've seen Jimmy John's across the street from other Jimmy John's. I don't know how it's possible.
They got to just corner the market. I used to see that with Mattress Firm.
Mattress Firm. I was about to bring out Mattress Firm. I was going to say, is Jimmy John's also money laundering like Mattress Firm? Because there's no way you got this many locations.
Yeah. There was one in Schaumburg, right by Woodfield Mall, and there was 3 Mattress Firms. Like one was in this strip mall, one was across the street in this strip mall, and I was like, "This right here, this is automatic." And then someone did a video. They posted a video on that. Like, there's no way this is legit. It not be legit.
Yeah, it's incredible. Mattress Firm gets a lot of flack for that, but yeah, Jersey Mike's, they continue to grow, and I'm happy for it. Like I said, love me some Jersey Mike's. When I had appendicitis and I was still unsure if my appendix had burst, I was like, you know what? Let me try eating some food. Maybe I'm just hungry. Maybe that's why I had this splitting pain in the lower right side of my abdomen. So went to Jersey Mike's. So that was that's a strong Jersey Mike's memory for me, is me just wincing as I bite into my number 7 big Italian on the grill. By the way, at Jersey Mike's, they'll put anything on the grill for you. People aren't privy to this. Apparently, this is news to people. They'll put anything on the grill. You can ask them any sandwich, any cold sandwich. They'll throw it on the grill for you. Get that cheese all nice and melty. It's good stuff.
Oh yeah.
Third thing on the docket, my alma mater, UPS. Love giving UPS some love anytime I can. We hate FedEx. All my homies hate FedEx. UPS is investing $2 billion in their international healthcare and supply chain businesses. These investments actually began in 2024 and will continue through 2028. News just breaking today as the Vice President of International Strategy took an interview to detail everything that they're doing. I thought this was interesting in that this really parallels what we're seeing out of airlines right now, which is companies leaning into their most premium, highest one-shot revenue offerings in favor or prioritizing those things over, the average consumer. They're cheaper, more day-to-day operations. We've seen, United Airlines roll out you can pay to have nobody in the middle seat. They got the relax row now. You can pay to lay down. They got the a la carte first class where you just get the seat without any of the benefits. Delta is doing that same thing with the a la carte first class. Now we're seeing that bleed over into shipping a little bit as well, as UPS wants to prioritize the boxes that make them the most money. And let me tell you, I can say, having worked at a UPS store for 5 years of my life, those international shipments are immensely more profitable than any domestic one. It's incredible. If you've ever gone to a UPS store to ship a box internationally, you've probably been surprised by the exorbitant rates that they charge on those things. But yeah, and then obviously anything refrigerated, anything that needs to go quick. And I'll tell you, interesting UPS fact off the top of my head here. If you next day something, if I wanted to send a next day air package somewhere else in Chicago, everything must go to Louisville. So if I send a package 2 miles away, next day air, it will go to Louisville and come back. That's what you're paying for with next day air with UPS. So it's highly profitable business for them. And we're seeing this sentiment blossom out across the market a little bit.
Love it. And yeah, that's interesting that they don't have like an intra city van.
Yeah.
That you could just dump that on.
Yeah,
Like,
there's
I'm
no
sure
there's no nothing. And there is like it'll go like to whatever our distribution center is and then to the airport and they'll put it on a plane and bring it back. Then it has to go back through the same steps. It seems like it could just hit that DC and come back out, but it's how it works. They've decided this is the most efficient way to do things.
Huh.
Like I never understand why they deadhead planes around with nobody on them. It's like, is that more, wouldn't any tickets cut into this cost basis a little bit?
Yeah.
I don't know.
I would fly on a plane filled with boxes if it cost me like
Sure.
Yeah.
Yeah, there you go.
Strap into the side of it.
UPS should just get into commercial air. Yeah, exactly. Just throw me in the cargo hold.
But then you run the risk of the people on the plane being like, I'm bored. I want to see what's in these boxes.
That's true. That's true. I guess, yeah, you gotta, they jack your ticket cost up if you start going into the boxes. But
yeah.
I could make myself a nice little bed of bubble mailers, lay down in a cargo plane. Be fine.
100%. But yeah, this is, I'm definitely going to open a position in here on the open in about 20 minutes because this implied volatility is far too low. In November, you get a little spike from 25% up to 30 because you'll have an earnings announcement in this November cycle. But even at 30%, that's still really low. Like an at the money option trading for $500 in December, that gives you the entire rest of the year to get any kind of upside movement. Even if you went with a 100 strike, slightly in the money, and then you go to like September, October, and just sell something like this, like the 110. Like this is the kind of thing that's like I don't want to say a no brainer, but I mean, it's if you're looking for risk in a product that's near lows, like you want to see low implied volatility if you're doing the debit side of the coin in terms of the trade strategy. And I like that you can get even December, November, like a less than $6 for a 15-point wide diagonal spread. There's just a lot of upside profitability potential if you do get a reversal here. But of course, you have to be directionally right. But I will do something like this. Long December, short October at the 110, and just call it a day with that.
Yeah. Yeah, I like it. It's a great point. Yeah, slow mover, great way to squeeze some leverage out of it. UPS also, my last fun fact about UPS, largest fleet of airlines in the world. Out of all commercial airlines, anybody. It's UPS has the most planes. You wouldn't realize it, but I guess it makes sense. They got to send things all over. Yeah, there you go. That's you. Yeah, right there. Yeah. Perfect. I'd do that. It'd be way more full than this, I guess.
Yeah.
How does this all work? Are these conveyor belts? I guess they are.
Huh.
Fascinating. Yeah, you can put me on a conveyor belt too. That's fine. Just load me in. Cover me up. I'll be all right.
That would be wild.
I mean, I guess it's got to be a little bit climate controlled, right?
Maybe. Yeah. To a degree. Like maybe like 60 degrees.
Yeah, I mean, like you're allowed to ship liquids. Like we couldn't do it so cold that liquids start exploding and stuff. So yeah, I'd probably be fine. Puffer jacket, be all good. Last thing, which I'll just touch on real quickly, is it doesn't have too much bearing on U.S. markets, but I just found an interesting Shein clothing brand, which I've heard people pronounce Shein. Not sure what's correct. Shein is what we're getting today. Shein targeting an IPO in Hong Kong at a $27 billion valuation, which is about 64 billion was their valuation in 2023 and again in April of 2024. Okay, sorry. Let me start over. I knew I was getting confused here. 2022, Shein was valued at $100 billion. That slid to $64 billion for 2023 and 2024, and now has slid all the way to where at IPO they're looking to raise money at a valuation of $27 billion in the form of a $1.77 billion funding round. So, yeah, big decline for Shein. Won't comment too much on it. Definitely child labor happening at this company. Not good stuff. I'm not upset to see the slide. There we go. Thank you. I know that I'm right. Yeah, good. Yes, many shoppers and even company campaigns. Okay, well, then I'm not sure what I think of this Google AI overview. I say Shein. This word pretty clearly is Shein to me. But yes, I've heard the Shein a lot. Lots of people will say that. But anyway, yeah, just interesting slide for them. An IPO on the Hong Kong market. We'll see what comes of things. Yeah, main U.S. headquarters there. That might be in Houston. I feel like I've driven by that building at some point in my life before. But yeah, for anybody unaware, ridiculously cheap clothing. You do have to wait for it to ship from China, but this is a very common thing for people to, if they need a bunch of swimsuits for the summer or something, you can hop on here and get 10 swimsuits for $40. And then you got to wait a month or two for them to show up, but incredibly cheap stuff. No return policy though. Good luck with that.
Yeah, absolutely no returns. No exceptions.
But this is the company, if you guys have ever seen on social media, they had a scandal a few years ago where they like help was being printed on tags inside clothing. Like, help us, we're trapped here. Help me, I have dental pain. I remember seeing one of those. It's it's not great business practices happening at Shein. Completely unregulated capitalism might be problematic. Hot take.
Yeah, that is not good. Not good. But yeah, I think for the morning movers today, Jersey Mike's absolutely interesting. Really just IPO just a few weeks ago, but sitting around 24, 25 bucks a share. They do have options that are somewhat liquid, but they don't have too many strikes. But you could still, like, if you wanted to sell a put to get shares, like, it's totally in the cards here with decent markets in some of these expiration cycles. But I think UPS is going to be my trade takeaway for sure. Long December, 100 strike, $800, and then selling the 110 in October against it for over $1. 656 in terms of the debit on a 10-point wide diagonal that's all the way out in December. Just gives you the rest of the year to get any kind of bullish movement. And if you do, it'll be a profitable trade. So I like it. But yeah, that is it for morning movers. We're going to take a quick 90-second break here. We'll take a look at the prediction markets on the other side of it.
Oh, yeah. There we go.
Oh, perfect.
Yes.
Interesting. Not great. Not great.
Not great.
I have dental pain. Not great. Yeah.
This one could just be a bad translation, though. Like, this is so specific and obscure. Like, we've seen all kinds of bad translations on Chinese products before. So I don't know exactly what this was supposed to be, but not a good look.
Yeah. Not great.
Optics are bad.
Not ideal. But yeah, I think right on the open, I'll look to get into that UPS trade. It's basically flat as of right now. Closed at 102, opened at 102, or about to open at 102 here. But yeah, we're going to take a quick 90-second break here, and we'll come back with a look at the prediction markets on the other side of it. You're watching Tasty Live. What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Gus, and we are talking prediction markets right now for just a little bit before the market opens here in 10 minutes. I think what's really interesting about these prediction markets that are on the Tasty platform is you can get these like commodities, dailies, hourlies. You can get crypto, dailies, and hourlies on top of the economics that we talk about all the time. But in a week where we don't have too many economic decisions, I think it is interesting, especially with gold, silver, and Bitcoin just being the rippers of the day and last week too. I haven't thought about using this as like a informational gauge, like just looking at gold's daily close here with gold up 1% pre-market. The markets have this above the majority have this above 46.58, which is 70 points lower than where we're trading right now. But if you look at some of these other markets, you can see where the market is in terms of the probability of getting up there or selling off. So looks like a lot of people are trading the short put markets, for lack of better terms. Like a lot of this is probabilistic, obviously, but interesting nonetheless.
Yeah, I'm a big fan of these. Well, yeah, you're looking at the daily close market now, but I think these hourly close markets are very fascinating as well. I'm looking at the one on Bitcoin here. It's sort of arbitrary, just what's on my mind. But like, for instance, I mean, you can there's an 85% chance on Bitcoin to be at or above 78,500 by 9 a.m. today, which is 39 minutes from right now. So it's just I think that these provide a very interesting vehicle to get even shorter term exposure. The 0 days are really popular right now, and taking high probability things right into the end of the day has become a very popular strategy, particularly with SPX. And there's all sorts of different assets that you can do that with. But this essentially gives you the ability to do that at any point throughout the day, if you so choose. If you think that there is going to be a stagnant hour or a very bullish hour, and you would prefer to shrink your time horizon from the end of the day all the way into the end of the hour, this gives you the ability to do that at some pretty good prices, I must say. I don't have the exact IBIT correlations off the top of my head. Not that you could trade hourly expirations on IBIT either way, but as it pertains to the daily and end of day markets, like what Mike was just looking at with gold, there's also certainly got to be ARB opportunities one way or the other on those from time to time, where the options market is telling you something has a 90% probability of profit, and you're only seeing 86% probability of profit in the prediction markets, or something like that.
Yeah, and I think you could use this too as like another layer of hedging or cost basis reduction. So like football game, you bet the dog goes up 7-0 right to start the game, and then let's say the odds flip, and now you can get the original favorite for a scratch or a pick 'em. Like you just hit that, and then you close that gap, and
yes,
you're winning no matter what.
Absolutely.
This is a situation too where, like, let's say you're playing for a fade in Bitcoin, and you have some kind of short position on IBIT or a short position on BTC or MBT, the micro Bitcoin futures. You could just click these. Like, here's the current price. If you have a bearish position, well, if you're constantly at the 75% probability of being above that level, you click this every hour, and you're picking up premium if you are right every single time. But if you're wrong, your other position that you're bearish on in your other portfolio is winning on that. So it's kind of like an hourly short call against 100 shares. Like, that's the way I'm thinking about it.
Yeah, absolutely. And being able to shrink the time horizon like that is so valuable, because like I said, if we hop over to the financials tab, actually, we have S&P 500 daily close and S&P 500 hourly markets on here. And yeah, if you wanted to, if you're the type to take a strangler or sell an iron condor and SPX right into the end of the day, every single day, why not turn to these markets from time to time? Obviously the prices will go way up, but you can do that at a much, especially as it pertains to a strangle, at a much lower risk profile. Very clean, defined risk, defined reward as well. But exactly what you're getting into, and you don't have should tail risk play out, all that you can lose is what you post up. It's not like with a strangle, where if we all of a sudden get some crazy tail risk 10 minutes before the close and the market goes tanking, you're racing to get that covered before our good friend Margin calls you. You can just go in for these, and should the tail risk play out, you just lose what you put up, and that's it.
Yeah, I love it. But yeah, many different ways to use these prediction markets and trade them against or with certain positions you have. So love it. Check it out. Right on the Predict tab here on the platform, just along this vertical navigation. But yeah, we got about 5 minutes until the market opens here. Let's take a quick look at what's moving in the futures. ETH up 4% now. Bitcoin up 2.5%. So that continues to be the story. It was crazy last week. MicroStrategy was the leader in the NASDAQ 100 to the upside, and from percentage basis, like the last 3 days of the week, which is just wild. Never thought I'd see that. But then again, I shouldn't be surprised, because that is such a volatile product that if Bitcoin is rallying, MicroStrategy is probably rallying more. But crude oil moving to the downside, and same with New York Harbor ULSD futures here. You got gasoline futures down over 1%, crude, Brent down over 1% here. So yeah, wild market. Natty gas moving the opposite direction. Kind of a split bag here, but nothing's moving too insane, at least right now. 1-2% to the downside, 1-2% to the upside, except for Bitcoin, ETH, and micro XRP futures, which are up 11%. Love to see it. If you're an XRP holder, just skyrocketing back to this recent range that we've been trading in.
I had XRP for like 2 years, 4 years ago. Nothing good came of that. So I'm happy to see it for the XRP bulls. Is my point. If you've been bullish XRP for a little while, I know it's been a rough road.
Yeah, for sure. We do have these butterflies expiring this week. Are we going to hit it again? That would be insane. But really, these butterflies, the 29,000, 28.8, and the 28.6 in NDX, we are pretty close to that at the money short option range here. And then for SPX, the 7,500, 7,400, 7,300, this one is a little flat right now, but this is one of those where it'll explode if we get any kind of downside movement. This is 100 points wide that I get paid for $300 for. So I've had this on for about 2 weeks. Same with the NDX one, about 2 weeks, just playing for the end of the month here after NVIDIA earnings. If NVIDIA earnings sell off, the rest of the market will likely sell off, and we could be in business, but we'll see.
That's what I was going to say. Yeah, I mean, no matter what happens, you got the NVIDIA Hail Mary in your back pocket. All they got to do is say, we spent too much money, guys, and suddenly the whole market. It's a rough Friday for us.
And it's a real possibility because we've seen a handful of other products just printing in terms of revenue and EPS, but their CapEx goes up and the market's like, we're done with this.
Oh yeah. Yeah. And NVIDIA likes to spend and hand money out more than anybody. I've made the NVIDIA Oprah joke a lot where it's just, you get $1 billion, you get $1 billion. But yeah, if you have an AI company that sounds remotely viable, NVIDIA's got $2 billion for you. So yeah, good chance that they just have high CapEx and the core numbers don't even matter.
Yeah. Crude selling off here down 1.5%. We've got this 80 straddle. We've rolled 5 times. We're currently in the X contract, and X contract's at 83.99. So slightly in the money to the upside, but picked up $1,400 in premium. So our break even's up at 94. So we're well within the break even range to the upside. And then downside is in the 60s. So creating a nice wide range there with continuous premium collection over time. It's up $300 right now. I feel like this is just one of those positions I want to stay in for a little bit longer, especially if crude starts to settle down here. The backwardation comes out even more. This contract will go to sub 80, and that's probably where I'd take it off. If we pass through 84 down to 80 into the 70s, that would be my cue to take this off. But yeah, got less than a minute now until the market opens. Join us on the YouTube chat if you haven't already. We can scan through some trade ideas on the open and see if we can get some on. But yeah, I think right on the open, outside of anything that's moving from a P&L day standpoint, that's larger than I would expect, I'm going to just look at getting into this UPS position. I think this is one, especially long-term, 30% IV, super low, pretty cheap. Less than $1,000 for the rest of the year to get bullish on UPS. We don't need really much at all. This could go from 102 to 106, which is where we were five days ago, and this will be a couple $100 winner. So there's the bell.
There is the bell.
There it is. E-minis down 10, NASDAQ down 180. The Dow has ticked green for a second here, but let's go to the 1-minute chart in the E-minis, see what we got here. Okay. Big red bar, but where do we go from here? There we go. All right, we're down 20. Let's get into this UPS position here. Long the 100, short the 110 in October for 665. Do we have 665? We do not. 666? Oh no. Are they going to make me do this? No, they would never. 670. Oh, that's, hold it, 666. Oh God.
Oh God.
Oh, no. Don't like that. Yeah, NDX position here, picking up some steam. 29,050. This long option's at 29,000. This is one of those things where it's like, if you only have a few positions on and you had this NDX butterfly and you're up $1,400, like I think you just take it off into this move. With that said, if you have this hedge on and you have a lot of other bullish positions, I think it's one that you could consider leaving because you have another 200 points before you get to your sweet spot at the short strikes. And over the next 4 days, this is just going to continue to appreciate in value. But with that said, last one I had on with these, we passed right to the short strike on expiration day, and it was only like 25% of max profit. So can't expect too much out of this thing until we get to Friday. But I like that. I like having it on at least for NVIDIA earnings as a downside hedge. I'll probably play NVIDIA earnings to the upside. So it could offset a lot of the risk if we pass through that range and I close it after earnings on Wednesday, for example. That's probably what I'll do is place a bullish NVIDIA earnings trade and then keep this NDX butterfly to the downside on just in case NVIDIA sells off and the market sells off and I can just close this butterfly and take off the hedge. That'll be a hedge against the NVIDIA position too.
Bloom Energy just getting whacked at open here. That's jumping out at me on the Tasty Fast Movers watch list. I'm not sure exactly what's going on, but giving back another 7% today on Bloom.
Yeah, Tasty Fast Movers. Let's sort by downside moves. There you go. Bloom Energy leading the way. IonQ, A-Lab, Surf Robotics, down 5%. To the upside, you've got a handful of other names. So really not too much movement to the upside.
Yeah, Philip Morris popping in there too. Mm-hmm. Yeah, UPS green open there. I mean, that's why I ran away from you. Why you got the mark of the beast, Phil.
Let's take a look at
Novo Nordisk, 16 cents to the upside. Novo Nordisk. If you can hear me, Novo Nordisk, double your share price. It's not that hard.
That'd be nice.
So brutal.
What is this? 200 billion market cap? All right. It's not too bad. Just go to 400 billion.
Yeah. Just
what's the problem?
Quick little move up.
Yeah.
I mean, just do what Moderna did. It's not hard. Just figure it out. Get your best minds on it. Skin cancer, it might be off the table now, but there's so many others.
True.
Cure breast cancer, and I'll get a big pink dripped out Novo Nordisk sweatshirt.
As would I.
Yeah.
That would be amazing.
You heard it here first.
Yeah.
I'd love to buy it.
And Moderna, for those that missed it last week, Moderna had a gigantic move to the upside after clinical studies showing great results for melanoma.
Yes, it's a skin cancer vaccine is the deal. But yeah, it met results in the phase 3 clinical trial. And hey, let me tell you, I'll get this vaccine. A pale complexioned fellow like myself has had no shortage of exposure to the sun, no shortage of excess vitamin D over the course of my life. If there's anybody on track for melanoma, it might be me. So I will happily put this in my body. Give it to me.
Yeah, NVO moving slightly to the upside here. But yeah, this is an interesting market. We've sold off basically immediately from the open. And we are teetering on this lower level here, 76.65, which was the higher end of the recent range that we blasted through after Microsoft and Amazon, Apple, Meta earnings here over this 4-day cycle. But we've sold off since. So it's been interesting because the NASDAQ has been really weak, all things considered. But Bitcoin staying afloat, up 1,700 here. And just going back to this positions tab, crude oil coming in nicely. Nothing really too crazy. AMD down 15 points. Come on. Yeah, this is not ideal, but this is a Super Bowl here. 450, 440 short put spread to buy a 550, 560 call spread. Down $200, but this is a 150 credit in the middle. So as long as we stay above 450, this will be a fine trade. Meta, yeah, NDX, this butterfly is the big winner here. MicroStrategy up $2 into this Bitcoin move. I want to wait until we get up to 140 if we're going to go up there, because this is a long-term position, long November with the call and short the October 140. And the 140 now has $900 of extrinsic value to decay against the November long. So The profitability is there if you wanted to take it off. It was the timing was great on that trade, but I feel like I want to hold on to this, see if we can get a little bit more, because this profit will more than double if we get a move up from 120 to 140. And extrinsic value will continue to decay as long as we don't rally too aggressively into that 140. But if we do, it doesn't matter. It's still going to be net profitable.
Yeah, I think you're in a really good spot there. Bitcoin, this feels like we crack 80. Maybe 80 comes in as the resistance, or maybe we crack it and turns into a support. But 80 feels like the level we make a move up to here.
Yeah, I think right now I'm gonna close this USO position. This is one where I was playing for a rally in crude oil and a reintroduction of backwardation in crude oil. Around here, I got filled into this recent sell-off. We got the rip higher, we got the backwardation, and now we're kind of selling off. If we get rid of the backwardation in the crude oil futures, it's going to help USO drop down, which I don't want to happen here. So I think I'm going to get out of this. It's somewhat near term, long the 50-day short cycle, short the 20-day cycle. So if I can just get out of this, let's try and get out of this for 615, 610, be great. Please. 610, 605. Well, wrong direction.
This spread is not wide enough to be acting this way.
Yeah. Do I have to leave it for 2 seconds so they know I'm serious?
Flush some ice cubes down your toilet?
Yeah. 600. They'll give it to me at 600. I'm just going to leave it.
Just leave it.
I'm not going to the fives.
Yeah.
No. So we'll see what happens there. Hopefully we get filled. We should. Yeah, they're dropping this thing. Come on. Give me that fill. But yeah, this is kind of a neutral market here, even though the Nasdaq's down 1%. E-minis are not, only down 0.3%. And we've got a mixed bag with the Russell up. The Dow is up and the Russell is down slightly. But yeah, really wild day here to start with some single name stocks moving pretty aggressively.
UNH catching a bid as well. We like that. We'd love to see that.
Ooh.
They're $10.
Love to see it.
This could be the next leg. This could be the next leg. We got the big leg. Got the drawdown, the breathing period. They take the stairs up, people. Hopefully, I hope this is it.
Yeah, crazy move there. We need a big move there. Do they must have earnings coming up? Obviously in like October, November, December, somewhere around here. But yeah, what do I have? A worthless 500 strike call from a calendar spread, I assume. I don't even remember. Yeah, there you go. Long September, short August, 500 strike calendar. And it just dropped immediately after this earnings. The earnings were up here in 460 and then just sold off intraday. That was a crazy move. And then we've just been selling ever since. So
yeah, my only exposure remaining here is just 4 shares at a spot of 268. So sitting pretty on those. I've kind of arbitrarily decided I want my 2x. So 536 is what I'm going to need to see to be exited UNH here. I think it could do it.
Yeah. I believe in it.
It's been the thesis all along. Our time horizon was just a little too tight. It's a 2-year play instead of 1, but the recovery does feel imminent. And to be clear, I hate United Healthcare as a consumer, as a member of society. But nothing has changed with their fundamentals. I can think their business is going to continue to do well.
Yeah. Couldn't agree more.
And I don't think my backing of 4 shares is really moving the needle that much for them.
Mm-hmm. Yeah, I think. Even still with UNH, with an end of year implied volatility of 50 points in either direction, 56 points, that gets you pretty close. If we go to the upside, that's like 450, 460. But these things are based on current implied volatility, which is low. And if you look at a chart of UNH and you throw on implied volatility and the indicators, just pop over to indicators, type in implied volatility, and it will show you the 30-day implied volatility range, which I like to look at. So you can see we peaked at an implied volatility of 56% on the downside move here, and we've been cruising along around this 30, 29, like we haven't gone below 29, 27. So if we get a rally to the upside, maybe if it's a violent rally to the upside, you see implied volatility expand in here, and then the probabilities of reaching new highs get much, much greater. But yeah, UNH up, Apple up. This must have just been an intraday move. Yeah. Looks like they rallied about 2-3 points from being flat into today's move here. Apple was a position we put on last week, the 310, 325 call diagonal spread, long the October cycle, short the September cycle. Good to see some profitability there. But yeah, kind of a wild inside move here. But yeah, I've got this working order in USO to close it for $600 profit exactly. If we get any kind of flattening of this move here, it'll probably fill today, but I'll try and get out for around $600. I'll stop being stubborn if it really doesn't get filled, but I don't need to close this right now as it's basically right at my short option, and my short option has $600 of premium to decay. So we still have wiggle room. If we get a 5-point sell-off over the next couple weeks, it'll still be a similar profitability here. So yeah, that's basically it. Walmart got into a long-term position here, long December, short, long the 105, short the 115 in October. That's a scratch right now. I put that on last week as well. Similar story. It's just like this company has too low of implied volatility. Any equity that has less than 30% IV, it's a debit trade for me because they still have CEOs, they still have boards, they still have earnings announcements every quarter. 27% it just feels too low.
Yeah, I'm right there with you on Walmart. I've split your expirations. Actually, I'm on the November cycle, but I did go for the credit route. I have gone like a maniac, just a naked 105 short put. That's it. Just sold the 105. Gonna let that eat. Gave this one a lot of thought, but yeah, it was. I chose the credit route off the giant dip that they took on earnings. Which again, as I've reiterated a number of times, this was my trade of the day last week. But that earnings call was not bad. Like they beat everything, they raised everything, and they just had a little miss on comparable sales. I don't think that's enough to move the needle as much as we're acting like it's going to here. Happy to just jump in on the short put there and hope that we eat back higher above 105. Was it scary on Friday? Yeah. It was a little bit scary, but we got the bounce now, and we're sitting pretty. So happy to see that coming through as well.
Yeah, undefined risk short premium can be in any implied volatility environment because it's different. You have the ability to just roll this every single month until you're right. But like a spread, it's less premium for more risk, and you're right at the money here. So like there's a huge difference between a spread and an undefined risk trade where you can just roll perpetually.
Yes,
spreads
absolutely.
You can't.
The trade-off obviously is the buying power that you have to post up, but I was so bullish on this that the regular spread was never in the equation. It was put ratio is what I wanted to do, and put ratio required even more buying power for roughly the same amount of payouts. So I was like, screw it, I'll just sell the share. Obviously uncaps the risk a little bit more. But yeah, it just doesn't concern me that much. And I mean, if Walmart dips below $100, I'm running away from this. I don't want any involvement with that within this undefined risk position. But I just didn't see that as a very likely possibility after that call. And fortunately, it looks like the market agrees into this morning's open.
Yeah. Real quick look at the futures market before we kick it over to TP here. Crude oil down, leading the way, down almost 2% now. To the upside, you've got your crypto, ETH and Bitcoin up 3% and 1.5% respectively. And then natty gas up almost 2% here. XRP futures up 10% now. So craziness. But yeah, kind of a wild day here. Inside move across the board, but E-minis down 30, selling off here at the session lows so far. But this is kind of the line in the sand here. If we can sell off below this level, I think it's really interesting because this 4-day rally to the upside was the Mag 7 earnings exclusively. And if we sell, and there was no resistance, I think that's the point here that I'm trying to make. And if we sell off below that level, we could see continued selling through that range pretty quickly. But yeah, NASDAQ down 415 points, setting the session low here. But that's it for us for now. Just a few minutes here. We're going to kick it over to TP right now. He's going to walk through his trade ideas of the day for about 15 minutes, and then we'll be back with a guest on the other side of it. But join us on the YouTube chat if you haven't already. We're streaming live on Tasty Live, and we'll see you soon. You're watching Tasty Live.
Love will love me, love will love you, love you. down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path.
Good morning, folks. Tom Preston here, and watching the markets closely this week. And, we're seeing a little sell-off on crude oil, and it's kind of an interesting story these days. So the big news over the weekend is, Scott Bessent, the Treasury Secretary, something like that. He's seems like the guy of the hour running the whole government at this point, or at least making the big decisions. It seems anyway. And it's he's going to launch today the biggest hammer on the Iranian economy the world has ever seen, or at least that's what he's talking about. And that's what happens basically when you like the United States economy is just enormous by everybody else's, comparing to everybody else's. And it's just, you carry a certain, for better or worse, you carry a lot of weight with that. And what's happening, it seems to me, with crude oil, and I was talking to some customers last week, talking about, how do we get short crude oil in here? The idea is that I thought I read somewhere about a 400% increase in the commercial traffic through the Strait of Hormuz. Apparently, either Iran has been defanged, or the U.S. Navy is protecting your ships better, or they're finding other ways of getting the oil around the Strait of Hormuz. That was always kind of the problem for Iran. So what we're seeing is a sell-off in crude oil. Is that going to continue long enough for the midterm elections? Who knows? And I don't really care about that so much. What I'm mostly interested in is how do I make a couple of bucks trading crude oil. So right now, I think the front month is still the October's, the V's, right? So with 24 days, and one of the things you can do is if you know the futures month, so CLU, U is September, V is October, and that has 98,000 contracts traded so far. If we go into CLX for the October, 44,000. So still the V's are the front month. CLV6. And let's check out the skew for lack of any other indicator here. Just to check out, you want to look at a chart. Here's a chart of the futures. So they were rallying up pretty nicely, hit a wall up around, at least the futures did, around 88. Is that a resistance point? Who knows? It's, you ask one of the chart people and they'll let you know that. But I look at the volatility skew. So the futures trading at 85.69, right in between 85.5 and 86. And the nice thing about these 24-day futures options is they have half point between strikes. Do two things. It lets you test out the skew a little more accurately. In other words, if you're looking for equidistant out of the money calls and puts, that's a way to do it. The other point is that it lets you define risk in a pretty big product. These crude oil futures are $1,000 a point, something like that. They're pretty big, so it's easy to put on a lot of risk in these things. If you don't want to do that, and I don't necessarily either, let's get into the skew. So down a point, up a point, 84.5 puts, 333, 87 calls, 87 calls, 34, 347. So they're trading over on the call side. If I were bullish on crude oil here, which I'm not really, if I'm going to sell this 1 point spread, get $1,000 a point. So max loss 660, max profit 340. What I might do in crude oil today is do an iron condor, drag it down, like $1.30 options. And this is how I do it. How do I find these trades? I don't necessarily look at the probability numbers all the time. So the probability of being out of the money, 81% of these 95 half calls, 75% on these 79 puts. What I like to do is match up the prices. In 24 days, I might drag this out a little bit, another couple of strikes down like that. So this trade, for example, and I'm going to look at some other things a little bit closer to expiration so I don't have to wait 24 days for some debacle to happen in crude oil. But right now, this metric that I like to see, $333 of max profit versus $1,000 worth of risk. That's 1/3 of the width of the strikes. If I tighten this up to a half a point, here's what I'm getting. Again, pretty good. So $180 is approximately, 1/3 of the width, 1/3 of 1.8. So it's actually a little bit higher. So this is something I'm certainly going to look at. Let me pull it into some closer expirations and see what I get. Pull it down to, let's say, 10 days. No, I got to pull these way in. But that's something that I'm certainly going to look at, a neutral trade in crude oil. So I'm not completely bearish on it. The skew is pointed towards the upside, but I think there's a lot of things working against crude oil. One of the things I will be looking to take off is a short put spread in corn. So corn has a nice little rally going on today. It's come off a little bit. I could have taken that. I was looking at the prices. I could have taken that put spread off for a 50 cent, a little over 50% of max profit. I did not. I was kind of waiting for the show to take a look at it. But here's where it is, coming back a little bit. And if I need to, I'll hang on to another day for it. What else? Let's take a look at bonds. Bonds are rallying right in my face. I'm long a put vertical here. I am long the, let's see, where am I? Right in here. I'm long the 109, 110. And right now it's right, the future's right at 109. I'm still bearish on bonds, but the whole point, what's happening in the bond market is there is a concerted effort. As again, this is why Scott Besson, he's been very active apparently this weekend. Doesn't take any days off. So good for him, I guess. But the point is, what they're talking about is maybe selling front month or near term T-bills, like 3 months, 6 months, 1 year, 2, that sort of thing, the close in stuff, to buy the long term, the 10s and the 30s. And that's what that's the behavior we're seeing with the ZBs. Certainly they're up 23 ticks now. I checked out the probability of a rate hike at the FOMC meeting. So going to the CME FedWatch page where they calculate this stuff for you. And they use the Fed funds futures prices to derive a probability. So it's market based. It's not somebody's opinion. That's what I like about those are the kind of metrics that I use. I don't really care about what people are thinking about stuff or some analyst looking at historical stuff. Just look at what information does the market give you via price. And so this the FedWatch tool takes the Fed funds futures prices, the price of this month, price of that month, distills down a probability. And what it's seeing is coming up into the September FOMC meeting, the probability of a rate hike went from just a little bit higher. Just a little bit higher. So it stopped falling. Last week, and I'm talking about one day from Friday to today. Last week, the probability of a rate hike, a 25 basis point hike in the Fed funds rate, which is the overnight borrowing rate for banks, is 36% last week. It's 40% today. Going out to the October meeting, the probability of a 25 basis point hike went from 41.6 to 44.9. Probability of a 50 basis point rate hike went from 7%, and this is over a week, went from 7% to 9.8%. Let's go out to D's That's as far as I maybe want to go with this stuff. Again, the probability of a rate hike is still hasn't changed that much. So it's mostly on these near-term FOMC meetings where you're seeing the probabilities increase, and that could be going along with this whole idea of selling the front month, selling the near term T-bill stuff or the Treasury stuff to buy the longer term Treasury stuff. And unfortunately for my bond position, it's rallying up. So ZN, I also like to do that. ZN is up 7, and this is interesting. So typically, you'll see maybe 2 to 1 to 2.5 times what ZN moves, multiply it by 2 or 2.5 and get what bonds move. Recently, we have not seen that at all. It's kind of been 1 to 1 even, just kind of unusual. Here we're seeing it almost 3 to 1. So bonds are finally picking up some actual price volatility. So I haven't given up the ship on my long put spread. Maybe we'll see a little bit of a sell-off. Let's check the VIX futures. I'm short going into the fall. I just have a bias towards long volatility. So I'm short some put spreads. Let's see what the futures are trading at right now. So it looks like the 17.5 strike is going to give me I can use that for the synthetic futures. So if I sell the 17F calls, buy the 17F puts, go out to October and do again buying the 17, so the exact opposite. So this basis, the September-October basis between the futures, is trading at $1.60. That's about average. That's pretty close to average. So no great surprise here. I would look again on a spike in volatility if I were against my short put spreads in the VIX. I might go in and sell some call spreads. I'm not doing naked short options in anything in here, but maybe sell some call spreads in the VXX, or that I've had some luck with is buying put spreads in here, because this has that natural drag because the contango of the VIX futures. Finally, let's go into the SPX. SPX down $23. We've got the big numbers, as the guys have been talking about. NVIDIA is coming up on Wednesday. Jackson Hole. Suddenly, that's become some sort of important thing, and some other stuff going on. I personally think I'm still selling premium into this stuff. Had a little bit of a scare on Friday. That's to be expected. And that's why I do defined risk trades in this stuff. Let's go to the 0 DTE SPXs and see if anybody wants to play. So I sell the option that is about $2 worth of premium, 205, 215. That's close enough for government work. And I buy a put $25 out, and then I'll go in 255 is a little rich. I'll do these. And then $25 out is the 7705. So let's see. Like to match them up. Let's do this. Let's give myself a little bit more room. 235. Let's ship it. And again, this is because volatility is so bloody low. Let's ship it at 240, see if I get filled. So that's what I'm doing. I will be on with Confirm and Send at 10 o'clock, and then join me live at 1 p.m. for half an hour of live trading. And if you have any questions or any symbols you want me to take a look at, please send them to me at tp@tastylive.com. I'd be happy to check them out. So thanks, and I will send this back to Mike and Gus. Good luck trading, folks.
What's up, everyone? Welcome back to the show. We got E-minis down 20, NASDAQ down almost 400. The Dow is moving the opposite direction, up 0.3% here, and the Russell is down 0.5%. Bitcoin and ETH leading the way, but we've got a very special guest coming in right now, Mr. Russell Clark. Russell, how you doing this morning?
I'm good, thank you. Thanks for having me on.
Absolutely. Thanks for coming on. I checked out your website. I saw your t-shirt, Coffee, Then Life. Couldn't agree more.
Yeah, well, do you know what? My local coffee shop actually gave me that shirt because I was drinking so much coffee. So, I need to cut down, but I struggle to, I'll be honest with you.
I mean, it's just so damn good. How are we supposed to stop?
Well, when I do stop, I get like massive caffeine withdrawal headaches. And the only way to cure that's to start drinking beer. So the days when I do stop drinking coffee, I end up becoming a sort of day drink alcoholic. But, I can live with that.
Yeah. I mean, it's a give and take. It's just the natural balance of life, as they say. But Russell, we've been talking just before the show started. You got your eye on some things, particularly gold. What about gold is drawing your attention in this market? I mean, gold's been on a huge rip over the last couple of weeks here, along with silver as well. But what in particular about gold catches your eye?
Yeah, so, gold, I've been sort of bullish on gold for a few years now. I think the real catalyst for getting excited on gold for me was sort of back in 22 when Russia invaded Ukraine, and the US government came out and froze the foreign securities or the foreign reserves of Russia, so they couldn't access the treasury holdings that they built up. And when I saw that, I was thinking, well, this sort of implies that any other country that's got foreign reserves and that might theoretically disagree with the US at some point in the future probably doesn't want to hold treasuries anymore, and they need to put all that money into something else. And the one I was really thinking about was China. They had at that point like 1.2 trillion of US treasuries. And so I thought, we're going to see, and they don't like Bitcoin. The Chinese government has explicitly come out and said they don't like crypto. So if they're not going to buy crypto, the only sort of asset that was available for them was to buy gold, in my view. And so gold has really been the leading asset there. I know these days people get very excited about silver, platinum, tin, even some of these other metals. The problem with those metals, at least from my perspective, is you don't have the guarantee of the People's Bank of China buying them. And so, I've been, quite bullish on gold for a while. I think what we saw earlier this year was a bit of a blowout trade in so far as, the gold market went very, very wild to the upside. I think there's a lot of options that went into that, and the market got very skewed. And it sort of had to have a pretty big drawdown. But I think what we're seeing recently is the Treasury, and particularly Scott Bessent, has been trying to sort of get long bond yields down. And I think this has reignited this trade. And so now I think you've got a pretty good sort of setup insofar as long as there's bond market weakness, right, or yields going higher, you're going to see it's going to sort of imply that there's going to be a bid for gold, because you sort of will be looking at it and going, well, if they don't get lower yields, then they're going to come out and intervene in the market, and that's going to put a bid to gold. And so that's sort of what I'm looking at. And I think we were saying I want to talk about JGBs, but if you've got any questions about gold, talk about that, and I'll talk about how JGBs and gold fit together.
Yeah, I think that is a really interesting point, and I have this notated. We were live on air when the markets started moving, 7:32 Central on the 19th, which I think was a Tuesday, but I was like looking at the camera, looked at the platform, everything had shifted, and every single thing we looked at was right on this vertical timeline, 7:32 Central, and that for gold, it's been basically up and away ever since. But you have the Bessent factor, and you had that initial shock in the market. But I do like your call of like you have this other subtle backing with the Chinese government buying into it, and that is helping to push the gold market higher. And to your point earlier with the liquidation that we saw, so in gold and silver at the same time, we saw this thing go from 4,500 and just ripped straight up to 5,800. And it's pretty clear now that that was kind of a leveraged move. And then you saw that big liquidation event right afterwards. And we've seen this time and time again. You saw it with semiconductors just a few weeks ago. When you have these outsized moves that are well outside of implied volatility, you should not be surprised to see the crash on the other side of it, even if it retraces closer to the highs. But like these moves that are super violent to the upside, it usually results in some kind of relief selling at that same time. So how do you trade gold?
Correct.
How do you trade gold when you're looking at these? Are you trading the gold futures markets, GLD? What's your instrument of choice?
Yeah, so I have I'm going to say a slightly esoteric way of doing it. So, if you understood the argument I made for gold previously, which is that, big foreign governments and foreign investors are going to shift out of treasuries and into gold. The way I look at it is you can be either bearish, you should be bearish treasuries and long gold. So I tend to do a sort of short trade or bearish trade on TLT, which is a long dated treasury ETF, and I pair it with a long gold position. And so the idea is that if you do get either the Fed or the Treasury coming in and trying to support the long end, as they've been trying to do recently, then gold should act as a hedge to that trade or to the short trade. And if you look at GLD, TLT, and you'll need to manage, there's no single security for that, so you need to look at that, build that chart yourself. That has been a much better risk reward trade since sort of 22 than either being short TLT or long GLD. They're both being, it's been a very good trade, with the exception of earlier this year. But even then, GLD TLT, as I like to call it, fell less than gold and was less volatile. And they sort of two very good offsetting trades, but they're really sort of capturing this idea that the rest of the world is going to be getting out of treasuries and into a hard asset of some sort. And I really like that. The only other thing I would say for your listeners is that what I like to say about gold, it's an Asian asset that's traded globally. So if you go to like China and India, your average Chinese or Indian is going to have like 10% of their net worth in gold, right? Whereas in the States or in Europe, it's going to be much less than that, 1% to 2%. I'm more Asian type of allocation for me personally. But if you look at the sort of culture and the governments there, they're very much more focused on gold. And in Q1 of this year, it did look like sort of options and retail investment was driving it. But actually, if you look at the hard data, it was Chinese domestic investors buying physical gold in huge numbers. So the Chinese retail investor buying physical gold was larger than all the central bank buying in Q1 of this year. So that was where the blowout came. And intriguingly, they never really stopped buying. They bought all the way through the dip, which is why I sort of say, and I sort of try and encourage people to look at what's happening in Asia and not to get too caught up in what's happening in the West.
Yeah, I think that's a really interesting point. And the first thought that comes to mind is just the massive inflation that those currencies have seen. And I feel like we're not quite there yet, but it seems like the writing is on the wall that the inflation will continue, and they're having a hard time keeping that suppressed. So I think that adds to the bullish nature and bullish case for gold. We have a super bear of sorts on the network, Tim Knight, and he is super bullish on gold. So that's intriguing, but likely for the same reasons.
Yeah, I think for me, like I've been managing money for a long time. I used to be sort of exclusively sort of macro focused, look at supply and demand, these sort of things. And what I found has worked better over the last few years is to take a much more sort of political angle. So look at the politics and then work out how assets going to move from there. And obviously, under the Trump administration, there's been a sort of run a large fiscal deficit. It's been really the attitude, big tax cuts, unfunded tax cuts. What's been interesting is that Democrats, when we look at the Democrats now, they sort of are now also talking about tax cuts for their base. And so, as a foreigner sort of seeing outside the States, you sort of look there and go, well, who's gonna ever pay off these treasuries? And also with Trump, he's also talked about potentially taxing foreign ownership of U.S. assets as a way of balancing the budget. So you sort of end up with this sort of, treasuries looking very unattractive, and you sort of want looking around for something alternatively. The only thing I would say is it doesn't necessarily, being bullish gold doesn't necessarily make you bearish equities. The two things can be driven by exactly the same thing, which is big government spending. And certainly I think government supported markets has been a driver of that.
Yeah, couldn't agree more. And yeah, we're seeing a bid in gold ever since that mark here on this vertical bar on the chart. We'll see where it can take off to, and hopefully we're positioned for some bullish moves there. But I know you wanted to talk about one more thing at the very least, but these Japanese products you have your eye on. What's the deal with that?
Yeah, so the world's largest bond market for many, many years was the Japanese government bond market, the JGB market. And what's intriguing about the JGB market, and I like it, I used to live in Japan, I speak Japanese, is that the JGB market sort of led global bond yields lower. If you take a long-term chart, JGB yields were much lower than the US yields for many, many years. And they were sort of like a great lead indicator on where US yields are going to go. And so these days, the first thing I look at when I wake up in the morning is what JGB markets are doing. Now, if the JGB market started to rally, I would think maybe we're going back to some sort of deflationary environment or a bust environment, or something was changing. But actually what happens, even when Scott Bessent comes out, announces support for treasuries, or we see intervention in the currency market to try and move the yen higher, the JGB market refuses to rally. So yields keep going higher in Japan. And so what I take from that is that it's going to be very hard for the treasury market to rally. And so if the treasury market doesn't rally, then we can assume there's going to be more interventions, and that's probably going to be good for gold as they try and do everything but cut spending. I think that's sort of why are those two, what would seem very different and divergent markets, are how they're related and what I find interesting about them.
Yeah, I think, and you've seen a handful of intervention type moves in the Japanese yen, especially the 6J futures here. It's been pretty wild. Like you see this huge gaps higher and then trickling down, and you saw this huge gap higher and we're trickling down here. Yeah. But to your point of the treasury markets kind of ignoring what you saw on the 19th, you saw this huge rally to the upside, and then the next couple of days just completely reversed. So yeah, I think that speaks to continued intervention for sure. Where did you live in Japan?
So I actually went to high school in Kobe in 1991, and then I went to university in Osaka in 93, 94. And then I was bartender for 6 months a bit later to make some money to travel around Europe.
That's amazing.
So I've been all around Japan.
That's awesome.
Southern Japan mainly. That wasn't my dog, by the way.
No, it's been really, I think the Western population has really started to travel there more. I think, when you look at the weakness of the Japanese yen, it just creates opportunity to travel there relative to the US dollar for pretty cheap. But we have some coworkers of ours that are going there, and they're like, where should I go? What should I do? I'm like, you just got to know how to say like things like "Tore wa doko desu ka?" Where's the bathroom? "Kohi wa doko desu ka?" I'm like, just replace that front part with "where is this thing?" and you'll be good. Outside of like the hello, goodbye, being cordial. But I love Japan. I think it's a great example of a country that really thrives on community versus capitalism. I know there's capitalism too, but like you can sense that it is a community first type place. So love it.
Yeah, that and also how they prefer to make all their food fresh.
Oh yeah,
which you really notice when you're there.
100%. And that was one of the things I said too. They're like, where should I go? What's the best food? I'm like, that's the best thing about Japan. You can walk into anywhere and they care so much about the food that they're giving you that it's going to be amazing. So can't wait to go back. Well, Russell, appreciate your time. And yeah, I think bullish gold makes a lot of sense, especially given the recent moves we've seen. And the best in factor and all that jazz. But where can people find you if they want to reach out to you and follow your stuff?
Yeah, I run a Substack. It's www.russell with two S two L's -Clark no E.com. And that's the best place to find me.
Sweet. Awesome. Well, appreciate your time again, and we'll see you soon, hopefully.
Thanks very much. Thanks for having me.
Absolutely. E-minis down 28, NASDAQ down 400. The Dow and the Russell are still chopping around, but Bitcoin creating new session highs up 2280 and ETH up 4% as well. We'll see if we can blast off to the 80K mark, but we're going to take a quick 90-second break here. We'll see you on the other side of it. You're watching Tasty Live. What's up, everyone? We are back, and we've got Tim Knight in the house. Tim, how you doing this morning?
I'm doing okay, thank you.
Love to hear it. Love to hear it. We've seen some weakness in the markets, and I know that likely puts a smile on your face. It's odd to see that we almost had 7 straight days. On Friday, we had a little bit of a green bar there, but almost 7 straight days of NASDAQ selling. Kind of wild.
Yeah, I mean, I've been actually kind of displeased because it's, nominally red, I suppose, but it's until today it wasn't acting that way. I think part of my displeasure is anchored in the fact that I'm so heavily into like the whole semiconductor microelectronic space that that's really where I really want to see weakness, and today's more my speed, definitely. And in as I call it, my thesis of bullish precious, bearish equities has been kind of a North Star for me, and I'm feeling more strongly about that than ever. It's heartening to see the likes of gold and silver being so strong. Just 71 days until the election. I think we're going to be in a very weird environment until then, but it's going to get fascinating afterward in the trading world.
Yeah, I just had an interview with Russell Clark, and he was saying that he is also super bullish gold long term. And he said an interesting stat: 10% of the net worth of Asian cultures is in gold or around that level, where the Western side over here it's much less. What do you think about that? Is that kind of your part of your bullish thesis of just like inventorying gold in case the U.S. dollar collapses, or is it?
No, it's really just based on ratio charts. Many months ago, maybe even years, I'm not sure, but I just really took a hard look at any given metal versus any given equity index, and they all were like screamingly bullish if it was metal divided by equity, and screamingly bearish if it was the opposite. And so that's not a 30-minute trade. That's sort of like if I have to do something and can't touch it 5 or 10 years kind of trade. It's for gold spent decades doing nothing. I mean, after 2000, it was just a horrible place to be. And just in recent 2 or 3 years, it's really woken up. And, there was a bit of a mania early this year in January, got really silver and gold, and then just sort of flamed out at the end of January. But my prediction as it started to erode was we're going to get back down to 4,000 before we start this new phase. The good news is I nailed it. It hit 4,000. The bad news is I didn't do a damn thing about it. So now I just like ruefully watch. It's like, I wish I owned more gold, and I keep waiting for a better price. It's like, no, Tim, the better price is 4,000, like you said. So shame on me. But yeah, I can easily see over 6,000 before the calendar year's over.
Yeah, I mean, we were just shy of that into this huge rip higher, but I think this was kind of like a liquidation, get the leverage out, feels like, and now we're climbing higher more sustainably. So yeah, could be interesting.
And what's confounding to me, and we'll show a couple of charts on this, is that I sort of decried Bitcoin as like the digital gold, but it sure is acting like it. And as I said recently, and did some video on this, my view that Bitcoin was headed for a really big bear market of its own went from like an 80% certainty down to like more like 30%, because it seemed to have found a happy bottom at around 60,000 and just hung out there for weeks and weeks and weeks. And only in the past, 6-7 trade, trades 365. So basically over the past week, it's just been a phenomenon, like a plus $15,000 to $20,000 from that base, and it's still churning. So yeah, let's just touch on a couple of charts to kind of augment what we were just talking about. So in the case of gold futures, GC, it has just shoved aside any kind of resistance. It pushed its way out of this right triangle pattern. It pushed its way out of this descending trend line. And that's the struggle for some, including me. It's like, well, do you chase this thing, or do you kind of cross your fingers and hope it eases back? Put it this way: if for whatever crazy reason this thing sank to 43, even 4,200, you won't be able to hold me back, because that's going to seem like a bargain. But as it is now, if you told me, no, it's just going to go up, $50 to $100 day after day, it's like I could see that happening. This thing has power, particularly with this crazy week we've got ahead of us. NVIDIA, not so much, but definitely Jackson Hole. And to the Bitcoin, just to juxtapose, here's Bitcoin itself, which plain as day spent the time from entering this range early in June, grinding around. Everybody's kind of falling asleep at their keyboards. And in retrospect, we can see that the end of that was August 17, and it's been a green bar every single day since then. I would say that although my belief that this is going to constitute this enormous bearish pattern has really just been ground into hamburger, and I really doubt it's going to happen now. I do think that a sink back down to even the high 60s or 70-ish is completely plausible, because this was very far, very fast. We're approaching resistance by way of this trend line and this former top. So short term, underlining that, I think that you could have a bearish trade at hand for Bitcoin. But longer term, yeah, I think maybe this whole thing, digital gold, maybe they're right. Yeah,
I mean, it is a wild rally here. A lot of that was short covering based on the flows, but I think this is like the fact that it's continuing here. And as the E-minis and NASDAQ continue to sell off here, Bitcoin keeps reaching new session highs or close to it, I think is pretty telling.
Yeah. In terms of equities, got kind of some interesting stuff cooking here. The ES-NQ pair. So we have ES, which, as you mentioned, save for just a little bit of relief. These little green bars on Wednesday and Friday. It's been essentially slowly and slipping its way lower. We are cleanly below this blue line, which merely represents what had been the former high. But I think psychologically it's a little bit important because to my eyes, this is a failed bullish breakout. It did not follow through. But the more important thing for my own disposition is tech, is NQ. And as I've said pretty much daily, we failed to even have the strength to tag this descending trend line and save for this blip. We have spent this time just sort of grinding our way lower. And of course, I think as we get to Wednesday afternoon, people will sit more and more firmly on their hands because that is the big tech event this week. What's going to happen with NVIDIA, which, by the way, is slicing below that midline you and I talked about on Friday.
Yeah, this has been surprisingly weak, all things considered, especially when like the VIX is not super high right now. We're sitting at a 17.5 in the U contract in the VIX futures, and the VIX itself is at 1590. So the fact that NVIDIA has had 7 straight red days, and this is the biggest one yet, I think is really interesting ahead of earnings this week. It could be a scenario where they just destroy earnings per share, destroy revenue numbers, but their CapEx is so high that the market gets a little spooked. What do you think?
Well, I think it's kind of like no one's speaking the unspeakable truth. I mean, everybody sort of knows about the circular financing. They sort of know that if there's any major player that quietly announces, well, we're going to dial back, we're going to hold back, we're going to pull back, then the house of cards gets wobbly in a big hurry. It almost kind of doesn't matter what the revenues and profits are because they, with all the circular financing on, they're kind of guaranteed that they're growing, and they sort of have to keep growing at this pace to justify these valuations. What's more important, I would think, is just the conference call. How are they spinning the financing? How are they spinning their relationships with these hyperscalers? I'll be sitting on my hands as well to some degree because I think until the conference call is over and you've seen how the market has digested it, it'll be unclear. It could, it's going to be kind of binary, I think. Either A, people will be reassured and the hindering we've seen recently will get dispatched at once, or there's going to be a oh my God kind of moment and the diminishment we've seen will really accelerate. I love charts and talking about what I think is going to happen next. The word I keep going back to in this is just inscrutable. I mean, we're just in this trading range. Yeah, it's a big drop today, but we're still banging around the same range we've been in since Easter. So you got me, but it demands close observation Wednesday evening, definitely.
Yeah, and I think the eerie part of this is that you have a really low implied volatility for earnings. Not really low, but like 5% for NVIDIA is pretty low. I think a lot of that has to do with the fact that they've split the stock price. It's a huge market cap valuation, so like it's just not going to move all that much. It's not going to have a 20% IV for earnings because that would be just an insane market cap move. But when you look at the equidistant out of the money options with NVIDIA trading at 210, if you look at the 200 put for this week trading at $2.50 basically, and then you look at the 220 call out of the money, 10 points out of the money, it's trading for 250 as well. There's really not that much skew. There's like no skew here at all, where a lot of these tech stocks have had call skew where the velocity of risk has been perceived to the upside. This one is just kind of like a pick 'em here with let's just see what happens. Like it's really weird.
Yeah, two giant shrugging shoulders on either side of that midline. And the last thing I'll say is that one sector I've been kind of fond of on the short side, which is acting pretty uniform. There's got to be some better way to put it. I always just call it kind of the SpaceX rocket/satellite sector, basically anything with a rocket engine on it. But SpaceX itself has conformed to this range I've talked about, kind of the 104-150 range. We've been trapped within, but the Pee-wee versions of SpaceX, I'm short all of them, and they're doing pretty good. We got EchoStar down today. We've got Viasat down today. You can see just a whole series of 7-8 red bars in a row. Rocket Lab down today as well. So that's a sector that's kind of fallen out of favor. Because SpaceX is finally public, so those little guys have been falling for months, and B, because the fervor of the SpaceX bounce has stopped a few days ago, and so things are sinking alongside it.
Yeah, a weak start to the week, to be sure.
Yep, absolutely.
Yeah, but Tim, appreciate your time. Thanks for the insights as always, and we'll see you a little bit later today.
And good luck, everybody. Bye-bye.
Appreciate it. E-minis down 20, NASDAQ down 330. We got Julia coming up on the other side of this break. You're watching Tasty Live. What's up, everyone? We are back with some tasty research, which means one thing and one thing only. We've got Julia Spina on the line. Julia, how are you doing this fine morning? How was your weekend?
Amazing. Fine and dandy. Actually, it was really nice. No tornadoes, I don't think. But it felt like fall almost, which was kind of a nice reprieve. So yeah, I don't know. I come on here and talk about the weather every time. It's just been so dynamic. But yeah. How about you? Anything cool?
Yeah, just hung out with some friends, family, played some golf. But yeah, it was amazing. It felt like 70 and sunny every day. No tornadoes, no wildfire smoke. It's amazing. Incredible stuff.
It was just a regular old day. You're a golfer.
Yeah, I try to be.
You try to be?
Yeah.
I think I could see you golfing. I did golf camp for 2 years.
Really?
Yeah.
Huh.
I was bad at it, but that's okay.
I mean,
I was a lefty too, so.
Well, the good thing about lefty is that you can just get brand new clubs for like dirt cheap because the market is
They're
already.
so easy to get.
Yeah, it's amazing.
They're so easy to get. And then batting too for like softball was great because nobody can pitch to a lefty, but it's harder to pitch to a lefty. So got to walk on base a lot. It was great.
Good stuff. I love it. But yeah, we'll have to get a tasty outing one of these days.
Oh, we should go to like a top. Have you ever been to like a Top Golf?
Yeah.
We for whatever reason we went on like Easter with my in-laws family, and his mom and aunt, who are not golfers, were just destroying every game because they would just boof the ball and it would go across all the targets, so they'd get more points than anybody who got all the way to the net. It was fun though. It's cool, and you get your own little like station, and they have like menus and foods and stuff.
Yeah,
it's cool.
No, it's fun, super fun. But yeah, we'll definitely get something on the docket for sure.
Get it on the books.
Yeah, there you go.
Yeah, there's your Top Golf. It's cool. Yeah, you get these little stations, and so you can get like drinks and food, and then they have like games. They have like an Angry Birds game that you can play, and you have to hit the targets.
Yep.
Not sponsored.
Not sponsored. Do not use our promo code, which is
do not use our promo code.
But yeah,
not sponsored.
I love it. What do you got on the agenda for today for some research?
Here we're talking about zero DTEs. We're talking about winners or stop losses. And here we're going to be comparing them. This is a cool piece by Kai. The cool thing about trading is that you don't have to choose one or the other. You can choose to do both. But here we're going to be comparing these two and talk about the pros and cons of each and like where like the strengths of one strategy of choosing like a profit target to as your exit condition versus a stop loss. And so, yep, this is by Kai. If you want to follow him over on X, you can find him there. But that's what I got.
Great.
Cool. Okay, so let's get into it. So managing winners and stop losses have different pros and cons, I should say. So when you're managing winners, that generally increases your win rate, especially if you're using a lower profit target. So here we're doing 20 Delta Iron Condors, $20 wide. So these are like pretty, I would say like maybe a bit bigger for a 0-day position than what a lot of people would choose because we're going so wide on this position. But that's part of why we're accounting for these different exit mechanics where like a smaller position, you might want to adjust your profit targets, your stop losses, or whether or not you manage it all, for example. But here we're doing 20 Delta Iron Condors, $20 wide. So we're going to be choosing a small profit target in these examples of 25%. And when we look at that historically, that boosts your win rate just because you're collecting small profits more often. P&L volatility, that 25% profit target just gets hit commonly throughout the trade, which is why it boosts that win rate. However, it does not help with that C-VAR, with that tail risk, because in the event that the profit target does not get hit, then those tails are still exposed. And this is where stop losses come in, where stop losses, like I said, because of the P&L volatility, that 1x loss threshold can also get hit commonly throughout the trade, which reduces that win rate, but it controls for that stop loss a bit more and it controls for that tail risk a bit more and reduces that C-VAR. So we want to talk about which approach works sort of like better overall, or rather the pros and cons of each, noting that you can combine these two or use other management strategies as well. Make sense?
Makes sense.
Cool. Okay, so let's get into it. So holding to expiration earns the most per trade. So this is something that we see in longer dated positions as well as shorter dated positions. Just the more time that the position has for that theta K to kind of decrease the premium of the position, the more profit there generally is, but that typically also comes with higher tail risk. When we're looking at managing at 25%, 50%, or the stop losses, we can see that managing at that 25%, interestingly enough, has the same Sharpe ratio as the sort of like holding to expiration. But because that pop increases, while the profits are smaller, pop increases, you're profiting more often at the same sort of risk-adjusted reward as what we're measuring here with not buy and holding, but just holding the position to expiration. We can see that Sharpe starting to go down a little bit, even though your profits at your 2x go up a little bit just because you're holding the position a little bit longer. But I thought the Sharpe ratio analogy was pretty interesting because the small profit targets, even though they are smaller, just from a risk-adjusted reward perspective, actually holding to expiration, they earn about the same from a Sharpe ratio perspective.
I like it. Yeah, I think this makes sense where especially with 0-day stuff, you can get 25% in 15 minutes, like right when the market opens. Because the market prices in a ton of implied volatility on the open. And if it doesn't happen, you can get that crush that is equivalent to 25%. So I would imagine the time in the trade for those 25% winners, for the winners, is pretty low relative to like the rest of the day. Where if you're getting trying to get 50% profit, I think it's interesting where you likely have to hold a lot longer.
Yeah. Noting again that we're dealing with $20 wide positions. So that's like wider than so for example, when everybody does things differently, but a lot of people go $5 to $10 wide. So just keeping those position sizes for these small positions much smaller because they're 0-day positions, right? They're volatile. They're ones that some people place every day. So generally keeping those position sizes very small, something that people do. So $20 is a bit bigger than, I would say like most of the people that I at least talk to typically do. And so that's also going to impact what that profit target should be, right? So 25% on a position size that's like twice the size, twice the buying power of a $5 or $10 position. You might want to collect more on those $5 or $10 positions, for example, just because there's less capital at risk because of the construct of the trade. So it's important to remember like the context really and like the trade setup that we're using when we're talking about these studies and thresholds. So just a little disclaimer there.
I like it.
Cool. Okay, so let's go to the next one. So now, so managing winners had the calmest daily results in the trade. So when we're looking at daily swings, return volatility, and CVAR sort of all together, the worst days remain close to holding to expiration. And that's just because, like I said, if the profit target doesn't get hit, that tail is still exposed. We're not talking about managing early by a time in the day here. So here, if that profit target doesn't get hit, there's no other exit condition that would close that trade out. So that's what's another thing that's important to know, is that profit target, while it does boost those pops and while it does reduce typical swings, typical P&L swings, and typical P&L volatility, that tail is still there unless there's some other exit condition that's sort of stacked on top of it, whether that's a stop loss or whether that's exiting at a specific time in the day, such as by noon. So kind of an important thing to note there, but we do see that when we have those small profit targets with this type of position, that does reduce the daily swings and then return volatility as well.
Yeah, I think this is a great one here. When you look at the daily swing and the return volatility, that 25% is, in my mind, you're hitting that sooner than, of course, the 50%. But I think it's like a lot sooner if you get that iron condor where you don't get a market move. Like this morning was a great example. The E-minis and NASDAQ were down like 20-25. We had a little bit of volatility, but we just kind of sat there, like nothing really changed. And if you look at the 0-day on a minute chart, those options, you likely see those options get crushed pretty quickly.
Yeah. So things just move fast with those 0-day positions.
Yeah.
And then when we go to the next slide, so this is an interesting one. I actually liked this kind of perspective. And he talks a little bit about the psychology of kind of going through this, which is that even though like your average statistics might look favorable for a specific strategy, definitely possible to have like concurrent losses every day, in a row, for example, for some period of time. And so what was interesting is that 25% profit target, the 50% profit target, reduced the longest losing run in the backtest period, as in how many sequential days sort of took losses, and then also the aggregate number, like a dollar amount lost during those periods, those bad streaks, where the 1x stop losses actually increased a little bit to 6 days. And I think the interesting piece here is that this is just a funny thing about probabilities and statistics, is that you can absolutely have just 5 losing days in a row, 6 losing days in a row. And that can discourage you from sort of staying consistent and following mechanics. And then with that 25% profit target, not only are you profiting more often, but the sort of down streaks or losing streaks that we've measured for this specific strategy also went down. They got cut by more than half.
Yeah. And I think this is... it speaks to the fact that if you are holding to expiration or holding for a longer period of time where you have the stops in that are stops are at a kind of aggressive levels at 2x for sure, but 1x is more conservative. That 25% winner, it's hard to have multiple losing streaks in a row where you put this on and then immediately it goes against you
right,
to the tune of getting stopped out basically. So yeah, I think it makes a lot of sense.
Yeah. And then that stop loss this is why in some cases, it's actually easier to just get out at a certain time of day or a certain DTE with a longer dated strategy instead of using a stop loss, just because those stop losses are relative to the initial credit. And depending on market volatility, some a stop loss that I would say is too small can get hit very often just because of the P&L swings of options, even though that position might have recovered at some point if it had had a little bit more time to be able to do that. So picking a stop loss it can be quite tricky depending on the market conditions, depending on the trade construct, depending on how much credit is collected, versus getting out at a certain time of the trade, such as halfway to expiration, or at noon, for example, for a 0 DTE strategy. That's another way to sort of cap the tails of the trade just by getting out a little bit sooner versus using a stop loss. So that's an important thing to realize here, is that with this 1x stop loss, that actually increased the number of consecutive losers in this study. And that can just simply happen just because P&L swings are common, they can be quite big with options trades, and 1x stop losses might get hit frequently, for example, but then many of those might ultimately recover. That holding to recovery or holding in the hopes of recovery might come with risk, but, or it does come with risk, right? But that's just an important nuance here when it comes to choosing those exit conditions.
Love it. Makes sense.
Cool. Makes sense. All right, let's go to the next one. And then this was another piece of context that I thought was interesting, which is when you're looking at basically the P&L per hour. And Mikey, this is just like you said, when you're choosing that low profit target with a 0 DTE trade, that can get hit pretty quickly. On average, it was about 2.3 hours for 25%, and then 4 hours for 50%. And then the stop losses got hit closer to when you would just like hold to expiration, basically. But when you take that amount of time that the trade is actually active and open for, and then look at P&L per hour, the 25% profit target actually yields the most P&L per hour, like the highest P&L per hour in this specific backdash, just because you're collecting a good amount of the premium, but it's just open for a very short period of time compared to some of the other exit strategies.
Yeah, I think this one is aligned with a series that we did back in the day. It was called Optimal Management, but it was basically just looking at the average time in a trade for a strangle or short put or whatever the strategy was. And it just gives you this idea of like, okay, I should expect to get 50% profit over 21 days if I enter a strangle at 45 days. So if you get 25% in 2 days, like you're well ahead of the profit curve. And that is what results in this higher P&L per hour. So yeah, and I think when managing these winners when they come, that doesn't happen all the time. But if you have an open that just doesn't move and you get the vol crush, I think it makes a lot of sense to execute that winner and manage that winner, especially when you look at it from this lens. Your P&L per hour is basically double the other ones.
Mm-hmm. Right. So super interesting. And then last slide, this is another one, which is basically when we're looking at so now this tail risk perspective, right? Noting that profit targets don't necessarily help that much with that tail risk, just because if that target, even if it's small, but if it doesn't get hit, then that tail exposure is still kind of there. And this is where the stop losses tend to shine a bit more with that 1x stop loss, even though it's a little bit tight, even though that reduced the win rate, that does from just a CVAR perspective, from like a tail risk perspective, offer the most kind of protection, sort of as you would expect. And when you're looking at P&L per CVAR per like unit of tail risk, kind of, you can see that that is the lowest sort of P&L per unit of tail risk, which I thought was interesting. That's a different way to look at it. We don't normally do that. So I thought that was kind of a cool sort of perspective there. I'm sorry, it's not the lowest, it's the highest.
Yeah.
Other than holding to expiration.
Yeah. But yeah, I think this is a great example of just looking at different scenarios through a ton of different lenses and getting, a different look at each point to kind of drive that message home. Yeah.
So overall, super cool piece from Kai. If you want to follow him over on X, we can get to the takeaways now as well. But super in-depth study, sort of comparing profit targets and stop losses, noting that you can use one or the other, some combination of them, or some other exit strategy, depending on what sort of suits your preferences. But here, when we were looking at a $20 wide 0 DTE iron condors, managing winners at 25% offered the best balance. It sort of like within the specific test, had the highest win rate, holding on sharp as well, matches holding to expiration, and it kept daily results sort of like in the tightest range when we were looking at typical P&L volatility. Its weakness was really the tail risk, and this is where other compounded management strategies can really come in handy. The stop loss controls volatility, reduces tail risk, and supports the largest position at the same budget. But the weakness is that it lowers the win rate, just because with option P&Ls being volatile in general, those stop losses can get hit, even though many of those positions might have ultimately recovered. So it works generally in practice alongside some other management rule. So holding to expiration earns the most per trade, but that does come with higher tail risk and the widest swings. So just something to keep in mind when choosing sort of like exit conditions.
I like it. Yeah, I think the 25% managing the winner makes a lot of sense. And yeah, if you're trying to cut your tail risk dramatically, maybe throwing in a stop at 1x, 2x makes sense too, especially with the wider 20-point wides. We talked about this before. If it's like a 5-point wide or even a 10-point wide, I'm personally am probably just letting it go. But 20-point wide, especially if you have if it's a larger chunk of your portfolio, it makes sense to throw in a stop.
Yeah, makes sense to throw in a stop. And then as well, the other thing to consider here is that choosing stop loss thresholds can be tricky. That it's, dynamic. There's a lot of factors that might, go into consideration for choosing that. And an other way to control for the tail is just by getting out of this, like a specified and like exit point, such as halfway through the trade's duration, such as by noon, for example. That is another way that historically has controlled the tail that doesn't require as much weighing, I guess, to consider as many variables to consider necessarily, versus something that's dynamic like a stop loss.
Yeah. And this market this morning has we've had a 30-point range, but we're pretty much right where we opened. So I just want to quickly look, like, what is our 0-day? What was the 20 delta? It was probably like the 76.75, 76.80. But
I was at the 20 deltas this morning, or I opened it at 9, and I was at, or actually, I guess at the time it was more like 18 delta, but that was the 76.20, 76.70 for the short strikes.
Yeah. 76.20, 76, yeah. So this option, if you right click on this option, you can see where it opened at and where it's trading now. And yeah, this option has lost 2/3 of its value basically right on the open. It was trading for $3. Now it's trading for $1, and we're 2 hours in, so it lines up with what we just showed. Look at that.
Right. But this is where the sizing of the position, because like I went $5 wide, for example. So if I closed at 30%, like I really wouldn't be collecting that much. But for a $20 wide position, that much bigger position, I think that lower profit target just personally to me makes a bit more sense.
Yeah.
So for me, like just because it's a much smaller amount of capital at risk and a smaller credit in general, I'd prefer to collect a bit more. Even though I'm at 20% now, I want to get a little more juice out of it just because it's a smaller position. It's less capital at risk. So that's why the context of the back test and the exact study that we're looking at, it's important to just keep those variables in mind. For sure.
And yeah, the 20-point wide, you have a lower probability. It's interesting because you have a lower probability of realizing max loss with a 20-point wide versus a 5-point wide. But if you are reaching max loss, it's likely due to a massive move in the market, and it could be like a seismic shift in the daily move there. Where like a 5-point wide, you have a higher probability of reaching that, but that can happen with just your average chop. So yeah, love it. Well, appreciate your time, Julia, and great segment, of course, from Kai there. So yeah,
awesome.
25%.
Thank you, guys.
Makes a lot of sense, and we'll see you a little bit later. Adios. E-minis down 20. NASDAQ down 300. We're going to take a quick 90-second break. I'm going to scan through the YouTube chat, see if there's any trade ideas there. I only place that UPS trade, but we can talk about some other stuff in this portfolio. But we'll be back in about 90 seconds. You're watching Tasty Live. What's up, everyone? We are back. E-minis down 20, NASDAQ down 300. I saw a poll in the YouTube chat. where will crude oil go next? 80 or 90? A lot of people are saying 90. 2/3 of the people saying 90, which is interesting because that goes against the grain of what we are seeing right now in this market. 73.95. Haven't seen 73 in a week or two in this May 2027 cycle, but seeing a little bit of a drop in the 52-day and 85-day, which is interesting because it creates more backwardation in the near term, but the near term is kind of holding steady around 85, the 52-day dropping to 83, 85-day at 81, and then December, we are sub 80 now, and then trails off into the 70s as we get throughout the middle part of next year. So interesting stuff there. I think if we see a rally in crude oil, it is likely going to be due to a reintroduction of some turbulence overseas, of course. But I'm trying to get out of this USO position. It's doubled its sell-off here. We're down almost $3 now. And this is a result of the crude oil prices sliding, but also the curve kind of getting, again, out of that backwardation, the steep backwardation that we saw. So this is still a nice winner. I'm going to hold on to this. We are seeing some value come out of the short option. I mentioned earlier that this was trading for $500-$600. It has lost $200 today. So this is really where my hedgeability comes into play. If we continue to see USO sell off, I only have another 4.5 points of wiggle room before I start to see less P&L. But hopefully we get a stabilization here in the near term. But still, if you want to chase the fill here, I don't mind it, considering the sell-off we're seeing in the overall crude oil market. And again, this option has lost $200 today, the short option against the long. So it's hedging a lot of that loss with the move to the downside, but this will likely just continue to get weaker in terms of the hedgeability as we lose value in the 135 short. I've got it in at about 50 cents higher than where we are now, trying to take $600 exactly out of this thing. And then only other trade I placed this morning was this UPS trade, long the 100 call in December, short the 110 call in October. And this is one where you've got really low implied volatility in UPS, IV rank of 6. We've got a raw implied volatility near the 20s, 25. And if you look long-term, if we look at the daily chart and then we look at implied volatility, you can add this to your chart. If you go to indicators and just type in implied volatility, this is a 30-day IV index, a rolling print of that, which is great. We've got basically at the bottom of the barrel of this year, right? 25% is where we are right now. So I went with the long call diagonal spread because we're at the low in implied volatility. And that gives me the most upside profit potential if we get a reversal to the upside. And I was able to buy this option for less than $1,000, still reduced basis with a short option in October here. So that's the trade so far. Again, trying to get out of my USO position. Everything else kind of moving along as you would expect. MicroStrategy still catching a bid here. And I'll keep my eye on that. But yeah, MicroStrategy, IBIT ripping higher, resulting in some nice P&L day for me. But this NDX butterfly, got my eye on this one. If we get near 28.8, I'll probably keep this on with NVIDIA earnings coming up on Wednesday. So I'll probably keep this butterfly on as a hedge. I'll do a bullish position in NVIDIA. But if the market sells off, this will continue to hedge. I'll probably just close it at that point. But that's it for me this morning. Thanks for tuning in. If you want to reach out to me on Twitter, you can certainly do that. I'm at Trader Mikey B over there. But I'm going to kick it over to Chris and TP just on the other side of this break. And I'll see you for the trade idea of the day at 11:45 Central. So stay tuned for that. But join us on the YouTube chat if you haven't already. And keep on watching Tasty Live. We'll see you soon.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart post-PDT rule elimination, and Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Well, we're back. You're watching Tasty Live. This is Confirm and Send. You send in your questions. TP and I provide you answers. I'm Chris Vecchio. He's Tom Preston. TP, how you doing today?
Good. All right, folks. Just got a fill on my little iron condor that I put on. What time did I put that in? About 9:02. It's 10:02. Sold the 75.90, 76.15 on the put side, 76.80, 77.05 on the call side. Sold that for $2.40. I just bought it back seconds ago. I just pushed that out to the follow page. Bought it back for $1.20. So took a 50% profit in, I don't know, Chris, that looks about, unless you're doing some weird kind of time dilation thing or anything, that's about an hour. So for an hour's worth of work, I made $120 per spread. You call that effort? Whatever. I mean, it's work. Is it harder? Are there about 99% of other jobs that are harder? Absolutely. Absolutely. That's why I'm lucky to be able to be a trader. I got to say, Chris, is there anything better in life?
Got to change several diapers this morning because I'm a trader. I feel like that's a good thing. You know?
Did the rally in bonds loosen some bowels in the Vecchio household? Is that what happened?
I think it's the black beans, honestly. The boys started this new black bean squash apple puree.
Oh, jeez.
Okay.
Jeez.
Yeah, that's
you know what?
It's like, why do I like working from home all the time with the kids? But
yeah, you know what?
Several people around here have told me, they're like, we would be happy to trade you our teenagers for your baby.
Well, you know what? I've been through that cycle, Chris. And it's the old line is, you know, small kids, small problems, et cetera, et cetera. Either way, by the time the kids are let's say teenagers, a lot of it, yeah, sure, they're going to test you, they're going to challenge you, et cetera, et cetera. But a lot of it has to do with how well you've raised them and whether they're going to be jerks or not. You know, and I'm not saying we did a great job raising our kids, but they weren't necessarily jerks. I preferred that as a dad. I preferred them as a little older. Now that they're in their early 20s, I have a lot more fun with them now than I did when they were babies. The little babies was exhausting.
It's good. It's tiring, but it's worthwhile, I think.
Yeah, I mean, it's, you know what, Chris, it's the sort of thing where you can do stuff with kids that you could not do as a single guy. You know, you can't, like, I don't know, you can't fly kites. You know, look at that old dude flying a kite. Let's call the police on him.
What is that middle-aged man doing with that child?
Yeah, exactly. So, all right. So here's the deal, Chris. Is gold ever going to go back down?
Hopefully not. No, I mean, TP, I talked about this earlier today. It's a video that we did for the CME group. Every Friday, by the way, folks can head over to our YouTube page. Similar to the trade of the day idea, we do a CME 5-minute futures. So it's going to be S&P, NASDAQ, gold, or crude every Friday. This past Friday, we went over to the GC contracts here and out to the 31 days to expiration. So on Friday, it was 34. I had rolled up the 42.30, 42.35, which is only $5 wide, in for $1.40, out for 60 cents. And then I wanted to keep this going, TP, because quite frankly, 31 days to expiration. There's nothing sitting close to 45, and I didn't want to bump over into the GCZ6 yet. So for this particular position, I rolled it up and spread it out a little bit here, going into the 44.50, 44.75. Collected about $8.30 of credit there. So this is having a nice move already today after one day. Now down to 650. Same plan as usual, 50% decay. We're looking for about 415. It gets below 415, same plan. Look for a market that's just now really breaking out bullishly here. Find an opportunity to sell a new put spread on maybe a potential dip. But I have 5,000 in the crosshairs, TP. That's why I bought the 5,050 call spread here. It's why I'm leaving the 72, 73 long call spread in silver for a few weeks now. I think the metals have just looked good, so I'm here for the ride once more.
Yeah, the skew is still pointing to the upside in gold and silver. I'm short a put spread in SLV as my trade. I'm thinking about so one of the, Chris, I want to point something out to folks, and this ties into the CME futures segment that you do on our trade page on our option tables. You can see on the right hand side the futures price. That is the future for the next series of options. So you see, for example, in GC, it's the October future, 46.95, right? If you scroll down, then you see the D's future, 47.32. Okay, and those will tell you what the price of the future is that's driving the values of those options. And what's interesting here when you look at gold is what, Chris? There's about 64 days out from the AUK to the AUK to the D's, if I'm looking at that right, and it's about $36 over. Okay.
Yeah, 35. Yeah.
And if you look at the D's to the Febs, going out even further from the, and you can see this with the 64-day options to the 126-day options, that too is about $35, $40. Okay, or $40, $39, $38 right now. Mm-hmm. So you can see the bases in these futures trade, in these futures prices. What's interesting about gold is that generally, I think, and Chris, I don't know, you might have a different opinion on this. I think this is much closer to just a straight carry trade, like bonds or S&Ps, than it is a supply and demand carry trade like corn or even oil. That gold is a little bit more stable. I just want to point that out to folks because in futures basis stuff, you can actually tease out some information.
Yeah, with gold, it takes so long, and same thing goes for copper. Unless there's like an event where like a mine's closing down or there's some political reason for supply to be curtailed, these are not. I can't think of the last time that I've ever looked at like backwardation or contango in gold, silver, platinum, palladium, copper, and. No. Yeah, but when it comes to the soft ags or it comes to the energy, absolutely.
Yeah, because and that's something that if you don't want to take a lot of risk going out to a further expiration or something like that, yeah, I can understand that new crop versus old crop with the grains, right? Yeah, that gets a little confusing. I understand that. But with gold, yeah, I think you can stretch this out past the October expiration and start trading. It depends on where you're getting decent fills, where the liquidity is. So I think choosing which expiration, just look for the liquidity. Don't worry about the futures basis.
PP, last week, before we get over into the actual questions themselves, I had a pretty aggressive perspective on Besson and what he's doing with the Treasury curve. And granted, short bonds, long gold, long silver, long Bitcoin has all worked out pretty well to try to capture that view. So it's not like I've been trading against the Treasury Secretary angrily and losing money along the way. Right. Last week, we was trading for 43 cents. I went in and got the 45.50 call spread here in IBIT. It's now trading at $1.46. Went in for 10 contracts. So a nice little trade for a few days here, but it's all thematically working out right now.
Yeah.
Where if you're leading long the scarce assets, if you will, gold, silver, the metals, if you're leading long commodities, I think a good way to just capture that, not necessarily because these are trading vehicles, but DBC and DJP, some of this commodity ETF or ETNs, these are sitting pretty darn close. They've really rallied up over the past week, up towards their yearly highs again right now. So perhaps a little breather for folks who are trapped into some of these positions in March, April, May. Otherwise, I feel really good about leaning long deltas in these directions right now. And yes, that means if we do get a pullback in gold or silver, looking to sell a put spread or buy an out of the money call spread. I'm feeling I like the charts as far as I can tell.
Yeah, and just really quickly before we get into the questions about what's going on with the interest rates, as I mentioned earlier, at 8:45, the probability of a rate hike has increased a little bit overnight from Friday to today, but over the past week, it's increased by a few percent, by about 4 to 5%, depending on which FOMC meeting you're looking at. And I'm just going to the CME Fed Watch page. It's actually ticking higher. And what I've read, and Chris, this could be complete propaganda or whatever, is that the Treasury might be selling the early stuff, let's say the 3-month, 6-month, 1-year Treasury products, and buying to finance purchases of the 30s and the 10s. That's kind of what you're seeing. I have a list of the yield ETFs, SGov, SHY, IE, that sort of stuff. They go out from 3 months out to 20 years. The front month, the short-term yields really haven't changed much. But the long-dated stuff, the 7 to 10, the 10 to 20, the 20-plus year treasuries, the yields are all down. So this is jacking up the bonds and pushing down, or at least it's flattening out the yield curve, is what it is. Pulling up the short-term stuff, driving down the back month stuff.
Yeah, and we're getting that, one of the reasons why I've been so antagonistic, or at least just gobsmacked about what the Treasury is doing here, is because if you take a look around TP, are the 210 spread, are the 530s, is the knob spread, or any of these out at, historically stretched levels or stressed levels? No, the yield curve isn't behaving in a manner that's inconsistent with anything it's done historically. It's steep. It's not too steep. It's not aggressively steep. It's not like there's a 300-point spread between the 2s and the 10s. It's been like 40 basis points recently. Are you looking at credit spreads? I always bring up the BBB/OAS swaps here, because this is the spread upon which the lowest grade of investment debt, BBBs, what's the additional spread on top of them relative to treasuries that, the market's fetching right now. TP. BBB/OAS spread right now is 100 basis points. Yeah. This is not a time of stress at all. We had more stress earlier this year.
It's ticking up. So you can make the case, and that people are seeing a little bit more risk in who's issuing these corporate bonds, Chris. It's the big hyperscalers who need cash. Sure. I guess. And yeah, it's starting to tick up a little bit. Maybe, though, it's signaling that, these hyperscalers have better credit than the federal government. Who knows?
Maybe they do. And $40 trillion in debt, GP.
What I'm hearing now is that there's this $1 trillion or 900 and change billion dollar fund that the Treasury has built up over the past couple of years. It's like their checking account, their rainy day fund, and that's something that Bessent might actually use to start buying these treasuries. It's like, oh, great, okay. I don't have those deep pockets, Chris. Maybe you do, but it's that's kind of what I'm still bearish on bonds for the short term, though.
TP, let's head over to these questions. Confirm and send, brought to you by you, the viewer. You send in your questions, research at tastylive.com. TP and I give you the best answers we possibly can, and perhaps find a trade in there along the way. TP, first question here, and I'll take this one. With long-term yields climbing again, what tells you when higher rates actually become a problem for stocks instead of just noise. I mean, look, TP, this is one of the more difficult things, and it's why you kind of have to parse the data. Are yields rising because of debt concerns, or are they rising for good reasons, right? When you get a little bit of growth in an economy, when earnings yields go up, treasury yields tend to follow as well. Earnings growth signals economic growth, broadly speaking. But are yields going up because of the inflation side of it? When you look to the 10s, what's embedded out there? Term premium, inflation, growth, volatility, time. So if oil's going up, then 10s could be going up for a bad reason. Well, why is oil going up, TP? Is it because there's more demand thanks to economic growth, or because of geopolitical risk? I mean, this is why it's such a complicated issue here. And so I don't necessarily focus on yields themselves per se, right? If real yields are up, if credit spreads are widening out, if earnings multiples are compressing faster than spreads are going up, that's when actually interest rates are in the driver's seat. But if earnings growth is continuing to plow ahead, it's outpacing the move in yields. If real interest rates aren't skyrocketing to the upside, then it's just probably background noise. The math behind it, TP, before I give it to you, this is all discounted cash flow model stuff, right?
Yeah.
When interest rates go up, you mess with your numerator and your denominator, and the present value of your future cash flows goes down. So yeah, rising interest rates can weigh on the perceived net present value of your equity.
And just to extend just what Chris said, it really depends on the stock. Higher yields, they can affect stocks or companies that need to borrow a lot of money, issuing bonds, taking on debt, et cetera, et cetera. It's worse for them, right? They're just like when we buy houses and they have to take out mortgages to do that. So, but for a big cash-rich company, it's probably not as big of a deal. So I do think that you can actually talk about small caps versus big caps. And maybe I'm still bullish on big caps, but bearish on small caps. So that's another way to look at it.
TP, with the yield curve moving the way that it has, it brought me to thinking about banks in the short term, right?
Yeah, right.
Banks have had a little bit of a pullback. You see JP Morgan was up near the highs of 366. It had dropped down into 350 or so. It's stabilizing here today. It did show up on one of my screens this morning as a buy the dip type of opportunity, because at a brief point going into the open, we were below our 1 month, but we're sitting above our 50, and both of them have a positive slope, which is to say that we're in an uptrend right now. I was seeing if there was a put spread that I could sell down here, and all morning long, even with the stock bump, it's up $5 here. So when I was looking at the 345, 347.5, it was interesting, but 55 cents wide. No, not really. Not doing it for me here. And I have to get just too close to the actual print and go just below the recent low. In fact, if I want to get something that's remarkably or close to acceptable.
Yeah, it's JP Morgan can be a little tough to trade. The markets are a little wide. With a volatility at 20%, 21% in the 25 days, I have a long call spread loaded up here. It's generating negative theta, which I'm not. Yeah, I can see why it's doing that, because the cost of the spread. JP Morgan's tough to trade. I have a short put spread in KRE that hasn't been doing very well for me recently. I'm short the 76 puts in there, so I'm $1 in the money on those things. I need a rally back in KRE, which is the regional banking, so it's not JP Morgan, it's not Goldman. But that's one of the ways to trade it, and that is not great liquidity either. So there are different ways of doing this. I would also look at what's the other one? Bank America at $62. Markets are a little bit tighter in there. You could even sell a naked put in Bank America if you have the cash. You know what, Chris? I don't know. Bank America, I like. What's the other big one? Well, Goldman Sachs. Goldman Sachs is $1,000. Let me see.
TP, I'm actually going to go. I'm going to take a stab here at Bank of America, because you have piqued my interest here. The highs are just north of 65. Okay. The recent, the 50-day average is sitting just at 54.5. And I can just draw a straight line there right around that number right now, where the market has seemingly found some support in recent days. So banks don't move all that much. They don't move quickly. It's only a 22 IBR, but going a dollar wide, 59.60, 66.67. So it's sitting just outside of that 50 and above for an iron. 31 cents a credit. It's not 33, but it's 31.
No, it's close enough. It's close enough. Fire away. Or drag it out for two strikes and see what you get.
Yeah, let's see what
That's how I trade this stuff.
66, 68, 58, 48 cents on $2 wide.
I would do the one. Do the one wide. The other point is too, if you're bullish on something like big banks, Bank of America, I can buy the 61, 63 call spread 25 days and get about 18 cents of positive theta. Just putting it out there. All right, let's before we get too
into
much into the trading.
Well, VIX is still below 16 with all the uncertainty out there. When does low volatility start looking like complacency? This is a question we get every few weeks, it feels like.
Yeah, I think complacency looks like it does right now. You're looking at the VIX trading sub, it's been sitting around under 18 for, I don't know, 3 weeks now. If this is complacency, when you start to get into the 14 to 16 handle, 14, VIX between 14 and 16, forget if it drops down to 13 or 12. That's screaming complacency. But I think it looks like complacency now. The way that I am trading this, I'm just keeping my position size small. So instead of doing more size in those SPX iron condors, I'm doing one lot in those SPX iron condors. Yeah, my profits are lower. Okay, that's fine. But I'm still making some money on those trades. So to me, it's anything below 17. 17 to 20 is kind of normal-ish. There's still a little residual fear, but below 17, I just think this is all complacency.
What does complacency look like in my eyes? Low VIX itself is not complacency, right? But maybe TP, I'm gonna agree with you. It does feel a little complacent right now. When you see VIX sitting down here and the market still has a bit of call skew. Let me just take a step back. If we were looking at low VIX and we were to go to SPX, I'm just going through the end of the week because we have NVIDIA, we have Jackson Hole. Mm-hmm. And this is a market with substantial put skew still. I would say, yeah, index level vol's calm, but beneath the surface, folks are still paying for crash insurance. And so they're not being so complacent about it. But when I see that there's positive skew for the end of this week, I wanted to take a look over at VVIX, for example, volatility.
Yep.
That's 88.5 right now. Earlier this year, we were up at 140. If we were to do an IVR of VVIX, it'd probably be in like the
2%.
Sub 10th percentile right now. So then you also mentioned these concerns about, the long end of the curve and have credit spreads widened out. No, folks are saying this isn't a problem, right? So, yeah, I think you can look to these things in the market, and the market will tell you if it's complacent enough. But put skew TP, the fact that there's no put skew, there's low vol, and VVIX is on the floor, that does tell me that people are everything's going as good as possible.
Yeah, and they're shaking off the higher rates. And in whatever inflation is or isn't, they're absorbing all that, and they're absorbing all the fears about CapEx in the mega cap stocks that are propping up the S&Ps. It's not worried about any of that stuff. So I see this as complacency right now.
TP, next question here. When implied volatility is high, how do you know if the extra premium is worth the additional risk? TP, this is, I think, a math exercise. If you see something with a raw volatility of 70, but you look back in time and say, it's been having a realized volatility of 90, that's probably not cheap. But if you're looking at something with a 25 IV and you look back over your shoulder and say, past 3 months, realized vol's been 10, maybe that is worth selling, right? So IVR is a starting point. You and I always go into low vol. One of the things that we're going to be talking about here and there the next few days is about NVIDIA. NVIDIA has had these very big moves priced in. They've had these very high expectations priced in. Even when they've cleared those hurdles in recent quarters, the stock still has been disappointed. So part of the rationale that you go through when you're looking at these trades and figuring out if IV is rich or cheap is, well, in the previous episodes when the market's been pricing X, what has been the actual realized Y outcome here? And we've done this a few times this earnings season where we go, hey, these earnings like AppLovin, for example, we had seen like 25% moves a week later on average, something in that neighborhood for the past 8 quarters. So it was pricing like a 13% implied move in either direction. It's like that. That's not what the stock does. That feels light, even though it's a big implied move. That's not how it behaves. So you got to dig a little bit deeper. You can't just use IVR and raw volatility.
And that's why I go back to Chris. I get paid in dollars, not percents. So how do you know if the extra premium is worth the additional risk you're taking? Defined risk strategies are an easy metric. Yeah, if you want to get into the mathematical weeds, you can do it with naked short options. I don't think anybody wants to do that. The easy way to do it is, even if you intend to sell naked premium, set it up as an iron condor or a short vertical first. If you're getting a third of the width of the strikes, at the strikes you're choosing, right? Regardless of what volatility is, high, low, whatever, if you're getting that third of the width of the strikes, generally, according to our research, that's a decent reward for the risk you're taking. If you choose, say, okay, I'm getting rewarded on the verticals. Maybe I want to take some extra risk, and I'll take that long side off. I'll just do the naked short option instead. Okay, that's your call. But it still means you can translate the premium from the vertical into the naked short option. Say, okay, if I'm getting rewarded on the vertical, I'm probably going to get rewarded on the naked short option. So I would base it on price. If you see high implied volatility and you're not getting that third of the width of the strikes, okay, the market doesn't want to play. They're not jamming premium into those spreads.
Last question here. What's the biggest mistake traders make when they use expected move to choose strikes? TP, I mean, this to me is a simple answer. It's if you assume the expected move is not like a wall, it's not a fence, it's a quote. And things can change. You can get those intraday moves. Certainly, TP, I mean, probability of touch is different than probability of finishing there. But you can't treat it as anything other than just being a point along the distribution curve.
Yeah, Chris. That's exactly right. It is the market's anticipation of what the stock might do in the future. Is the market? Those are people. Okay. It's individual traders making a decision. Are they perfect? Absolutely not. Do they make mistakes? They absolutely do. Or they just misjudge things. It's not a mistake. Did they just misjudge things? I think the biggest mistake is not so much using the move to choose the strikes. It's that you're taking undefined risk going into these big numbers. So going into, let's say, NVIDIA on Wednesday. Okay, I want to use the expected move to sell an iron condor, to sell a put spread, to sell a call spread, either way. Okay, fine. I don't have a problem with that. The biggest mistake people use is saying, I'm going to sell a naked put in NVIDIA or naked call in NVIDIA.
Well, even when you do it defined, TP, you have a day like we're having today, and something that I'm doing here is not working out in terms of the double bull. So I just a quick check on NVIDIA pricing here before we head out the door, because I hear Gus and Errol from the SIBO floor getting ready to come in at the expected move this week, which is $11.33 from the current price of $209.83 or so. You're looking at 197.5, 225.5 as sitting on the outside of that expected move for your short strikes. If you go 250 away, because these are $250 intervals here, TP, you're getting 91 cents of credit right now on what would be at least an ideal 83 cents risk there. So there's something to play with here. Maybe you can go a little bit wider, but I know that we have some good research as folks get prepared for these NVIDIA earnings about the expected move, how NVIDIA's behaved. You're going to have to keep watching tastylive to find out that a little bit later on. But for now, TP, we are done here. Confirm and send. Send us your questions. Research at tastylive.com. Research at tastylive.com. We're taking a brief break here, but up next, Gus and Errol, they're live from the SIBO trading floor, and it sounds loud. Busy day here as these markets are near session lows. You're watching tastylive. Catch you there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is going on, everybody? Welcome back to Risk and Reward. Happy Monday. It is a new week. You have seen a lot of me today already, and you're going to see a lot more if you were happy when I was in Alaska. It's a sad day for you. I'm joined, as always, by my wonderful host, Errol Coleman, who is joining us live from the SIBO floor today. Errol, what's going on? How's the vibes over there?
The vibes are vibing. I feel like it's pretty up and down lately. It was a little bit more rambunctious earlier today. Now it feels a little bit more like a silent library right now. So it's a little bit all over the place. You know, it's Monday, but good to be back. Nice to see some action in the market today.
Yeah, I'll give some credit to Errol there as well. When the volume is frequently changing at the SIBO, it's really hard to deal with. You're constantly going back and forth, and you're shouting over the noise, but then you realize you're still shouting, and it's quiet behind you, and the whole room can hear you. It's a tough one to judge. So good on you. Yeah, we got interesting action across the market today. We were just slightly red off the open. Things have come back in just a little bit. Still just barely down on the day on SPX and NASDAQ alike. Anything NASDAQ down a little more, obviously. What's been catching your eye? You made any trades today? Any new positions entering the account for you?
No new trades today. I did take off some short delta on SanDisk. We've seen a little bit more of a slide to the downside on some of those semiconductors, right? SMH, SanDisk, Micron, some of those are pulling back a little bit more. So taking advantage of that, some trade management there. Outside of the semiconductors, Walmart's doing pretty well today, right? I know we had on a little bit of long delta on over there. It's nice to see a little bit of a reversal off of the lows. But it's been a little bit of a quieter day, I have to say. Like, I know memory's moving, semi's moving, volatility is kind of moving, but for the most part, some of the ones like Walmart are outperforming, which aren't the most attractive or sexy stocks to be paying attention to all the time. So things are moving. But what about you? What's standing out on your end?
Yeah, definitely a very quiet day. Tech space, semi space, both lagging a little bit today. And as you said, some of these boring companies keeping us a little bit propped up. I mean, you mentioned Walmart. This is certainly what I'm keeping the closest eye on today, having this short put at 105. I have until November 20th, so not the most day-to-day position, but I am happy to finally see things reverse in there after a scary Friday, the day after we put this trade on. Crypto, I mean, I'd be remiss if I did not mention crypto. Bitcoin catching another solid bid today. I'm dragging my IBIT up alongside with it. The momentum just seems to be continuing in crypto. And I didn't get to
crypto is ripping.
Yeah, I didn't get to talk as in depth about this, as much as I would have liked to earlier today, but Bitcoin, This whole rally is so interesting to me because all of this is just the catalyst for all this. All it took was Trump telling Congress that they should pass the Clarity Act. Nothing else has happened beyond that. It was just that it was like crypto was this, a box of gunpowder just waiting to blow this entire time. And it just took the final last little spark. And all of a sudden we pop and we're seeing this upside rally, even though fundamentally nothing has changed at all. And this legislation still has many political hurdles to clear before it can get passed, especially as we head into midterms where we expect to see things flip.
I mean, imagine if that Clarity Act doesn't get passed. I mean, what does that mean for the recent rally that we have seen in some of the cryptos? I know for my sake, I would love to see cryptos back at its lows. I don't know if it's going to take some type of conversation around that, but it's a really good point that you bring up. I mean, we're rallying off of no level of certainty, I guess you could say. And the level of this rally seems like we did get some type of certainty, which would drive that conviction into this market. But it's nice to see it alive. It's nice to see it volatile again. I know right now I sold a strangle on an IBIT, so I've been having to roll up that put side a little bit more because that call side was tested fairly quickly. So I'm hoping we see a little bit of a pullback. Who knows what that's going to take, but we've only seen green since that press conference.
Yeah, it's I mean, and just straight green, and like you said, I mean, completely uncatalyzed. I mean, because that's the thing is, it's really no new information. We knew that Trump liked the Clarity Act and wanted to get it passed, and all he did was vocalize that thing that we already knew, and it's given crypto the spark that it needs. And to your question, if the Clarity Act doesn't get passed, I don't even know what that does to crypto, because obviously Bitcoin has spent a lot of time over 100,000, as high as, testing 130 a time or two, with no Clarity Act in place at all, just under normal market conditions. So if we say make a move up to 85 and stabilize there, and then something comes out that basically says there's no chance the Clarity Act gets passed, it's been struck down, whatever, does anything really change? I don't know that it does. Perhaps this was just the spark that we needed to get Bitcoin going a little bit again.
Yeah, maybe that's the case. All I know is if the Clarity Act doesn't go through, or we get some type of negative sentiment pushing through the market, it seems like this could be one of the biggest bear traps that we have seen. I'm sorry, bull traps that we have seen on crypto if that Clarity Act doesn't go through, especially with how dead it was around 60,000, and now we're already testing 80,000 here really soon. So we'll have to keep an eye on it.
Yeah, absolutely. And yeah, testing 80,000 is crazy with how recently it feels like we were testing 60,000. That's a great point. You guys can see
like
the extent.
Yeah.
Yes, like yesterday. You guys can see the extent of my IBIT position here. As I mentioned before, a lot of these, largely dead in the water, but any legs to the upside help a little bit. This top 105 call is definitely the most dead of the bunch. These other ones all actually could recover if we get the right move to come through here, particularly this last one dated at January of 2028. Plenty of room left on that one and not down quite as much. So I think they're very much, I mean, and like the gamma play that I've had, going the whole time here, there very much is a chance that if we get the giant rally in crypto up over 100 or whatever it may take, that these two positions can swing through enough to cover my losses in the first two. So we'll see what manages to come to fruition there. Also have this ETHA leap in my back pocket as well. I don't know if it was Ranch or Jared. Somebody talked me into putting on this ETHA some months ago now, 175 days ago, so about 6 months ago. But this is a chat trade I still have.
I think we can do it. I think it's still possible.
Oh, yeah. Well, the ETHA is the only one that I actually caught the bottom on a little bit. I still could have been better, but we were at, down 38 notional on that one, having a good day today. So we'll see if that can rebound. Aside from the crypto space, UNH is something that I talked about this morning. They're up $6 today. It was up as high as $9 earlier today. But finally catching another little bit here. And again, just really attractive chart to me here where, we get good sustained growth, taking the stairs up. We put in a local top. We come down a little bit. Now it looks like we want to work back higher again. Exactly what you'd expect to see out of a strong growing company. So I'm hoping that this is the first step towards some new highs in UNH.
No, we may be on the way there. What is the ticker on that one? I can't see very well. What's that one again, Gus?
Oh, just UNH, United Healthcare.
Okay, I got you. Yeah, road to recovery on the way.
Certainly. And then, also TLT, which has been a massive topic of conversation for me recently, but continues to work up throughout the day-to-day, up 62 cents at the moment. 82.67, our current trading level. As I've mentioned many times, I have a cost basis of 84.33, I believe, on these 600 shares after getting assigned on 200 and then 400 more. So we're still hurting, but hey, just at Friday on the close, this P&L open was down 1,200, and now all of a sudden it's back into sub 1K. And I think a TLT return to 85 at some point in human history is fairly inevitable. And I have shares with no time horizon, so I'll wait as long as I got to. But bonds really beaten down right now, obviously, and very interesting with all of the Bessent news that we have breaking today that we're seeing bonds continue to climb higher. The bond market just basically saying we don't care about U.S. currency. We'll see what happens.
Right. Yeah, it's really nice to see the bonds, especially I know we were talking about them at the end of last week, how we kind of started sliding lower. But it's nice to see the recovery. Bonds is one of those things too where I had exited the position fairly soon given the volatility that they were experiencing. But I've never seen bonds this volatile. I've never traded them while they were this volatile. as you brought up the bonds, I had to look at to see where gold was at, and we've kind of finally seen that correlation line back up in the bonds in the gold market. As to the last 2 weeks, we were seeing an inverse correlation. Whenever bonds were hitting a low, we were seeing a bid in gold, and vice versa. But now, gold up on the day, bonds up on the day. It seems like we're getting back to normal a little bit here now. But that gold rally is starting to extend itself there, Gus.
Yeah, it is. Gold, yeah, seriously catching a bid here. Working up towards the dead cat bounce off the highs is what we're closing in on here. Very interesting. It's, today it makes sense that gold would be up today with broader currency fears happening. That's the textbook situation for gold to make a move up. But bonds being up alongside it in that same news environment is an interesting move, to say the least. I don't have any exposure to the metals right now. I do continue to be short oil. My poor dead oil shorts. USO comes down 2%, and I'm just still red because theta is killing me that bad this far out of the money. But hey, we got till December, so if we can end the war by December, there's certainly a chance for a better exit than what we're seeing right now. Oil showing a little bit of weakness today as a whole.
Yeah, I know oil is starting to consolidate a little bit near its highs. We're kind of on the brink of a potential new all-time high on oil, but it's still crazy to kind of see that we've reclaimed all those previous price levels from the initial euphoric rally that we had went on earlier this year. Again, just really emphasizing the fact that it doesn't seem like a lot of this geopolitical tension is going to be ending anytime soon. I mean, we're probably looking at $90 a barrel on oil, could be by the end of this week, could be by today, who knows? I mean, we're hovering just around that number. So we'll keep an eye on it. I'm going to stay a little bit more hands-off in oil for the time being until we get a little bit more decisiveness, I guess you could say, coming from it. But some short delta on in gold looks attractive. I could probably play around in something in there. We'll continue to keep an eye on it.
Yeah, I agree, and it's just a tough situation to judge. I agree with being hands-off, but yeah, as you alluded to, I think that any of these geopolitical tensions, it's like every day that passes without a resolution, it becomes a little less likely we find a resolution the next day, in my opinion, like as these things continue to stretch, and that effect only becomes more pronounced when you start talking about weeks and months. So it does seem like these tensions are going to be continuing for some time, and Trump did say that he's going to put some of the strongest sanctions in history on Iran to try to end this conflict. So we'll see what those sanctions entail and what that does to the oil price in turn.
Yeah, we'll keep an eye. I will admit, oil is a tough trade. Like, even just sitting in an oil trade, that's tough with all the headlines flying left and right and how the sentiment can kind of shift at the snap of a finger. So we'll keep an eye on it. Big deal. What's going on, brother? What are you guys looking at? What are you guys trading? Any spare beanies laying around? Gus, we're going to have to check in the studio. I know Big Deal was asking for a beanie. We'll see what we could whip up. We'll see what's laying out there.
There are definitely spare beanies laying around. I don't know where they are, but I could definitely look into that for you, Big Deal. We can get you a beanie.
I don't know if they're off anybody's head, but we could snatch some beanies off of people's heads if they're wearing it. They might not like that, but we could do it.
I have a Tasty Trade beanie, and I believe I have an old school Tasty Works beanie as well at home. So I got the full ensemble there.
There we go. There we go.
Yeah, elsewhere in the market today, I mean, portfolio-wise, that's sort of everything that's really catching my eye today. We got, IBIT, SpaceX logging another green day. As we said, SpaceX, this is a very tiny green day to be fair, but again, they just continue to put in these little tiny legs. I feel like we're going to blink and SpaceX is at 200 all of a sudden, so I always acknowledge anytime they're doing a little bit well. We can hop over to the fast movers watch list here and see what's flying or dying today, what's changed in the last couple of hours since I last looked at this. Let's see. Yeah, Philip Morris still at the top of this here, catching a big move. Let's go by percentage change, see what's up, what's down. How about Alight, which I still have in the portfolio? Why isn't that way up here at the top?
Alight, that was that cheaper underlying, right?
Yeah. This is one I believe. I picked up 5 shares of this sometime just because somebody mentioned it. But yeah, logging an 8% day to the upside, which is $1 for a stock of this size. But this one, my favorite type of penny stock charts to get involved with right here. It's been as high as $200. It's been over $200 before in the past, beaten way down to $15 now. My spot is something like $18 on this, right in that ballpark. But logging a good day, looking to put in some upside, and yeah, this is just one of those ones. If I know the company's not going bankrupt and there's proven track record that they've been as high as $200 a share before, why not take a little 5-share swing on it on some margin? So happy to see that move coming through as well. If we were on P&L day on a percentage basis, it would be a much greater showing.
I love it. Rain says, "Sup guys, favorite show." I just got a feeling, Rich. You say that to everybody's show. No, it's like I saw you earlier. No, what's going on, guys? Let us know again. What are some assets that has been catching your eye the most? Gus right now is going through the portfolio. We're checking out some standout names. But what you got there next, Gus?
Yeah, let me know if you guys have ever seen, or maybe production could find it. It'd be hilarious. But there's a screenshot that's very popular on social media right now where a guy says, "You're the most beautiful woman I've ever seen." And then she says, "You've probably said that to a bunch of different girls." And he says, "Yes, but it's your turn to hear it now. Focus."
Yes.
It's so good. That's what that makes me think of right there. Yeah, Bloom Energy. I saw Bloom Energy. This has been crazy intraday swing today. Let's look at an intraday chart on Bloom because this opened so far down. I was actually talking about this morning on the Fast Movers watch list as something that opened way down. Let's go to like a 1 hour chart. Even that doesn't quite do it justice. Go even more granular. Okay. Yeah, there you go. Yeah, big ol' tank off the open, big ol' stinker down to 185 and then just rip straight up to 208. I mean, what an intraday range on Bloom today. Shout out to any dip buyers who were brave enough to step in front of that freight train off open because quite the reversal that we're seeing.
Yeah, no, I mean, wow, what a dip off open and a rip to the upside. Short sellers looking like they might be definitely getting squeezed out of that one. But yes, no, I mean, shout out to Bloom. Is that Bloom Energy right there specifically?
Yes, yeah, Bloom.
Okay.
Yeah, gotcha. Very interesting. Yeah, now up over 209. The masses love Bloom, it would seem, today.
Yeah.
I see Workday popping up on here. Nothing crazy going on in the middle here. And then down at the bottom, we have IONQ, Materials getting hurt a little bit today, I guess. Let's pop over. I clicked the wrong button. Yeah. There we go. It's not that crazy. Sitting inside its range.
What ticker is that one again? I'm sorry, guys.
MP, Materials.
MB.
Yeah,
gotcha.
Materials Corp. One of the most acutely named companies in the world right here. What Materials Corp. What do they do? Materials. I love it. I'm going to think about it for a second. No Broadcom, Qualcomm situation. Broadcom, actually, now that comes to my mind. Interesting situation happening with Broadcom. Sliding aggressively today. Well, aggressively might be a stretch, but down 2% on the day today after logging a good day on Friday when they announced that they would be spending $60 billion on AI development with Google. That's the whole, I went into detail about this. I believe it's NVIDIA, but it's passing through Google, or no, it's Anthropic. They're giving $60 billion to Anthropic by way of Google because Google uses Broadcom chips and Anthropic is going to use the chips that the $60 billion are for. That's the whole flywheel happening here. AI, they love all giving money to one another, obviously. I thought it was very shocking that Broadcom was trading up on Friday after that news broke because people have been so apprehensive to aggressive AI spending as of late. And then today, it's like the market just took a day to actually process that information and say, wait, $60 billion? And suddenly we're trading back down at basically Thursday's levels now. So interesting happenings with Broadcom here. Very, very, very strong historical support right at this 360 level that we're at right now. This one might trigger a trade for me, honestly. I was thinking about getting long on this on Friday, but then it was up, and I was like, up with that CapEx? That's a little bit scary to me. But I'm tempted to play. I don't know if I want to play for the short-term bounce and just look for a recovery up into like this 380 sort of range, or if I want to go a little bit longer dated and play for the longer growth thesis. I guess this close to the highs, I'd rather be a little bit more aggressive with it. Let's see what we can find here. Let's just do weeklies.
Yeah, what is that options chain looking like? Let's see. The expected move looking pretty decent so far right off the bat. What are those premiums going for?
Yeah, shockingly bad liquidity here, actually. Especially like this 360 strike on the put side. I mean, 590 to 735 is the spread. So, I mean, fairly high. I mean, very elevated premiums.
That daily chart. Can you go to the daily chart? That daily chart looked pretty choppy.
It is.
Which, whenever I see a chart like that, I'm like, okay, definitely a lack of liquidity somewhere going on in here. But that doesn't always tell the true story for what the options chain is telling you. So, still interesting to see what we could grab from it. But just from the daily chart, I mean, it looks pretty illiquid with how choppy it is.
Yeah, for sure. Yeah, implied volatility overlaid here. You can see we're at some of the lowest levels recently, and it's still at 51%. So, the market has no idea what's set to happen with Broadcom here. The options chain, you can see we're at 40% IV into the next 7 days, which is the reason for these lofty premiums. Oh, there we go. That tightened up a little bit. 635 to 725 now. Somebody snapped up that bid at the bottom or moved up their bid. But
there we go.
Yeah, that's something there. Yeah, I'm kind of just liking this thesis that 360 could be the bottom. I don't hate this just position that I've thrown on right here, right at the money. Buy the 370, buy the 357.5, sell the 360, 140 of buying power, get 128 back in credit. Let me take a look at this chart just to make sure I'm kind of affirmed in my belief here. But yeah, 360 hasn't closed below 360 this entire time. So yeah, I think I'm willing to take a stab at this. Just gonna do one, see if we can't get a fill. I'll get slipped.
See if we can catch a fill.
I'll let myself get slipped.
Yeah, how much are you willing to give up? How much you willing to give up?
Yeah, I don't know, $3 to $5. This mid just moved down to 125 on me. Maybe we can try that. See what happens. I guess 120 would kind of be my bottom. This is running away from me pretty bad. All right, just put it in my account, man. Come on. What are we doing? 119, 120. Give it to me. Okay. Well,
we're almost there.
I ain't gonna go much further than that. We'll see.
We could be patient.
Yeah, we'll see if we get a fill on Broadcom at that level. Not showing any signs of strength today, so
if you don't get filled, it's a sign.
Yeah, exactly. Yeah, I've let myself go $8 here. I'm not gonna go further. Yeah, not much signs of strength coming through today. So hopefully we just dip the 6 cents lower or whatever I need to find somebody to fill the other side of that. If anybody's bearish Broadcom wants to take the other side of this trade, be my guest. Go for it. But yeah, this just feels like a good bounce spot. And like I was saying, apologies. Like I was saying last week, as we talked Broadcom headlines, it's just with the broader space all at much closer to highs than what we're talking about with Broadcom. It feels like it'll catch up even with that AI spending coming through, which again is over the next couple of years. It's not like they're losing $60 billion tomorrow. So we'll see what comes of that, but certainly pretty strongly on my radar.
No, 100%. We'll keep an eye on it. I think gold looks really attractive. I don't know. Maybe we do something in there later for trades of the day. But I mean, that overextension is starting to look really attractive, especially if you're somebody that has a short thesis. If you don't think that these metals are going to make another all-time high, I think you can definitely justify some type of favorable risk-to-reward position to the downside from here. If you don't think gold is going to make higher highs, but if we continue to rally to the highs, I think that pulling the trigger on some short delta, it's going to force my hand. But I think it's one of the most attractive markets so far for the day, at least.
Yeah, that's an insightful perspective. I hadn't really considered the gold short yet, but that certainly we definitely could see that play out. I tried to step in front of silver a number of times amid the last major bull rally that we saw, and eventually did catch it at the end and managed to cover everything. But yeah, this is starting to feel like a spot where you might want to get bearish on some gold. We're becoming very elevated, like I said. I mean, this like 4,700 to 5K range is basically where we consolidated after we came off the extreme highs. And, we were talking about testing 6,000 there for a second. We now have sunk back down into this same sort of ballpark. But, I would have expected us to kind of hang under 4,500. This drawdown was actually a little bit more than I expected as well. But yeah, gold, this thing, it's crazy how often it feels like the metals start trading like meme stocks as of late. And obviously this move is much more substantiated than the last one. At least I can point to things and say, here is the reasons that we're getting this move in gold. This previous one that we got was so unsubstantiated and bizarre the entire time. At least this time there's a little bit of credence to it. Maybe it makes me want to at least take a couple more days and see what happens before I get short here.
No, I hear you. Zeke says GLD or the gold bars from Costco. Honestly, whatever one you're feeling, whichever one you think is going to give you the quickest transactions, speed of transaction is going to be important there. But yeah, no, I mean to the point that you made there, guys, I completely agree. It's going to be a difficult market. I mean, last time we know how silver and the gold markets were behaving, and it's a market that can easily get away from you. And it's funny because over the last few years, I would say even this administration has kind of shown us like we can turn anything into a meme stock. You want oil, you want NASDAQ, you want S&P 500, you want gold. I mean, they've almost showed us in every important asset class how volatile things can be. I think bonds might be one of the only ones that have never really looked like a meme stock type behavior because of the lack of volatility we usually see in those. But with that being said, it's a good point. I mean, we've seen a lot of the behavior really touch meme territory in terms of price action and the volatility we've been experiencing.
Yeah, I think that is a great point. I mean, and it's what And ultimately, it's funny because I've been so wrong so often a number of times, directionally speaking. But when Trump got reelected at the very, very beginning of all this, I said numerous times, I said, we know what the Trump admin brings. We have the playbook, and it brings bullish volatility. That was the vernacular that I kept using. It's we work upward. We know the market likes the Trump administration in aggregate, going to be good for your 401k. But we know that these binary events caused by tweets, caused by speeches, caused by international conflict are going to be aplenty as well. And so I've definitely gotten burned a few times, but then you step back and zoom out, and the performance has just been incredible over this entire really 2020, 2025, and 2026 calendar year. But there's been the scares. There's been Liberation Day in 2025. Oh man, the sky is falling. There's been, we got the same thing in April this year with the beginning of this Iran conflict, which we then just decided that we don't care about at all, even though we never actually got out of there. So yeah, it's you just gotta be prepared for everything. Absolutely anything can turn into a meme stock. I agree. That's very insightful. I know we only have about 3 more minutes with you here, Errol. Do you have anything on the top of your mind you want to get off your chest here?
No, what else is going to be top of mind for the day? Again, it's nice to see Walmart recovering on the day. We covered our SanDisk position that was short to the downside. Semiconductors doing a little bit better today as well if you have short delta on. We have an out-of-the-money call spread, or we have an iron condor actually at the end of last week that we had put on to just see if the indices want to move sideways. We always talk about, are we going to make a new all-time high? Are we going to start making new lows? Is that correction we've all been waiting on actually coming now? And I'm choosing neither side right now. I'm not going to choose all-time highs, nor am I going to choose a correction. So I sold an iron condor and QQQ, 25 days left to expiration. We'll see how that plays out. Let's allow a little bit more time to pass. Crypto still taking off to the highs, rolled up that put side a little bit more, collecting additional credit, widened those break evens. But man, this thing's an absolute beast. With how quickly crypto is able to recover, right? I mean, 60,000 to 80,000, it makes you think, well, then how quickly can we reach 100,000? How quickly can we get back to an all-time high? But that same type of thought process is what I feel can trap a lot of traders and investors. But it is impressive to see how quickly, these markets can actually recover with being, I don't want to say dead, but quiet for an extended period of time.
Yeah, even when things get scary. I mean, yeah, the V-shaped recovery that we saw April of this year and April of last year was just, cannot be understated. There was never a moment where we had any bearish consolidation. It was just straight down and then straight back up. It's so over, it's so over, it's so over, and then all of a sudden we're so back, we're so back, we're so back. I mean, look at this. There's not any sideways momentum at the bottom. It is a pure V-shaped recovery. We're at 6,600. Turbulent 5 days, and then we're right back at 6,600 5 days later like nothing happened. And again, obviously, it's what we saw in Liberation Day in April of 2025 as well. Yeah, I mean, this one was even more pronounced. We're at 5,500. Yeah. We get as low as 4,800, and then all of a sudden, 3 days after that, we're right back at 5,500 again. So, yeah, it's just it's always something to keep in mind. And in those snap your fingers bearish times, it's important to remember that in this administration, the dude's traded stock, 3,500 stock trades since he got into office. It's a whole lot of trades. They care about the long-term performance of the market as well, I guarantee you, and they'll find a way to fix things, at least in the market on paper, as quickly as possible. It's the precedent that's been set here. So definitely something to keep in mind as we move into the future and into potential future drawdowns.
100%. I mean, yeah, with those downside moves we've seen in the market that last for a very short amount of time, it feels like that capitulation move or those direction moves in the market, it doesn't give you that much time to make a decision. Because whenever we're consolidating, it gives you so much more time to think about how much you want to add to this position. You get to adjust your conviction levels. But when the market just does a V-shaped recovery, you don't have much time to make much decisions at all. But with that being said, yeah, that's gonna be top of mind, Gus. We'll see. Maybe we're back at an all-time high by the time I get back to the studio, but we'll keep an eye on it.
It'll certainly happen. All right, well, that's going to be all that we have from Errol at the SIBO today. I will be staying here for 15 more minutes, but we are going to take a 30 to 45-second break here real quick to let him off. Stay tuned. You're watching Tasty Live. I'll be right back.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What's going on, guys? I'm back. Errol taking a load off, actually racing back here to the studio so he could make trades of the day is what he's doing. I've done that race before. But here, happy to be with you guys for the next 15 until we turn it over to live from the trade desk with Jermal and Quentin. And I see, well, first of all, I was just told in my ear a moment ago that Nancy Pelosi has loaded $5 million of Bloom Energy. So if you're wondering why it immediately reversed off the floor when, it looked like things were going to be dreary this morning, that's why. That's not why. She didn't buy the $5 million and inject enough volume to prop it up. But when Nancy has it, it can't stay down for too long. It's the rules. I don't make them. 15,000 shares, I'm being told. So shout out to the greatest stock trader of all time, totally ethical Nancy Pelosi, who only cares about her constituents and also happens to be a better trader than Warren Buffett. See, lots of discussion happening about GTA 6 in the chat right now. So I'm going to talk about that here for a second, and not even just the broad stuff. You guys are absolutely correct. This whole thing with the leak, I actually haven't seen the new leaks. I've seen lots of memes about how there are new leaks. And I think the guy, whatever his name is, it's like GTA 6 leaks, but it's like LEEKS or something like that. Whatever. I saw he did post something and said, I just finished GTA 6 with like the final credits for the story mode. So I've just seen memes about it. I haven't seen any of the actual pointed leaks that have happened. And yes, as was mentioned, they're like sicking the full force of the freaking federal government on him. It's crazy. I would be freaking out a little bit if I were him. It ain't worth it. I mean, has he managed to monetize this at all? Is this all just for love of the game? It's incredible. But that led me to think about Take-Two Interactive here, which is obviously a publicly tradable company. Anytime we get into these video game discussions, you got your EA, you got your Take-Two. There's all these different ways to go at it. Take-Two, obviously responsible for Rockstar Games and therefore GTA. This one, obviously very strong grower this entire time. There's crazy metrics on GTA. I don't have anything off the top of my head right now. Maybe you guys could tell me something in my ear here, but GTA 5, I believe, is still making like $2 million a day or some crazy metric like that right now, like in 2026, just from everybody buying shark cards and yeah, still great involvement with that game. I mean, and kudos to Rockstar, who gets a lot of hate for all these things, and perhaps rightfully so in some cases, but kudos to Rockstar for building a game so amazing that 13 years later, they're still managing to do 6-7 figures a day in revenue on it. But yeah, in turn, Take-Two has been a very strong grower. My question, and something I've been throwing around in my head really since the beginning of the year with GTA 6 set to come out this year is this tradable? Because obviously, efficient markets, and I'm a firm believer in efficient markets, will price in all relevant and available information, past, present, and future. And we obviously know that GTA 6 is coming in the future. Could we properly, is GTA 6 already priced in, is kind of the beginning of the question. If not, when do we move to price that in? And could we properly price it in? Because, I think it's pretty much a foregone conclusion at this point that we're going to be looking at the best-selling video game of all time, or certainly something in the top 3 here. But should it, be sold at unprecedented levels, could we even accurately price that in? And then you also have to remember that this game, the most hyped game of all time, I believe is a fair assertion to make at this point, is only coming out on console initially, and is going to release on PC as well some months later and drive a bunch of sales into it. So lots of interesting discussion to be had there, I think. That said, I'm sort of bullish on Take-Two, but I just don't know. It just becomes that question of if GTA 6 is fully priced into this company or not. I'm willing to put a few dollars behind the idea that I don't know if it is. And I want to go way out into 2027 because I want to make sure that we give a sufficient amount of time for this game to be released on PC as well. In fact, let's compare even the January 21st, 2028 options chain into the equation here. Obviously, everything very, very elevated premiums this far in the future. That's not lost on anybody. 43% IV out to that point, 54% IVR right now. So pretty solid premiums. I am going to choose to go the credit route here. But let's say I don't know, what's their growth look like this year? Let's do some very rudimentary math here. Actually down on the year, it looks like from the very open, coming off their lows, they're up, $50. So that's something like 30% off these lows, although they are down on the year in aggregate. PC launch was supposed to be about a year later. If it leaks fully before PlayStation, that would be absolutely incredible. Can't say if it's good or bad. LOL. Yes. I can't really say if it's good or bad either. I don't know. I understand, obviously, Rockstar wanted to be so secretive about this and hating the leakers. I'm not going to fault them for that. But at the same time, does this help? I mean, it might help. Is there such a thing as bad publicity in this context? And everything that I've seen so far has just been about the leaks. It hasn't been anybody dogging the game. And also, if anybody is dogging whatever version of the game he has his hands on right now, pre-release, he or she, the hacker in charge of this whole situation, I don't know that that's even a fair judgment to give. I mean, things often, even just months before release, games will look very different than they do when they actually hit the market. So lots to think about there. If the full real game goes on the torrent network, that is going to be wild. The images up right now are full of Trojans. People are falling for it. I can believe that for sure. Yeah, guys, don't run RAR files on your computer. Just a good PSA right there. Just don't do it. Just don't do it. I don't care what you think might be in them. The risk reward just isn't there. All right, they'll put a keylogger on your thing, and you can never get around that. If you've never had somebody keylog your computer, consider yourself lucky. Talk to somebody who has. It's pretty terrible. So yeah, I'm just not entirely sure, but I think I'm convicted enough to want to get out in front of this and get long. We see 2025 calendar year, a much better growth story for them. Very rough numbers here again, but 180 up into 260 off the highs, $80 move there. So yeah, I mean, let's do this a year out. I don't even see how these premiums look. Pretty widespread. But yeah, if I wanted to go sell this out of the money just a little bit, what are we looking like here? 430 for 570. Do I want to wait 515 days to make $570? Yeah, I think that reward might be there relative to the size of my portfolio. Just out of curiosity as well. I mean, what if we got a little further out, or even if we wanted to set up a little ladder here? Maybe a little ladder action could be fun. 690 for 310 on this. So if I did the 690, if I did the 310 of buying power there, and then also did 430 of buying power there, that's 740 of buying power to recoup $1,200. I don't hate it. I'm gonna see if I can't get a fill right here. Okay, that was maybe a little too quick, maybe a little shady quick. And then yeah, I think I want to ladder this up. I'm gonna go one expiration in from that. This will be sort of the more pointed, centered around GTA expiration here. Let's do the 240, 250. This is not dissimilar from what I have going on Meta, which not going well for me, let me tell you. Yeah, it's gonna cost another 460 of buying power. Yeah. So my numbers don't actually change all that much at all. Okay, I'm doing it. Sold. All right. So yeah, open a couple of super longs in take two there. And again, I want to fully acknowledge I'm not really sure the extent to which GTA is already priced in. It's obviously going to be fully priced into earnings reports when we get around to it and the game is out and you start talking about that. That'll obviously be all baked into the estimates. There's also a chance in the world of Wall Street bets and social media that we live in that this rallies when the game releases just because. One of the best trades I made all of last year was on Paramount Skydance, which I'm actually still bag holding some of, which is a crying shame. But let's see if I can illustrate this a little bit more perfectly here. The whole thing here is that when Paramount Skydance got the rights to UFC, to put on UFC fights for all of their subscribed members instead of UFC offering their fights a la carte pay-per-view the way that they had forever and ever, I felt that was going to do very good things for both companies. And so TKO Group, which is the owners of UFC, they rallied very, very similar charts last year, although TKO's managed to hold their gains. I believe this is it here in January of last year. They rallied immediately, like minutes after this news broke, TKO Group began to take off and did not, or maybe it was this rally, did not cease taking off for a few weeks. Really, it was a weeks long rally in TKO. Paramount Skydance, for some reason, lagged just 1 day behind, and I was like, why isn't Paramount moving on this news? And I got long, and then immediately it ran all the way up to 20. I can show you the remnants of this position here, which I am still holding on to because my long-term thesis still holds. What do I have? Yeah, I have the 10 and the 20. This was initially a 10, 15, 20 call, all at the same January 2027 expiration. The 15 grew so much that I was able to fully cover the cost basis of the 10 and 20 with it. So I took that off, and then these are both just free rolls, which is why I'm not really sweating them so much at this current place or worrying about trying to manage this far out of the money. Oh, I guess the 10 call is in the money. Theta's not completely killing that anymore. But I think that we could see a very similar situation here with Take-Two, where just as the GTA hype cycle builds, as the game actually drops and gameplay starts to be posted on social media and this, that, and the third, there could very well be a unsubstantiated sentiment move just as the broader public says, oh man, TKO Group has to make a bunch of money and starts throwing some money at this. So could be some retail advantage to be had there as well. But like I said, I don't think that this is some genius thing that I'm getting out ahead of. Obviously, everybody is fully aware that GTA 6 is about to come out, and this could very well be a bad trade, but the disproportionate risk profile, and I'm able to get on this at the reasonable liquidity that I'm able to get this far out in the future on it, I'm willing to take this shot here and see what happens with Take-Two. So that'll be kind of not my trade of the day. I'll be doing that later, but a pseudo little trade of the day right here. My trade of the morning. Get some super long dated long delta on in Take-Two here. So that's a 240, 245 next September, a little over a year, and then a 290, 300 into the following January. So not going to try to squeeze every last drop of profit out of those either. If we get the pop and Take-Two on the GTA hype cycle at any point, I'm content to just take these off for whatever gains that we have. Popping over to chat here to see the last couple things. Which FedWatch tool does TP use during the show to make trade decisions on bonds and notes? I do not know, Stan. I wish I had a better answer for you there. I cannot say that I know off the top of my head. He will be on later today, though, if you'd like to ask him. Oh, yeah, save that question for when TP is on. There you go. Thank you, Immediate. Fred or Forex Factory? Okay, I see. I'm not entirely sure the answer to that question. But, was there any other GTA stuff? Wizards of the Coast sent the Pinkerton. Oh, we're talking different games now. So yeah, I guess that's kind of it on the GTA discussion and the GTA thesis. So yeah, I'm happy to be long some Take-Two here. Just hope that hype cycle can prop me up. As far as one actually finishing on the dance floor, I think the 240, 250 certainly has better prospects for that. But am I shocked if Take-Two is a $300 company or a $300 stock at the beginning of 2028? No, I think that's a very reasonable growth story that they could have as well. So that's going to do it for me here. We will have live from the trade desk coming up next with Jermal, Chandler, and Quentin. Do be sure to come hang out for that. Quentin, always great to have on air. That's going to do it for me for now. I will be back in Party foul, live TV, people. I will be back in 45 short minutes for my trade of the day at noon sharp. Trades of the day running all the way through the middle of the day. I know everybody really enjoys those. And I will be back again after that for last call this afternoon with Jermal. All kinds of wonderful stuff going on the Tasty Live Network. Do be sure to like the stream, subscribe to the YouTube channel if you haven't already. Really helps us out with the algorithm. And that's going to be all from me today. Stay tuned for Live from the Trade Desk coming up next. I'll see you guys soon.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hey, what's going on, everybody? I'm Jermal Chandler. We're here with Live from the Trade Desk, and I got a special guest. Well, I'm hearing. We got Q from the Trade Desk live here with us. What's going on, man?
Oh, how are you doing? I'm doing very well.
Fantastic. How was your weekend, buddy?
Oh, it was good. Finally, probably, last good weekend in Chicago for the weather, probably, I'm thinking.
Yeah.
And so got out at the pool. And what's crazy about Chicago? Even though, the summer's a little shorter here than other places in the country, they're all these cool new buildings, they all have pools.
Yes.
Stuff with the amenities. Yes. And so, I was at my friend's pool. It was very nice on Sunday. Great time, great weekend. How about you?
It was good. I didn't really do a whole lot, actually. Which is, these next couple of weeks and weekends are about to be crazy busy. So I was trying to chill. I also had a busier week last week, to some degree. Hung out a little bit, went to a Cubs game, things like that. So I kind of chilled over the weekend. But these upcoming weeks are going to be busy.
Mm-hmm.
It's fantasy football draft weekend, Q. It's a big weekend. It's a big weekend. I got a draft on Friday, which is a regular snake draft. Dudes I've been drafting with a long time. Whatever. Matter of fact, the funny thing about that league is that those dudes, so when we drafted in that league, I actually drafted in this league, both of these leagues, I joined them first time, both 14 years ago. And the reason I know that is because it was the weekend my youngest son was born. And I actually did a couple of picks, while we were in the delivery room. He wasn't born yet. I did a couple of picks in the delivery room that day for one of the leagues.
You're not doing much else,
And then the night after my son was born, so he was born 6 a.m. the next, we were in the hospital for 24 hours. And then the next day he was born at 6 something a.m. For those who don't know, for those who don't have a kid, can I get a camera real quick? I just want to be honest about this. For those who don't have kids, when your significant other has a kid, the wife is going to rest the next night. They take the baby away, you rest. So there's no reason for the husband/dad to be there. You can go somewhere for an hour or two. And so, I happened to go to a draft just that night. Everything was fine. It was great. You know what I mean? So yeah. So fast forward, this is 14 years of the drafts. And it's draft weekend. These are very significant drafts to me. These are the years that my son was born, these two drafts. So
I love it. Yeah, actually, me and a bunch of my friends were all going to Colorado for our fantasy football draft. I don't participate in the fantasy football myself because I don't keep up with the sports that much. And so I'll be going with all of them though. All my friends from college. It'll be good this weekend.
Destination draft. I love it.
Yeah, I'll be out one of mine Thursday, Friday. So we'll have Marty on though. We'll have Marty here.
Nice. So on Saturday, I'm going. We've been doing destination the last couple of years at my buddy's lake house up north. So yeah, that's the fun one. It's gonna be great.
Yeah, nice.
And then guess what? I am not missing my son's birthday. It's actually on Sunday. We'll be back. We'll be good.
There we go.
Perfect. You know what I mean?
Perfect.
What's going on the desk, man? How are things going?
Yeah, we've got some. There's things I can't talk about yet, but we've got some really good stuff coming for our Tasty Trade customers.
Okay.
Let me tell you, cannot say anything, but we've got some really good stuff coming. I will say that. And then, Desk Life is good.
Is software? Is that what you're teasing?
I cannot say.
Okay. All right.
Cannot say.
Fair enough. I tried to get it out of him, guys.
Stuff coming. But Yeah, and so we've also got like 2 new hires on the trade desk that started today. One of them that actually looks like Gus, which is pretty cool. I mess with that. And then this other guy who actually worked with us for a long time, and so he's coming back to Tasty Trade.
Well, hold on.
Always
You're
nice.
saying one that looks like Gus?
Yeah,
Chase and Gus kind of favor each other a little bit.
Yeah, I see what you're saying. Yeah, but we got one that
friends.
looks
They-
a lot
they
more
go to- I
like
think they
Gus
went to
than
college
Chase
together, didn't
himself. Yeah, and they grew up friends too. I think they were friends in high school.
Yeah,
but we got to get Chase on the show one time.
For sure.
We should get Chase. You know, everyone's always like so jealous that I get to go on the show every day. I'm like, you can go on anytime you want, and they're like, no. And I'm like, okay, it's just fun. you know?
Everybody says they want.
We're just hanging out.
Actually hits them in the face, and then I start. That's how it goes, man.
Yeah, that's very true. But no, trade desk is good. I mean, busy. You know, everyone says like typically like the stock market, you know, it's slower in the summer. Has not felt this way on the desk this summer. We've had a couple slow days, maybe like last week. You know, like in August, people are taking vacation and stuff like that. But man, been a busy summer, and then busy. Our busiest time is typically from like the end of September. Usually, everyone's like getting back into the swing of things, all the way up to like the end of tax season. And so we're approaching that now. The weather's getting colder and stuff. I'm feeling it.
Don't start yet. No, not yet. Not yet. Don't start yet. We're still. You're right. It was. No, I would say this recent weather, the last couple of days, is like it's good sleeping weather, right? Like it's like 60s, 59. Last night was like 59 overnight. Yeah, it is getting to that point, but we're not there yet. We still got the October like heat wave that comes every year.
Yes.
Every year they get like 1 week where of October where it's like a heat wave. It's like, what the heck is going on? How is it 85, 90 degrees in October? It's so strange. Let's pull up the list. Let's take a look at what the people are trading today.
Yeah, let's see what we've got here. Top 20 symbols going through the system, and their IVR at number 1, NVIDIA with 37, Tesla 11, Micron 33, Intel 28, GLD 41, IBIT 37, SpaceX 1, Apple 42, MSTR 38, AMD 26, SNDK 23, Amazon 15, Meta 35, TQQQ 45, SOXL 41, Google 18, SLV 28, Palantir 20, Microsoft 27, and SMH 34. As always, lots of NASDAQ. SpaceX, they killed the volatility in there. Like that one is a real one. Like I was looking at the options the other day. I think on Friday I was looking at it, I was like, wow, there is not much premium to sell in here as there was, you know, in the prior weeks.
Yeah, it's a scary thing to do. But honestly, a lot of times when a name goes public, a big name goes public, selling vol early on is like a good trade to
I don't want to say taking candy from a baby.
Yeah, no, definitely not. It's a good trade to attempt. You're going to deal with some vol. I mean, if you had sold on day one in SpaceX, you would have dealt with a lot of volatility. I mean, there is, you know, it really depends, right? Like if let's just say a strangle, and I'm pretty sure the research team could look all this type of thing up, but I just remember having dabbled in it a few things here and there. If you had sold a strangle, you would have probably won in the beginning, and then you would have started to lose because the stock would have went down so much. If you didn't adjust anything, you know, you would have lost some. And then it really depends on the tenor you sold to. Let's just say you sold October. You would have made money for the first like 2 weeks, 3 weeks, and then you would have really lost bad after a month because the stock was down big time. We were seeing all the, you know, so it just really depends. But yeah, I mean, the vol was high, just the expectations of like, this stock is going to save the world. It's going to cure cancer in space. And like, you know, that's what the vol was pricing in.
Yeah.
And things eventually, cooler heads prevail. It's just like most things in life we see, you know?
Mm-hmm.
So I guess as you would expect. But yeah, a lot of 4-letter names, silver still creeping up in there. I think it illustrates what people are, that's what's so great about this segment. It illustrates what people are drawn to right now, right? And it's a lot of tech stuff, naturally, given where interest rates are and where those things are moving. And there's a lot to be decided within tech right now, because if interest rates stay here, that's not good for future profits for a lot of tech, which tech is mostly derived off of future profits. So I guess we'll see what ends up happening, man.
Yeah, we will see for sure.
I know the Mondays are usually busy because of, for you guys, because of after the weekend, people, you know, things go into, especially after an expiration. Did you experience that this morning?
Mm-hmm.
After an August expiration, which was
and so, it's always like Mondays and Fridays are always our busiest days. You know, there is no like, you know, I get to relax on Monday and Friday, because I feel like in in other places, in other industries. A lot of people are like, oh, I'll work from home Monday, Friday, get to relax, coast into the weekend, or, I'm just coming off the weekend, relax. That is not how it works on the trade desk at all. We've got very busy Mondays and Fridays. I would say, like, is Wednesday our least busy day? Like, probably not, but no day is our least busy day, really. But I would say, like, Mondays and Fridays, it's always elevated because it's managing risk on Fridays, and then market opens again. What am I opening today?
Yeah, that makes sense. Yeah, and again, it was August expiration, which, again, that's always the thing that lets you know time is flying by. We just had an August expiration. Obviously, the next big one is September, which will be a quarterly, so that'll be busy.
Triple witching. Triple witching is always busy.
Yeah,
no matter what.
Yeah, no matter what.
And then I would say that triple witching date, that marks the beginning of when volume starts to pick up.
Yeah,
I'd say that's a good indicator for it, for sure.
That means there's going to be a lot of trading to do.
Oh yeah,
yeah, for sure.
Oh, yeah,
for sure. Any plans on going back to New York anytime soon?
I want to go back, I think, in December, because I love it when it's like the winter time, Christmas time. New York's always beautiful. Then over the summer, it's kind of like hot and disgusting. So typically don't go back during the summer. But yeah, over the winter, when it's nice and beautiful, I like to go ice skating, stuff like that. Do all the like classic like winter things in New York that are like, just all like go down Saks Fifth Avenue, see like go down Fifth Avenue.
I didn't know if you would do that. I thought you'd be like,
it's
too touristy.
No, I love
So would you like go skating at like Rockefeller Center?
Maybe not Rockefeller Center. Usually go in like Woolman Rink in Central Park, because that's like, it's a lot bigger. Yeah. But I love doing like the touristy stuff when I go back, because that's what like home is to me,
Yeah, I agree. I'm actually going to be there in December. I just remembered. There's a good friend of ours, family. The kid plays for Virginia. He played basketball with my kid growing up. And he's one of their starting guards. He was there last year. He came back this year, but they're going to be playing, I think they're playing UConn maybe at Madison Square Garden late December. So I'll be there for that. Should be fun. Looking forward to it.
Yeah, very nice.
Yeah. Well, Q, thanks for your time, man. Good to see you as always. Top 20 symbols. You guys see them. You guys are trading them. You guys know what's up. Thanks for watching. Stay focused on all the Tasty Live content. I'll be back in a little bit here with the trade of the day. So I'll see you in a little bit. Later.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade today.
What's going on, everybody? Trades of the day. That's right. It's here. It's happening. It's now. Looking around the stock market, I'm trying to figure out what I wanted to do today. Look, this is a big week, and I'll be honest with you. You're getting, I think, a day and tomorrow as well. So I guess 2 days to be able to re-risk, change things around, figure out how you want to position yourself heading into what's going to be fairly big week, I would think. I mean, NVIDIA earnings, it moves a lot. I mean, there's a whole orbit around NVIDIA, right? It's like the largest AI stock. And so that's obviously a big area of interest in AI in general. If you guys were paying attention a second ago, we had the top 20 symbols just a minute ago with Q from the trade desk. And look, for the last several weeks, it's mostly been 4-letter or NASDAQ-related names. That's just what's going on right now. That's what a lot of people are interested in. That's what a lot of people are trading, as am I. Those are the names that I'm looking at a lot day in and day out. I mean, even when I look at my portfolio, that's a lot of what I see. So obviously, that's going to move the needle a lot this coming Wednesday, I should say Thursday, into the close. And then, of course, we have, a little discussion around rates from probably Chairman Warsh at the meeting, Jackson Hole meeting later in the week. That starts on Friday, really. But there's going to be a lot of discourse heading into that. And that's probably going to move a lot of things around anyway. So that's the other thing to keep an eye on this week. But my trade today kind of revolves around those interest rates, I would say, more than anything. I was looking at Walmart. And the stock has been down ever since earnings. It really hasn't recovered quite yet. And I had a position heading into here. I think I had a calendar spread. And I had to change it around, actually. I'm sorry. I had a diagonal. And I had to change it around after the stock moved because it moved away from me naturally. And, you want to fix that position when it moves away from you in a meaningful way. And so I ended up having the 100. Initially, I had after earnings, I had the December 100 short October. At the time, there wasn't a November expiration. I think that just came into play literally today because August expiration rolled off. And you'll see this in a lot of stocks. A lot of times once August rolls off, they'll bring in November, especially if November ends up having earnings, which I think this next earnings cycle for Walmart probably falls in the November cycle. And so that's one of the reasons why I didn't have November. It's one of the nuances of options sometimes. So again, Walmart just had earnings. It was in the August cycle. They didn't have November cycle in there because they don't really want you to trade the November cycle with earnings coming up in August, right? So once August rolled off, then it had November. But my problem was I still wanted to put on a position. And so I did the December versus short upside October. So it was like the 100, 115, right? And that's fine. But honestly, a lot of times you're not going to get a whole lot of value on that short option if it's 2 months apart on a diagonal. It just really doesn't happen too often. And so I had that position on anyway, but I decided I wanted to change it up because, again, coming in this morning, I was short this 115. This thing is only 87 cents or so, right? And that's okay, but I wanted something better. And when I think about, a lot of this trade of the day stuff, it makes you think about how your portfolio is constructed. And just to show you guys, I mean, this is a calendar spread in Costco, Moderna's shortfall. UNH is calendar spreads. I do calendar spreads a lot in these big names, anything over $300, $400, $500. I will do that. STZ is a diagonal, something that's around 100 to 150. I'll usually do diagonals because, like Walmart, you can get some decent upside saleability or downside, however you're doing your diagonals, either call or put diagonals. You can get some decent upside option sales, right? But in this case, 2 months apart is almost too big. And now that they have the November, I could have bought back that October call and sold November, but I decided I wanted to change this whole position in general. I decided that Walmart was low enough that I wanted to get a little stronger delta on my trade. And so what I decided to do is go with the 95-100 zebra trade. That's right, zero extrinsic back ratio spread. And so let's think about it like this. Say you want to get some exposure in Walmart. There's many ways you can do it in options. You can buy a call, but you can see this is a pretty low pop, 28% extrinsic value, right? It's all extrinsic in this case because it's out of the money, right? So this is $105 stock. It's the 110 strike. So further upside, right? Stock has to not only go beyond 110, but by what you paid for even to break even. In this case, it would have to be, let's say we paid $380 for it, $113.80, right? This is just the basic math on that. And a simple, that's like as simple as it needs to be for options, right? And so this is all extrinsic value. You not only need the stock to go through that strike, but you need to go through that strike by how much you're paying for this call. And so that's where that extrinsic value comes from. And as time goes on, let's just say the stock does nothing, you lose your $380 investment, right? But it's risk defined. But a lot of times just buying calls that are upside on a hope and a prayer, it can work for you. I'm not saying it can't. But if you want to do a more sort of options intelligent trade, what would be better would be to do, let's just say you want to spread this, right? And you want to, let's make it easy. Let's just say you want to pay a similar amount. So this case is $3.80, right? So just look at the difference on this. It's a little bit different, but not much. Say you bought the 105, 115 call spread. Now the most you can make on that is the difference. This spread is at most worth $10, right? And you're paying, let's say, $3.80 for it, just like you did on the one call, right? Your extrinsic is a little bit lower because you're buying in money call, but you still have $346 of extrinsic value. Now your pop went up because, again, this is close to a 50-50 sort of win ratio. It's close to it, which is the same as stock, right? If you buy the $100.05 of stock, that's $10,000 you're paying out. But your ratio is 50. I mean, your win ratio is 50-50. Stock's either going to go up or go down. There's no in between. This, it can be a little bit different. Stock can trade sideways and then eventually go up and you still make money. Stock can go down and then come back and you make money. Like it's a little bit different here. And so that's why you're seeing a different pop. Now you can go a little bit more in the money in this case. And again, now you're paying $5 for this, but you have a higher pop, right? 72% pop. But before, when we had this trade, the 105, 115 call spread, still $10 wide. You could only, let's say it's make $380, right? We paid $380 for it. The max you can make is $6.20 or $620, right? If you do this with a higher pop, it's a trade-off, right? Higher pop, basically no extrinsic. Matter of fact, it's almost positive extrinsic now, which is where you'd like to be. But in this case, if you're paying $5.20 for this, well, the most you can make is $480, right? With a higher pop. It's just really all about how you want to do it. My trade with zero extrinsic back ratio, it should be close to no extrinsic. In this case, it is paying $85, and that's way less than $380 or whatever dollars, right? It's not positive, but your pop is 47%, which gets close to buying stock, very similar. You sell this call to eliminate a lot of the extrinsic value, right? So again, I mean, I could buy just this outright, but I'm pitting up $2,000. That's a lot. It's a 43% pop, and there's extrinsic value there that I'm paying. Versus like if I do this, right? And again, you don't want to do two. You just want to do one of them to offset. Oh shoot, hold on. Such a glare. Here we go. And then if you just do the one, that offsets a lot of that extrinsic, right? When we had two of these, you could see that when you had just these calls, you could see how much extrinsic it was. Now you sold that, you offset a lot of extrinsic. It's essentially close to zero, not quite. The ideal zebra is basically zero extrinsic, but in this case, you're close to zero. You have a 47% pop, 47% chance of making 50% of the money, and it's very risk defined. So in this case, we paid, stock has bounced since then, which is nice, but we paid $15.65. Why am I choosing Walmart? This is the real thesis of the trade. So in a high interest rate environment, which we find ourselves currently in, a lot of people are eventually probably shifting how they spend money and where they spend money. And you would imagine to some degree, lower income people are probably going to try and go more and more to Walmart to get their stuff. Things are getting expensive. You've been in regular grocery stores, you've been in the Target grocery stores, things are a little bit more expensive than they would be in a Walmart. And they're a discount store, right? They're a lower discount store. And so that's kind of the idea behind this. Even in an environment where they start to lower interest rates, I mean, I think, this still holds up and Walmart has a lot of cash. Despite what we just saw in earnings, I still think that this is the kind of trade you want to be in an environment where it's high interest rate, right? So that's kind of the thesis of the trade. And it just so happens that, again, the stock being down where it is, it was close to, the low was 102 more recently. That's, we haven't seen that since last November, right? When it was on the way up. So I just feel like this is a pretty decent dip to buy. And the way I wanted to buy that dip, I feel like at these levels, we could see a strong bounce back. And if we do, I want to be in a zero extrinsic versus a calendar spread that's 2 months wide. And again, I only did the short October because they didn't have November at the time. but I'd rather be in this spread where I get a lot heavier delta, right? And this really does act kind of like stock when you look at the analysis. It's like being long stock or being long a call in some degrees, but yet you don't have the extrinsic value to worry about. And that's kind of nice. I gave myself November to give it a little time. And we're also in an earnings cycle, which is kind of nice as well. I don't have to worry about vol considerations that much as far as vol coming in. This is already a fairly low vol product. It's low IVR 21. And I think Walmart vol, and just implied vol is in the 20s itself, 27. That's fairly low. I mean, I want to be selling tech vol, which is 80, 90 vol. I sold NBS last week. That's a 90 vol. I want to be selling tech vol all day and buying 20-something vol all day. Like that's kind of the spread you want to have off in the book. I want to be long 20-something vol. I want to be short 80, 90 vol, right? If it makes sense, if it's not crazy and it's not moving around a lot. That's kind of what you want to have in the portfolio. And that's kind of how you win day in and day out. That's how you structure the portfolio. So I went with the zebra, 95, 100. Again, the thesis is the idea of interest rates. If they're going to stay elevated for some time, then we would rather be in a name like this as a discount store that most likely people are going to be flocking to more if interest rates are going to be elevated and people are paying more for cars and paying more on interest rate on debt. This is the area one you want to land in. And again, this fits in well with the book because Costco is one where I'm long that vol, I would say in the form of a diagonal. I know it says the IV is high, but again, you got to look at the actual vol itself. I mean, it's in the 20s, and that's exactly where I want to be. And again, I'm long this, short that. And in general, I've been long some of these consumer staples type of names for that reason, because I feel like that spread has been working for the most part. If you're long consumer staples, if you're long Delta somehow and short vol and tech, and you got to find the right ones, that's kind of worked out well for me in the portfolio. And so that's why this Walmart trade kind of fits in with some of the other stuff that I have. I'm just going to keep that going for the most part. So that's just kind of working into the theory this week. I think we're going to find out a lot about rates. I think we're going to find out a lot about tech from NVIDIA throughout the week. But I wanted something that was kind of loosely tied to that interest rate story and not so much tech, because I got a lot of that already. And Walmart's been one of the anchors in the portfolio, so I've kept that going. The other thing I did, again, I told you I was long initially the 100 strike. I was actually long, I think, the 100 strike here in December, and I was short two of these in, I was long two of those in December and short two of these in October. And since these were so low, I decided to change this over to a zebra in November. But just to show you guys who follow trades as well, I took those, that short and actually bought those back in October and sold this. So now my December, which was part of a diagonal, is now also a zebra in December. So I'm long to zebra in December and long to zebra in November, but the November zebra is our trade of the day. So let's pull the graph up here and show the people. Paid $1,565 or $15.65 to buy two of the 95 calls and sell one of the 100 calls. The break even is 105.65, which we're not that far from actually. And again, it's an uncapped upside. At that point, it basically acts like stock, right? From that point lower. It also acts like stock when it goes down too, to the downside. And so the most I'm going to lose on this is what I paid. And again, that's where it really, everybody varies. That's where you have to find what's comfortable for you. Again, this trade really works when you're long two in the money calls and short one, which is essentially at the money call. That's how you get the zero extrinsic. But just keep in mind, this really acts like stock. And you can do this on any type of stock you want. I mean, you really can. It works well on a stock that's, I would say, in the $50 to $100 range, right? Because those are stocks that can really move more. And I would say those are stocks that have the amount of strikes where you can actually make this work to get zero extrinsic and then also a decent delta on the calls. So this is it. Walmart Zebra in November. Break even of 105.65, which we're kind of close to now. But again, this is somewhat of an interest rate play on the market here. So that's my trade of the day. Walmart Zebra in November, 95, 100 Zebra. And I'm going to get you over to Mike for his trade of the day.
What's up, everyone? Welcome back. We got another trade idea for you, and I'm going to NVIDIA. NVIDIA, I don't know if you know, but they have earnings after the close on Wednesday. So, of course, we got to get some positioning in there. I just got an earnings preview out on the News and Insights tab on tastylive.com, so check that out if you want a little more detail and what to watch. There's a bullish case, a bearish case, got some charts in there, so check that out, News and Insights tab on tastylive.com. Yeah, it's going to be kind of wild to see what happens here, but NVIDIA has had surprising weakness. If you look at a chart of what we've seen recently, just 7 days ago, we were trading at 225. We are now down to 210 after today's slide. And that would mark a 7th day in a row where we've seen a red close in NVIDIA from the previous open. And today's is actually the worst of the bunch. So really wild to see the weakness in NVIDIA. I think the market is preparing for big expenses. I think everybody knows that they're going to blow out their numbers in terms of earnings per share and revenue. But it's really like, how are they going to afford the next wave of cost? And that is really going to be the camel, the situation that breaks the camel's back here, if it's going to happen. And a market move to the downside seems, interestingly enough, it seems likely that we get some kind of fade here, even after all this weakness. But just in case we don't, we saw this happen with SpaceX earlier, where the entire market is neutral to bearish on a product, and then boom, you get the inverse reaction here. So I'm going with an upside trade in NVIDIA, but most importantly, I'm going with a longer term trade here. I went out to November, which I think makes a lot of sense if you think over time we can see a higher print in NVIDIA, at least from where we are right now after the 7th day in a row that we are seeing right now. I wanted to get in sooner than later, just in case we get a rally in the markets pre-earnings. It's possible that I just take this off before the Wednesday announcement, just to be clear. But what better scenario if you're trying to place a bullish trade than to get in on one of the worst days it's seen, down 2% right now, and this is the 7th day in a row that we've seen a red number in NVIDIA. So maybe we get a pre-earnings rally in NVIDIA, maybe not, but either way, I went out to November to encompass not only this earnings announcement, but likely the next earnings announcement as well. You can kind of see that here with the volatility increase. You've got 42.5% in October, and then it jumps to 43.5% in November. And you can see there's a big vol expansion from 19.5, 22.5, all the way up to 30.5. So a big jump in implied volatility in November. We'll likely get another earnings report right around this cycle, but even if not, 88 days is plenty of time for this trade to work out. So I went to the 88-day cycle, and I bought the 220 strike call for $1,300. The implied volatility here is, on the lower end. It's not the lowest it's been, which is why you see an IV rank of 37.5, but still 40% for an equity, especially NVIDIA, a tech stock, a leading tech stock. 43% is still pretty low. So I went out there and just gave myself as much time as possible, and then I sold the weekly cycle for about $2 and change as well. So the total package, I routed this trade for just over $1,000. 1031 was my net debit paid, and there's a few reasons why I like this trade. So let's pop over to the analysis tab. We can look at this holistically, but as we always do, look at the theoretical P&L, not the expiration P&L, because the theoretical P&L for a calendar spread, which is what this trade is, there is no intrinsic value possibility. So this is all extrinsic value, so we have to look at the theoretical graph. But if we kick this to Friday, which is when this short option will expire, we'll get all of the value out of the short option, which results in a $200 and change credit received. That will go to zero regardless of where NVIDIA goes. We might have some intrinsic value associated with an upside move, which would be great. As you can see, we're looking for that upside move. But just based on the extrinsic value collection alone, we could be looking at a decent winner here. But we do have to reduce volatility. So the current implied volatility in the 88-day cycle is 43.5%. If we look at the chart and you plot implied volatility on the bottom half of your chart, you can see over the course of this year, if we click year to date on the bottom here, we can see we've got a high implied volatility of about 60%. That was in the initial sell-off, closer to 170. And we've got a low implied volatility print of around 36%. So when I was messing around with the implied volatilities here, I actually did crush the implied volatility down to 36, 37%, just to get the worst case scenario. If we get a vol crush and we get back down to the lows of implied volatility in NVIDIA after this earnings announcement, what could that look like? So if we crush implied volatility in the 88-day cycle down to 36%, if we do 7 percentage points here, bring it down to 36.5, we are looking at a max profit on Friday, if we hold it all the way to Friday, of about $450. And this is the most conservative view, I would say. If we assume that vol is going to drop down to the lowest level and we hold this to Friday, this is what we're looking at. Any kind of upside move, we're going to be good. Can't take too much of an upside move here. A move above 235-ish would result in a theoretical loss to the upside. So I really think, based on the other earnings announcements we've seen, I think NVIDIA might have a hard time having a huge move to the upside. I think it could have a bigger move to the downside than the upside. But still, I think this is one of those products that is so big from a market cap standpoint. If you click on the overview tab in the upper right, you can see we're dealing with a $5.2 trillion company. So I think that helps explain why the implied volatility of this earnings cycle, 4 days to go, is still pretty low. It's nothing crazy. I mean, we have a $200 stock and it's an $11 implied stock price move. So that's 5% of the stock price. On the lower end, usually we see these things fall between 5 and 10% of the stock price in terms of notional value movement, but really nothing too crazy here. But again, this is a $5 trillion company. So if we saw a 2, 3, 4 standard deviation move, that's a gigantic market cap move, and it would be violent if we saw it to the downside. So I think really the implied volatility being low is a product of the market cap being so high with the current stock price, and just the notion of these massive moves, trillions of dollars in and out, would take a big move in NVIDIA, and I think it prevents NVIDIA from realizing that move just by how big this product actually is at a $210 price point. So all that to say, it's certainly possible to see a big move, twice the expected move, 3 times the expected move even. But again, that would be a gigantic move from earnings. There'd have to be some crazy surprise for that to happen, I think. But either way, if we go back to the curve analysis, if we assume we've got an 11-point move implied here, if we get a move down to 200, which would be the earnings expected move, we're looking at about a $300 loss. And if we get a 10-point move to the upside, that's of course going to be our sweet spot, but we don't start taking on risk until we get a 2.5 times standard deviation move, twice, 2.5 times the expected move here to the upside. So I'm not too worried about the upside risk in this call calendar spread, which is why I went with the calendar spread instead of a diagonal spread, simply because I think, just notionally speaking, it feels like there's less gap risk to the upside for a gigantic move to the upside. But you never know. Either way, I'm comfortable with the risk here. But another thing that I wanted to bring up is the fact that going to November opens up a lot of wiggle room in terms of defensive mechanics. So because I'm in November, I not only have the ability to buy back the 4-day and bring it to September, but I can also bring it from September into October. So going out to November and paying a little bit more for that 220, you can see if I went to October, I would pay significantly less, only $8.50 for this option relative to $13 for the long option in November. But with these types of strategies, like I say, you get what you pay for. You get another month of defensive mechanic if you have a need to do so. So I can buy back the 4-day, roll to September. If we look at what that looks like now, the current roll from the 4-day to September is about $2.60 after the vol crushes, especially the 4-day vol crush and then September's vol crush. September's vol crush will likely be similar to October and November, a little bit more though. You can see there's 3 percentage points higher here in September. So you'd have to bake in another 3 percentage points to your analysis in September relative to October and November. But either way, I would expect I could pick up probably $1, even on a sell-off. If we go down to 200 and it's just an expected move sell-off, I'm willing to bet I could buy back the 4-day and go to September 220. This would probably be trading for $1 or something like that, and that would be my yield in terms of credit received, because the 4-day would be worthless if we got a 10-point sell-off. So I'm looking at that as a potential defensive mechanic. If we get a neutral move and NVIDIA doesn't move at all, and we get some premium out of the 4-day, and maybe we see a little bit of loss in the long option due to a great vol collapse, I think what I would do is go from the 4-day to September, and I would probably go to a diagonal spread. If I can go to a 10-point wide diagonal spread to the upside and still pick up $1, I'll probably do that over sticking with the calendar, but we'll have to see what happens there. Nothing wrong with going to a calendar and just reducing basis aggressively, but on a non-move, if I have the ability to move to a diagonal spread where I have no risk to the upside and much more max profit potential, especially if the news is good, if it's like, if we get a non-move in NVIDIA, but the numbers are insane and they say all positive things, I think I'd be more inclined to set up a longer-term diagonal spread versus more conservative in terms of cost basis reduction by sticking with a calendar spread and rolling out to the same strike, the 220 strike in September. And last but not least, if I really wanted to, I could go to like a crab trade in September or a diagonal spread in October. If I wanted to just go super long-term, same kind of sentiment if I went to September in a diagonal spread and I picked up $1. If I go to October and I see that I could pick up, $2 or $3 to go to not a 10-point wide, but like a 15-point wide or a 20-point wide, I could do that as well. So giving myself another month to roll into defensively, I think is worth the extra couple $100 that you're paying for the November option. And again, we've seen this happen before. Another thing to bring up, if NVIDIA sells off, especially if it's a big sell-off, if it's like a 20-point sell-off and we're sub 200 again, I think the public is probably going to want to buy this thing. So I think that just gives me more incentive to go longer term, give myself more time for a reversal to happen, a gap fill to happen if we do get a 10 or 20-point sell-off in NVIDIA here. So really, I think looking at the curve analysis again, this analysis was based on a 7% vol collapse, which again would bring us to the lowest print we've seen in NVIDIA, 36.5%, 37%. It's the lowest print we've seen all year in NVIDIA, and we've gone through some craziness in this market, that's for sure. So even at the low point, 37% here, that would be the conservative view. But if we look at the recent implied volatility low of 40%, which we've hit a couple of times here, 40, 41%, that's going to be much better for this position, right? Because my long option will retain a lot more extrinsic value. Every percentage point I bring this back up, that's more extrinsic value infused into the analysis. We're still assuming that I get all of the premium out of the short option since we're evaluating at the August 28th cycle. So if I bring this back up to 40%, 39.5, now instead of a $450 max profit right at 220, we're looking at a $580 max profit from a Theo standpoint. And we're looking at a lot more profitability from a neutral move or a non-move. You can see here, if I get a 7% vol crush, I'm basically flat in terms of P&L, 70 cents if we just open right where we are right now. But if I can retain a few more percentage points, that turns into $170. So a lot more profitability potential if NVIDIA retains some implied volatility this week. But if we bring this up one more percentage point, that brings us to 40.5, which is right around that low as well. And that brings us to over $600 in max profit potential. So you can see every percentage point I'm increasing from my implied volatility crush, still a net decrease of 3%, but we went from down 7% to down 3%, and my max profit went up another $200. So clearly, these are very sensitive trades in terms of implied volatility and where it lands after. But I think that between 37 and 40% is where I'm expecting it. So here's the trade of the day, 220 call calendar. Went out to November to give myself another month to roll into with a short option, paying more to get more defensive mechanics there. $10.31 debit. Theoretical max profit right around $450. That was with a 7% vol crush in the 88-day cycle and holding to Friday, capturing all that short premium in the short option. Max risk, of course, is 1031 if this thing just like collapses and all these options expire worthless. I doubt I'll have 0 defensive mechanics here, even on a sell-off, because I've got 88 days and 86 days after the earnings announcement on Wednesday for me to manage this thing. But I can buy back the 4-day, roll it to September, roll it to October. So I got multiple defensive mechanics there, and I can move my risk below $1,000. That's for sure. I could even crab trade it off, especially if I went to the October cycle. I think that's what I would do, is just go to a really wide crab trade, pick up $200 or $300, call it a day, and see if we get a gap reversal there. But that's it for me. We got plenty more trade ideas coming your way right now.
Poor Mike has PTSD about kicking it over to Errol when it was actually me last week. He's too afraid to guess who he's kicking it over to now. Thank you, Mike, for covering the little tiny company reporting earnings on Thursday, NVIDIA. I'm here to cover the company that the real big dogs want to hear about that's reporting earnings on Thursday, and that is Dollar Tree. Dollar Tree and Dollar General both report their earnings on Thursday. I did much calculus to land on Dollar Tree in the first place, which I'll get into in a minute here. But I'm deciding to take a swing on Dollar Tree in the bullish direction here ahead of their earnings call. Now, I will say, this is a situation that I really, the timing of this trade, I do not love. I do not want to express bullish sentiment on a day like today. And for context, these are not all-time highs. Far, far from it. Just to give everybody some context. When I initially looked at that, I was like, oh, are we approaching all-time highs right here? No. Dollar Tree has been a $200 stock in its history, but close to it. But I'm stepping in front of this move here and getting a little bit bullish into this call on Thursday. Now, first and foremost, I had a working order. Okay, I guess I got 3 of them. I got 4 of them. Oh, I never canceled my original order. That's so brutal. Okay, whatever. I have 4 of these. I meant to only have 2. I say again, it's live TV, people. All right, I forgot I had a working order, so we're double the size that I wanted to be on this position. That's okay. I'm convicted. That's actually a way better fill than I got initially anyway, so I'll take it. But as we look at this trade here, the first thing I had to decide, actually, let me back up even a little further than that. I was looking into the rest of the week and thinking, what might be some catalysts, what might be some binary events that are happening that I could fade or that I could try to get out ahead of. And I landed on, Thursday's earnings reports. NVIDIA, obviously going to have all the coverage in the world, and Mike had already called dibs on trading NVIDIA, so I had to find something else to go after. And these dollar stores are very interesting to me right now because of the sentiment that we've seen in the broader market over the past few months. Now, obviously, everybody's privy to the fact that if I jump over to this SPX chart here, we had, a little bit of drawdown would even be overstating it, but a little bit of consolidation off the top here from pretty much the beginning of June through the end of July. Actually almost perfectly to the day on both of those. The breakout comes, this is literally August 3rd, the first trading day of August, and this first candle of the sell-off was June 3rd. So about as perfect of a 2 calendar month consolidation phase as possible. But as I mentioned many times throughout the course of this consolidation phase, and as Chris Vecchio accurately mentioned a lot of times along this consolidation phase as well, we jump over to RSP, the equal weighted S&P 500, it actually never stopped growing. So this paints a picture of rotation, of capital rotation, not of weakness in the market. People just took their money out of the big tech stocks that are the heaviest weighted in the S&P 500 and rotated them into safer, smaller growers at the bottom. Same sentiment is reflected if we look at the Russell, IWM, Russell 2000. You can see that it really never stopped growing either. There was this little blip July was a weak month for the Russell as well, but June, it did not see the same drawdown as the broader S&P 500, Russell 2000, smaller companies, small caps, continued to do well. So I was thinking, okay, well, with NVIDIA taking out all the air out of the room with its earnings call later this week, are there any small caps here that might be attractive? And I was quickly drawn to the dollar stores because the current economic environment is squeezing people just a little bit. I'm not going to sit here and, go on some tirade about how prices are so terrible. Inflation happens, all right? I miss the $1 McChicken as much as the next guy. I miss the $1 Chipotle chicken melts at Taco Bell. Oh boy, do I miss those. I don't even know if that's a product on the menu anymore. If it is, I'm sure it's $3. Inflation happens, and I understand that. But with gas prices where they are, with grocery prices a little bit elevated in some different things, I wouldn't be surprised if we see the broader public shift their consumer habits just a little bit into some of these cheaper alternatives, such as dollar stores. Now, as far as choosing between Dollar Tree and Dollar General, I I did some serious mental gymnastics on this one, so stay with me. And let me say, before I say any of this, in broad strokes, I think this entire sentiment I'm about to outline with Dollar Tree could totally apply to Dollar General as well. If you like that more, if you like the liquidity there more, the levels, if you're just more comfortable trading Dollar General, if you have a Dollar General near you and you want to trade it, I think all this could totally apply to Dollar General. I landed on Dollar Tree personally because Dollar Tree, I feel, would be, and this is a baseless claim, I feel it would be a little bit more cyclical than Dollar General, because if you think about where you see Dollar Trees will pop up in, nice areas. It's not like Dollar Generals. Think about the average Dollar General in your mind. Myself, being from Texas, it's a Dollar General in the middle of a field with no other buildings as far as the eye can see. I think the consumers using that Dollar General are going to use that Dollar General regardless of broader economic conditions. I think that's their grocery store, their daily grocery store. And I'm not hating on that at all. I went on a whole rant about how much I love Dollar General earlier today. But I think that they would be less impacted by the cyclical nature of things and of consumers shifting their habits back and forth. Whereas Dollar Tree, these will pop up, like the Dollar Tree in my hometown in Texas is at a strip center. There's a TJ Maxx, a Ross, a Walmart. Then at the other end of the Walmart, there's a Dollar Tree. These Dollar Trees, they pop up in more developed areas where I feel that cyclical spending nature. Again, this is all feel. Like I said, I'm sort of talking out my butt right now as I make these conclusions, but I feel it would be a little bit more cyclical. So that's why I've landed on a Dollar Tree, even though I'm sure as it pertains to the bottom line, Dollar General and Dollar Tree are going to have similar moves after earnings. So that said, I have stepped in front of this at a bullish time for the company. They're up, 2.7% today, a little over $3. I wish this is one that I could have gotten into at the open. We'd already be sitting pretty. I don't love stepping in front of this move just because it's the nature of the market to give a little bit of this back tomorrow. And quite frankly, I wouldn't fault anybody if you want to wait a day or two to put this trade on. A better entry very well may present itself. I just have to get things on before I present the trades here. So if you want to just put a pin in this one and leave it for a few days, wouldn't fault you for that at all. Wait for a potentially better entry. Although maybe we just run straight up into the earnings call. I'll get into that in a moment. So the trade itself, I have gone for a short put vertical. I am selling premium against the upside move here. Usually I would not like to do that. Usually that would deflate put side premium a little bit. But at a 66 IVR and at a 108 IVR on the expiration cycle that we're talking about here, there's plenty of premium on both sides of the coin here. I've jumped in on this, the 134, 135, which is now straddling the money. And this is, we just barely dropped below 135 as I've been talking here, 134.96 currently. This is the trade right now, giving you 57 cents of credit for $43 of buying power, which is even better than all my entries. I initially got this filled at 45, which is what you will see on the art card at the end of this. And then again, as we just started, I forgot I had a working order at 50. So my cost basis is 47.5. You can do $10 better than that right now, on your credit, I should say, and better on the buying power requirement as well. The $50 ones cost me 50 in buying power a piece, and the 45s cost me 55 in buying power a piece. You can see there's math happening here that get us to $1 no matter what. And in this case, we're looking at 57 of credit for 43 of buying power. So even more disproportionate, much, much better than what I got on either one of my trades. This is a much more favorable entry. All I'm really saying with this trade is I think that post-earnings, Dollar Tree is where it is higher than it is right now. What happens in the 3 days running up to earnings, I'm not entirely sure. Like I said, there's probably a slightly better entry point that you could find for this trade. And it's already a better entry point right now than when I put it on 20 minutes ago. So that's sort of case in point right there. But I'm just saying that Dollar Tree will be higher than 135 following that earnings call. Now, with that elevated IV, the 108 IV that I mentioned at this strike, at this expiration, obviously that's because the earnings call is right there in the equation, and it makes it much more difficult to judge what's going to happen here. But provided that all goes well and Dollar Tree goes into this call and winds up unched or slightly up, there's plenty of up inside that would work for me. The expected move on this is $15 in either direction. So quite a wide range that we're pricing in there. So I could have any up inside move, all these strikes from 135 all the way out to 150. I'd be totally fine with Dollar Tree doing any of those things. And then obviously immediately after that earnings call on Friday intraday, all the volatility is going to get sucked out of this thing with the earnings call, the binary event out of the way. And provided that I'm directionally correct, I shouldn't have to hold this until the end of the day on Friday for max profit. It would be something like there'd be $8 left on it come Friday morning, and I could just go ahead and take that exit. Apologies. Still under the weather from last week. We're getting there. So that's the way that I've chosen to attack things. Now, I like how small this is. That's also a part of it and part of why I chose it over Dollar General. I'm able to get this at a very small size. Now, I do have 4 of them, unbeknownst to me, until the other 2 got filled at the beginning of this. So total cost basis here is $210 across these 4. Is that math? 50, 50, 55, 55. Yeah. So average of what is that? 52.50 a piece. That makes sense. Across these 4, only wanted 2 of them to keep this trade close to $100 in size. This 4, obviously, as I've alluded to a number of times now, does not reflect my true conviction about this trade. I wanted this to be about a $100 trade. I wind up staring at a $200 trade here. It's moved slightly off my entry, so there's not a quick, easy exit. Should we get just a little bit of a move up and this moves back to my original entry on that second position, I may just cut it for the break even just to be back to my original size. But I like the small size of this. It gives you a lot of mobility. When I was initially looking to enter at the $50 of credit for $50 of buying power, perfect 1-to-1 risk profile, I was like, man, could this be more perfect? Perfect little $50 things that I can stack on top of one another and choose the exact size I want on this trade to a perfect increment of 50. So I decided on $100, which is a smaller trade for me. $200 is kind of the average trade size that I go for. And obviously you guys have seen me take much bigger swings in the past as well. Keeping it a little bit smaller. This isn't my most convicted trade. I'm not as convicted about this as I was about Walmart and what was the other one? Boston Beer that I gave out last week, both of which are going swimmingly, by the way. But I do like it enough. The volatility is here because of the upcoming binary event. I think that the rotation into small caps that we saw exemplifies what we are going to, see out of the broader economy over the same time, that there's going to be a rotation of consumer habits. And it just takes a little bit. That's the thing. And obviously in this environment, guidance matters a lot, but Dollar Tree's not a tech company. Okay. So there's a lot that I can strip away from this. These tech earnings are really hard to pick apart right now. I actually see this is dropped below my entry. Let me see if I can't get out of 2 of these real quick while we're here. See if I can get a fill at 47 and scalp. $3 scalp on Dollar Tree right here. This is professional trading you're watching. We'll see if we can get a fill through there. In fact, I'm willing to get slipped out to just $1 of profit if they want to give it to me. So yeah, we'll see if we can get a fill there. Let me just move back to 50 now. Not the end of the world if we can't. Maybe I'll forget about it for another 20 minutes and it'll get filled then. But yeah, I just think that capital rotation that we saw in the market, that little bit of what looked like weakness in the S&P 500, but really was just capital rotation. I think we're going to see that play out for Dollar Tree as well. And like I was just saying, this isn't a tech company. Trading these tech earnings is a very difficult thing to do in this environment because there are so many factors, and because AI spending is this really nuanced thing. It's tough to even determine how the market is going to react to that. I mean, because that's the crazy thing is if I gave you like every bit of information about NVIDIA earnings ahead of time, it would still be hard to profitably trade it just because you don't know how the market is going to react to these different bits of information. So all that becomes very nuanced and difficult. With a brick and mortar like Dollar Tree, all that becomes a lot easier. The core numbers matter a lot more. Their guidance still matters, but a lot less than what we're talking about with these tech companies. They're not going to come out and say that they spent $3 billion. Nobody was planning on them to spend. So I think the core numbers matter a lot more with Dollar Tree than what we usually are talking about with earnings reports in this environment. And I think it just takes a tiny little beat, 1% on revenue, 1% on EPS beat to push us just one little leg higher. And then this trade winds up closing for a max profit on Friday. So there's the full extent of the trade you see on screen here. As I said, you can get a much better fill than I did already. Even currently, the mid price is still sitting at 50. So this would be slightly adjusted if you were to enter right this moment to a max profit of 50 and a max loss of $50. You can scale this as much as you want. It's good for small accounts and large accounts alike. You can just take a lot of them if you want to mirror the same trade in a large account if you have a bigger risk appetite than me. But yes, I am selling the 135, buying the 134 on August 28th, this Friday, expiration cycle, isolating that binary event and hoping for the tiny little leg higher. So that's going to do it for my trade of the day for today. I will now kick it over to Errol, who is just a short way from me right outside this studio, for his wonderful trade of the day. Errol, take it away.
What's going on, guys? Welcome back to Trade of the Day. I know it almost feels like in the first hour of market open, we've been seeing a lot of volatility. Then after the first hour, it feels like things really calm down. But within all that volatility, we've been using that as an opportunity to manage a lot of the trades that we've been having on for trade ideas of the day. So with that being said, I got an idea that I want to see what you guys see and get your guys' thoughts and opinions on. But before we do that, let's go ahead and jump right into the Tasty platform, check out some of the positions that we've been looking at. All these positions are positions that we put on for trade of the day ideas, and we've just been managing them as we go day by day. And with that being said, Apple at the top of the list, down about $30 on the day, but on the overall position, we're about break even. 25 days left to expiration. We're going to be forced to manage this one by the end of the week. We're going to be just at 21 days to expiration. And then App 11, another one that's sliding a little bit more on the day. Again, this one has been one that has gapped down massively off of earnings, and we've been making new lows, post earnings. So we're gonna have to be patient, see when this market wants to offer us some type of reversal. And then IBIT, man, that crypto market cannot be understated with how aggressive these moves to the upside have been lately. And I mean, just looking at IBIT, right, we're about flat on the day almost, or up about 1 point. But over the last 4 days, last week, Trump was speaking about crypto during a press conference. He was also mentioning Hyperliquid. And then even earlier today, when Gus and I were touching on that Clarity Act, I'm going to be so curious to see how crypto responds depending on what the outcome of that Clarity Act is going to be. What if the Clarity Act doesn't go through? What if it's delayed a little bit longer? Will that mean we will see some pullbacks in the overall crypto market since it's gotten a little bit ahead of itself? We'll keep an eye on it, but we're hoping for a little bit of a pullback. IBIT's pulling back a little bit as we speak, but we had to roll that call side up a little bit. Or I'm sorry, we rolled that put side up just a little bit, collect an additional credit, and then we're going to hope that IBIT can at least pull back within our bread basket of strikes that we have set out for it. We also have some short delta on in QQQ. We're up a little bit on this. It's actually it was a skewed iron condor to the downside, just very slightly, but more so just a delta neutral trade, right? We've talked so much about if the market's going to make another all-time high, or if the market is going to make a new swing low from the low from when Leopold was liquidated and all of those assets. It seemed to put in a short-term bottom for the market, but is that the low of the market, or are we going to head back to another all-time high? I don't want to go back and forth in terms of where this market is going to go. So as we trade right back inside that summer range we've been looking at, I decided to get on an iron condor. We were able to collect about 235, so almost a half of the credit, almost a half of the width we received with the credit on QQQ. And then SMH, a little bit of short delta on these semiconductor names. We're up about $24 overall break-even kind of ish position. This thing can kind of flip on a dime here, but we do still have 25 days left to expiration. I'm sorry, 98 days left to expiration. And SMH seen a little bit more downside movement, which is really nice just for how the overall position or the overall portfolio is positioned, right? We have some short delta on in semiconductors. We have some short delta on in the memory names. We have a little bit of short delta on in QQQ, more delta neutral. And then we have App 11, Apple, and we have a little bit of crypto exposure. We took off SanDisk today. SanDisk worked out pretty well. We've been seeing more downside volatility there. Just wanting to take advantage of this volatility. Glad we took it off earlier in the day because it looks like we've seen a rally from the lows. So this morning we had a sell-off all the way down to 1416, so 1,416. And then since then, we went to a high of 1516. So we've rallied over 100 points from the morning lows, just to show you again how volatile some of these markets can be. And I mean, this almost makes it attractive to maybe even get on some more short delta again, because with how directional this market has been since the open and how it's recovered off of its lows, I mean, it's almost another opportunity to re-short if you were looking to get more short delta on in some of those memory names. And then Walmart's really been the star of the portfolio today, right? Massive gap down post earnings. Friday we slid to the downside a little bit more than today. We're finally seeing that initial pop we were looking for. This one was a zebra, so we're up about $130 on this one with just a few days, and we're actually going to go ahead and take this one off, do a little bit of management, just because it is a zebra. So if this turns around, right, and makes a new low, we're in trouble, right? We have 25 days left to expiration. It's a very directional trade that we have on here in Walmart. So we'll take the reversal that we were looking for, and then we will use those profits to finance the rest of the trades that we have on in the portfolio and for trade of the day. Now, back to the actual trade of the day. I've been keeping an eye on gold. I don't know how you guys feel on gold right now. I love the rally that we're seeing lately. I know Ilya's having an absolute field day today, considering the continuation that we're seeing in these markets. I'd put on this volume profile just to get an idea of where most of the trading activity took place. And I would love to see a pullback near that point of control or near that value area low. I love the extension and the consecutive green days that we've seen on in gold. So I want to get on a little bit of short delta. My overall thesis on the metals, right? My overall thesis is that we topped out. Like after we went on this euphoric run at the end of January this year, I believe that's going to be the top for the year. So anytime I see any pops near that high, that risk to reward seems to be a little bit more favorable for some downside action. And that's only if you have that short bias right on these metals. And because again, we're getting a little bit more of a pop, it looks more attractive to get on some short delta on GLD near 430 rather than 360, which was in the hole where we saw a little bit more consolidation. So we're gonna see what we get here. Get on a little bit of short delta in gold. You can't go wrong with that. We're going to look at the 25 days till expiration. Because this is more of a momentum trade, we're actually going to be buying the options. Don't shoot me. I know. But we're going to be buying the options on this one. We could do 25 days till expiration. I also want to see how the options are looking for next Friday, which is going to be about, 4 to 8? I think next Friday is going to be 11, 10, 9, 7. We'll go here, 7. You know what? We're going to go here 11 days till expiration. If we're looking at the 412, if we're looking for any type of pullback within the next couple of weeks, next 7 to 14 days, would love to see some moves made at least back to 415 would be really ideal. So I'm going to be looking at the 412. I can even look at the 415s. Maybe we gain a little bit more extrinsic value as we get closer to the strike. So this is a very directional position, right? Whenever you buy options, not only do you have to get the direction right, you have to kind of get the timing right as well. So that's just something to take into account whenever we put on these different types of trades. But I think different types of option strategies require different types of scenarios. So that's what we're going to do for this case. Just looking for a little bit of a pullback because of the momentum that we're seeing right now in the metals. But we will let this position cook. Let's see if we can adjust these strikes a little bit there. Replace that. Maybe we go down. Let's go ahead and clear that. That was Walmart. Let's go ahead and try to get GLD back in there. Oh, there we go. We got filled 415 GLD. Yeah, there we go. We got filled. 415 gold expires in about 10 days. September 3rd cycle. So we're just looking for a little bit of downside action. If you're short right now in the metals, maybe you want to sell an out of the money call spread. Maybe you want to utilize or get some metals exposure via the silver products. That's also another avenue that you could take, but I'm comfortable with this position. I like it so far. Most of the trades that we put on in here have been very momentum style trades. So whenever we see SanDisk going back near the highs. Maybe we see Walmart going back near the highs. We're usually looking to fade some of those moves. So you can kind of get an idea for the style of trades we typically like to put on in here. So we got filled on gold. 10 days left to expiration. We'll be patient for it. And Walmart is still rallying as we try our best to get out of this position here. So let's go and close this at full one more time. See if we can get a fill there. See what we can get there. Big deal. I'm not sure what that emoji means. Maybe that's how you're feeling after we put on this directional gold trade here today. But it looks like we just got filled over here on Walmart. So we're fully out of that position. I'm going to go ahead and post that one to the trade page so that it's official. I posted the SanDisk trade to the trade page as well. We had, what did we do in SanDisk again? So SanDisk, if I can grab SanDisk again, SNDK. SanDisk, so we ended up selling SanDisk for $330, and then we bought SanDisk back today for 153. So we collected just about 50% of the credit received on order entry in that one. We still had 25 days left to expiration. But again, those directional moves and those memory names can be so volatile. Like if you have the bandwidth to do so, and you're very much so like a directional trader, I mean, the ranges in these memory names are unheard of. I mean, I don't know other products in the market that are offering that level of range right now. So if the ranges are too massive for the type of trading that you like to do, but you still want to take part, maybe you could size down a little bit to engage with that market. But the swings can't be understated. Again, the swing lows are at 997, and right now we're trading at 1485, and that's after pulling back from those previous swing highs at 1825. So something to keep an eye on. But I think this is going to be a really fun market to trade. Going to stay short bias on a lot of these names, like the memory names, and also like some of the metals. So we're going to continue to put on trades that align with that bias that we kind of have on some of these names. But if you are just joining us, we did a little bit of trade management today. We took off SanDisk. We still have on the out of the money call spread on an Apple. We collected $1.98 in that one. 25 days left to expiration. Not doing too hot on the day. Apple's still kind of rallying near its highs, but we did have that massive gap down post earnings, and now we've just been consolidating near those lows. So the next question is going to be: are we going to be able to fill this gap to the upside that we put in a couple weeks ago, or will we see more downside action in Apple, and will we go test that 275 kind of area back on Apple? It looks like over here on June 26th, we had one of the most volume traded days on Apple that we've seen its entire year. So we'll keep an eye on that. The next trade that we have on in there is App 11. We sold an out of the money put spread, got a little bit of long delta on in here. The short put that we sold is being tested right now, so we're just a little bit on the dance floor. And right now we're just hoping for a pop, right? We've been catching a little bit of a falling knife post earnings after the gap down, just kind of stair-stepping lower there with the low being at 297.50. Gonna have to be patient there. We do still have 25 days left till expiration. And if you're just joining us today, we put on the gold trade, which we bought the 415 put. So we're just looking for some directional action to the downside. Again, your max loss on something like a gold put is going to be the debit that you pay on that order entry. But we're not going to risk the entire capital that took to buy that option, right? There's no reason to do that, because if this momentum continues to the upside, right, we can always just stop out of our position and then reposition with the same type of position if that's what we want to do. But right, in my opinion, there's no sense in letting the trade continuously just run against you even after invalidating your trade thesis. So that's a little bit of our thought process there on gold. And then IBIT still continuing to rally to the upside. We're going to continue to look at these crypto markets a little bit more. I think crypto is going to be interesting. I think a lot of products that have any type of crypto exposure are going to be experiencing even more volatility as we head into Q3 and the fall season. We've seen more volatility coming out of Coinbase here. Big deal. I know we were touching on that over the weekend with Coinbase trading at 182 right now. And last week before that Trump press conference, we were trading at about 145. So the move isn't as pronounced on something like Coinbase, but we definitely see it in the ETF of IBIT. So that's going to be the market that we're a little bit more keen on. But it's always nice to trade those sympathy plays too, right? You don't always have to trade the head of the snake, because the head of the snake is typically going to be the most volatile product, right? That product that's kind of leading the entire sector. And I think right now, this IBIT position has put in the most directional move so far. So I don't want to get too ahead of ourselves, right? These short opportunities look more attractive now that we're trading at 44 in just 2 days on these crypto products. But because we have on that strangle, we got to be patient and see what happens on in there. But we have an iron condor on QQQ, one of the first times that we don't necessarily have a directional position to the upside or downside on these indices. So going to hope to see the market chop around a little bit more here, really capitalize on that theta decay. But we've only had that one on for about 2 days here. So just with only having that position on in 2 days, I mean, the overall position is looking pretty good so far. I'm happy about that one. And again, short delta on in the semiconductors, short delta on in some of those memory names. And then, of course, we repositioned and took off our position out of Walmart today. Because we're going to take the profits when it gives it to us, right? We're up about 300 something bucks just on SanDisk and Walmart total. So again, we can kind of use those profits to help finance the rest of the trades in our portfolio, and as we put on new trades for trade ideas of the week. But with that being said, I want to quickly touch on the volatility index, see what's been going on in VIX. VIX right now trading at 1575. We still haven't seen too much of a pop. And again, I know VIX is up on the day, but with how much the market has been selling off, it doesn't seem like traders or investors get fearful very easily, right? It's like we may not have a pop or a significant pop in the volatility index. It feels like until we make new lows, right? And I will admit, even when we did come down here, right, at 660 on the Qs a couple of weeks ago, we still didn't get, that type of pop in vol that we would have expected with such a downside move. So I really don't know what it's going to take for volatility to really spike to levels that we've seen before, because any type of blip in the market, it seems to be not affected at all. So we'll keep an eye on it. If you are just joining us, trade of the day is going to be the gold position. We ended up buying a put there. We're down about $30 right now. It expires in about 10 days. This is a debit. We paid for the position, so we have to get the direction right and we have to get time right. It's something to take into account whenever we're buying these options. But that's what I'm going to be doing for today, guys. We have a handful of positions on the portfolio. Mostly did a lot of management today. But that is going to do it for our trades of the day. And we'll see what we have coming next. Be sure to stay tuned. We have Kai with another trade of the day coming next. And be sure to stay tuned for that. And let's check out what Kai has going on for us.
Hello, everyone. Welcome to the trade idea of the day. It's me, Kai, from the research team. I'm taking over the whole team right now. All right, so today the market is kind of down like less than 0.5%, and I'm going to find some interesting trade for you. Before start, please follow me on the Option Kai on the Twitter. I post 2 to 3 articles or quantitative analysis around the earnings market, all different kinds of things. It's pretty interesting. It's very different. And also, I launch one weekly market review piece. It's kind of long with a lot of data analysis, previous earnings, interesting trades, surprising results from the market. And also, I have another piece. It's called the Weekly Look Ahead, which I do every Sunday or Monday morning. You can check, which includes the upcoming earnings for this week, the interesting potential trade ideas, including earnings or some very important events, macroeconomic calendar too. So please follow me on the Twitter. And now let's take a look at the market. Let's take a look at the chart first. So pretty much everything went down. Oh. Cannot see the chart. Wait a second. We cannot see the chart here. All right, let me check why we cannot see the charts. Overview charts. Maybe we should switch the account to this one. Can we see the charts? Okay, all right. So we can see the charts. And all right, yes, our SPX, we're down about a 1/3%, and what about NQ? NQ is down almost 1%. So it's mildly weak today, and I'm going to look for a trade. So looking for a trade. This is the tab I'm looking for. It's the watch list. This is the first time I use this laptop, so some setup things. So what I'm looking at is a high liquid symbols or high option trading volumes. So liquidity, high liquid symbols. What I'm looking at is normally as a premium seller. So I'm looking for high IVR or high IVP. Work. All right. All right. I don't use this platform very often, so we probably need to see because I use desktop version and not here. Second. Nope. Where is the... All right. If we cannot see this one, I'm just going to walk it through because I'm pretty familiar with what's going on in the market. So it's very difficult to trade right now. The VIX right now is trading at VX17. VIX is trading somewhere between 15 to 16, and it's below the long-term average. So before 2020, the long-term average and medium price of the VIX is around 15.5 to 16.5. One is average, one is medium. And post 2020, the implied volatility and realized volatility actually jumped up quickly. So it actually increased the long-term average and medium VIX to 17 to 17.8. So it's almost 1 point higher than before 2020 era. Right now, we're trading somewhere between 15 to 16, so it's 2 points below the long-term average right now. Not only the implied volatility is depressed, another issue is everything is trading near all-time highs. Max 7 trading at the near all-time highs. Check. So pretty much other than Meta, Apple is fine. Is it monthly or daily data? 1 day. Okay. So I think the almost everything is trading at the top except the Meta. So Meta is kind of has more opportunity to trade. If I would trade the Max 7, probably Meta the only one I want to trade. And I already put in the Meta in the money Ironfly last week, or the Condor. It's actually the Condor or Iron Condor, I would say, which is I sell in the money put and buy in the money put and a sell out of money call spread. So it's actually in the money. So slightly bullish because I carry positive delta, but the risk is kind of limited because I collect rich premium from the Ironfly or Iron Condor. So looking at the other underlying Tesla probably not going to be a good buy right now because it's already rallied up. So that's why it's very difficult to market. Most underlying either trading at the highs or they rally up from the 2-3 weeks lows before. And also crypto is very difficult to trade right now. All the crypto related companies, crypto already rallied too. Let's see, BTC. The BTC is getting very close to 80,000. It's actually touching 80,000 today. It's a high 80,000, touching the 80,000. So it's very difficult to trade too. Its IV rank is 25%, not very attractive. So because I don't know, we cannot see that high liquid options or high options volume list. What I found interesting is actually called the GDX. GDX is probably the only thing is very interesting to me. It has extremely high IV rank, 67%, and also it's trading at a high range. But GDX, because it's gold-related product, it's different from SPX or equities. The implied volatility can increase with the increasing underlying price. So if the price goes lower, which means the price start to stabilize, the implied volatility actually can drop. So it's unlike the equities when you see the price goes down or the index when the price goes down, the implied volatility normally increase. So gold, as long as this excitement or surprising upside or downside movement start to stabilize, the gold implied volatility will drop. So trading at 103, what I'm looking at is one standard deviation strangle. Because if you want to trade GDX, it's fine, but GDX is way more expensive. No, sorry, GLD. So GLD is $425 underlying, which is too expensive for a naked position. And also GLD normally have low implied volatility, not implied volatility rank. So implied volatility itself is cheap. So I don't want to trade GLD. So GDX is the choice. GDX trading 102, 103. It's great. It's pretty much a perfect price to trade naked position. And September is too short, 25 days. So October, 53 days is the one we want to go. I believe Delta. So I want a Delta. So Delta is 16. So 87. This is the same strike price I found early today. And upside, I believe 16 Delta is 130. Yeah, exactly 130. So if we trade this strangle, and we're going to have a huge call skew. So looking at it, we're trading 103. So if we choose 130, then we have $27, $28 $8 to the call side, and the put side is 87. So we have $15 or $16 break even, not break even, the distance to the short put. So 15 versus 28, it's a huge call skew. But without considering the skew, we're just looking at delta, we're probably going to collect almost the same credit from both sides. So it's going to be 170 to 170. Total, we collect $3.40. And the buying power is only $1,000 because this is a different account. So I believe for a normal margin count, the buying power is going to be roughly $2,000 to $3,000. So roughly return on capital is somewhere between 10 to 15 or 20%. So I don't have that correct number here, but for normal, oh, wait a second. Why is it debit? Oh, sorry. This is a short. This one should be short too. Sell and sell. Why does it show debit? Sell to open. Why? Oh, credit. Sorry, credit. This is credit. So I was right. So the potential return capital is somewhere around 15%. Just check your normal margin account. And but I don't want I probably don't think the price is going to go up to 130. You can check, right? If we check 1 week chart, 1 week chart, we see the highest print back to March is only 117. So I would guess this rally probably not going to touch 130. But I cannot say where is the high. Because I don't know. So I can push down the 130 call strike to 125 or 124. So the delta increases 2021 or maybe even 22. I think 123 is fine. So even though the delta is unbalanced, 22 on the call side and 16 on the put side, it's on delta wise, it's a negative trade, but you actually have more call side buffer. So by pushing the call side closer, we increased the credit from $3.25 to $4.25. So we actually collect $1 more, and your buying power is not going to be increased that much. So overall, you're going to see higher return on capital in this trade. So I'm pretty satisfied with all the setup for GDX. High implied volatility. The momentum, personal assumption, is already ran out because it already rallied how much? It rallied from 70 to 102. That's $30. So it's almost 40 to 45% rally from the bottom. My assumption is probably going to stop or stabilize or trade in a range for a while. So that's why selling range, the strangle, is the ideal trade for me. We have decent, if you're still bullish, we still have decent buffer room to the upside. If you think the pullback, if you think the rally is going to fade, then we see 87 is a short strike here, and 87 short strike here. If you're a technical analyst, this is kind of, I'm not sure if you can call it support level, but it's decent, right? And we have $4 buffer. So 87 minus 4, we have 43. We have 40, less than 43, right? Lower than 43, 42, somewhere 42 and a half. So if you think this is a support level, it could be considered a support level too. So I'm kind of satisfied with the both side. So this is the GDX. So I think this is actually the most interesting trade I can find. If you're looking for other trade, it's pretty difficult to find a good one. So another one I can think of is the QQQ. Among all the indices and ETFs, I think QQQ is pretty interesting. If you believe this pullback is short term, you can pretty much, because it's trading lower than the SPY and DIA, which is Dow. So you actually can, this is not an opportunist or speculation trade. This is more kind of a routine long-term trade. So you can just sell naked put for QQQ at 668, 67. Which is 20 delta for October 2022 delta, 66.5. You can sell 23 delta, and that's $8 for 50 whatever days. This buying power, I don't think this is the roughly correct. I see like 8,000, so it's roughly 10% return if you think this pullback is almost done or there's not too much room to go down. And other than that, I don't think there are many trading opportunities. The other two I already presented last week. One is a Nike. I always try to look for some trading at the bottom. So Nike, low implied volatility, rank, low price. So the strategy I would like to use either covered call or the poor man's covered call because the IVR is low. And the other one is Walmart, right? Walmart had a really bad earnings last week, so the price actually has gone down. And this is weekly chart, right? So weekly chart. So actually the drops are pretty significant. So and this IV rank dropped to 20. So the trading idea is similar to Nike. You can trade between covered call and poor man's covered call. You probably want to trade poor man's covered call. And I think my time is up for 15 minutes. And hope you enjoyed today's trade. So my trade is GDX, and next the choice is QQQ if you want to add a long-term routine trade. And if you haven't added up the Nike or Walmart that I presented last week, you can consider that too. So enjoy your trading week and happy trading.
And we are back to what is going on here on the macro side of things and how we're going to be trading it. This is Ilya Spivak, head of global macro at tastylive here. And we're over to gold. We can go straight to the charts. We'll take a look exactly at where we're sitting here. Obviously, we've been on the long side of this for a while. And if we take a look at where we are now, we can see we're attempting to make a little bit more headway here, but for the moment, it looks like we're digesting. That's not entirely surprising, of course. We have this announcement coming up from Scott Bessent here about how we are going to be dealing with what's going on here on the Iran sanctions front. Apparently, we're going to be seeing some sort of a announcement of a new sort of situation here. But as we sort of follow on the kind of overall structure, I think we are looking here at a situation where still the bullish case remains and remains relatively convincingly so. So we're not making necessarily tremendous progress here, but there's nothing about this setup that necessarily suggests this move is done. And we can see here, there is a bit of an inflection level that sets up right here. It seems like we're passing through it. The next kind of line in the sand, just as a reference point, would be this former swing high. We'll see how we do there, but really we're on the way to this major top. And this, of course, is where we've been looking to see whether there'd be some sort of a reaction. And so we can see we're sort of heading that way. If we were to get some sort of friction here along the way, as long as it doesn't give us some sort of untoward situation where we backfill under basically this barrier right here. We can see it's been a kind of level of inflection all along the way. If we manage to get back under it, maybe there would be some cause to rethink or scale back down. This exposure has been something that we've done with just one OZ futures, scaling them up on the way up. So as we started to get in here from the break out of this range down here, so added here, added here, added here, and we could take some of these pieces and peel them off along the way just as well. We don't necessarily have to get out of the position entirely. And that's kind of the essence of why we're using these 1OZ futures, because they're nimble, they're not so huge that you couldn't modulate the position along the way. Because if we're looking at something that's a broader, bigger theme, and judging by what gold is doing here, it certainly seems like that's the direction we're heading. Then we don't necessarily want to take it all off. We don't necessarily want to try to guess absolute tops and bottoms, but we can modulate things in a relatively straightforward way. And so looking at the way these charts are setting up, then we've got this kind of clear roadmap that we've been stair-stepping all the way up. And as we do, if we were to get, let's say, a backfill into here, maybe it might start to make sense to take a little bit of profit, don't take the whole thing off, and just wait and add back in. Maybe we'll find momentum to keep punching higher. But for the moment, there doesn't seem to be very much to adjust. The trade is working. There's probably no need in the short term to get in its way. It's a similar story with silver. We continue to power higher here. It's a very similar congestion sort of situation that emerged here that we ultimately looked to trade as a breakout. We can see we're still basically holding the structural kind of barriers of what the trade is and still attempting to march higher. Now, it's a little bit more compressed than gold is. The next level right here is just ahead of us at basically a touch above the 71 figure. And as we kind of look for what the next steps might look like, were we to take that level out, obviously we can see we'd start to look north of the 80 figure somewhere, maybe even a little bit more constrained here. Let's be modest, in the direction of 81 or so. And we can see that was a kind of reaction level here along the way. So again, nothing much to do here for the moment, but the trade doesn't really give us any reason to back away. So just sitting on this for now. Then over to the situation in the bonds, which we thought, okay, maybe there's something to do here. Maybe we're developing a bottom. Now, why a bottom here? Well, there's been several shots across the bow here that the Treasury has done, and it's starting to carve out this bottom down here. So note this right here. This is the intervention that the Treasury coordinated with the Bank of Japan into dollar yen. So that's shot one. This was the announcement last week that we're going to increase purchases of these off-the-run long-term securities that Treasury Secretary Bessent announced that we're going to up from $2 billion to $4 billion. Now, as we talked at length last week, the number is not terribly significant. We're talking about a market that just in cash bonds, just cash U.S. Treasury bonds, does something on the order of 1.2 trillion a day in turnover. So $4 billion is kind of a drop in the ocean, not even. But it's the intent. What the Treasury seems to be doing here is sort of steadily edging toward ever more kind of direct signaling that there is an intent here, not necessarily for yield curve control, not necessarily for some sort of backdoor QE. Treasury couldn't do QE if they wanted to. They can't create money that's not in their purview. But it does look like the Treasury is making a stand of sorts. And so this is going to be a back and forth with markets for quite some time. But the market does seem to be buying it for the moment, because if we see here, as these interventions start, the bond pauses. And so when this couldn't hold the push here into the highest levels since 2007, we, on yields, the lowest on bonds, let's be clear, we are looking at this and going, okay, well, it couldn't break the range. Maybe this is something like getting ready for a bounce. And you can see that there's also this positive RSI divergence here, showing us that even though the price is setting lower levels, it's also setting higher highs on, or higher lows rather, on momentum, and that can be a sign of a turn. Now, we were into a long TLT call vertical here. It's working a little bit better today than it did the previous days, but so far we're just in this range. And basically, these are the bounds that we have to clear. If we can get to the other side of this, even on a 4-hour, let's say, closing basis, there would be something to do. Maybe we would add there. But for the moment, we're just waiting. Let's see what Besant says. Let's see how the markets are going to fight it out with him over whether this is a thing that he's going to have to double down on sooner or later. He's probably going to have to double down at some point. He's probably going to have to get tested by the markets and push back to some extent further. Markets are probably not just going to take this lying down. But at the moment, there's not a direct impetus. Probably the most interesting thing on the board that's new for today is NASDAQ. And here we have what looks to be a chart that's leaking lower. And so we started to kind of explore the short side on the S&P last week and sold some calls, sold a call vertical in SPY. It looks like it might be time to do that here on NASDAQ. We can see here's where we're kind of starting to get through this immediate support shelf right here. And that can maybe open us up for just a little initial move down into here. Now, if we look at this on a 4-hour chart, we can see the break looks like it might be in already, where this is the top. This is where we kind of tested it, slipped under, and we're trying to push through. So what I've done here is just take a little view here through the Qs. On the options side, you can see here's the trade right here. It's just a little vertical short the 709 call, buying it back at 714 and just establishing essentially a setup here where you can see you're looking basically at a slightly better than one-to-one risk reward and a probability of profit north of 50. So whenever you can get a probability of profit better than a coin toss on a trade with better than one-to-one risk reward, you're sort of stacking the math in your favor. And then we'll see. So that's where I've added a little bit today. Obviously, fighting the stock market is nobody's idea of a good time. But as I can readily attest, having been trying to fight it all year. But as long as we stay small and as long as we keep our exposure relatively contained and, of course, risk defined, we can keep taking pot shots at this when it presents itself. This is kind of the essence of the macro approach that I take with these things, which is to say you might have 10 small losers, but then one big one when you get your elevator down on a stock sell-off. You ostensibly try to pay for your past sins with a larger move. So this is what we're looking at here. If this actually nails this breakdown, we'll look for this initial level here. And then, of course, this would be the low to break to get a real kind of sell-off with some real oomph behind it. Of course, the big level is back down here. So this right here would be the place where if we sold off to here and then stalled somewhere in this area, that would be the time for a bear to get nervous. But for now, we're just kind of taking little stabs at this. Obviously, this way down worked quite well. Of course, I had to go on vacation when this rip occurred, and so I had to get out of it in a hurry. But we got to keep the premium received for the most part. Of course, it got eroded some ways, but we're going to see if we can't do it again. And this is why we're doing it by selling calls. This is why we're not buying puts. The risk reward just looks better to express the trade that way. But we've got TP here in the wings, and he surely has some action-packed situations for you guys here. He's looking at 10, 20 times the tickers I look at. So here it all comes. Stay right there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Good afternoon. I'm Tom Preston, and let's do a little trading this afternoon. And yeah, it was an interesting chat from Ilya a few minutes ago, and he was looking at gold and stuff like that. And so S&Ps are down 20 points, no big deal. Just to let you know, I put this through on the follow page. I closed my Iron Condor in less than an hour, and hey, it's what's that old Dire Straits song called "Money for Nothing"? That's kind of what it is. People look at traders like us. That you call that working? Yeah, you're right. It's 99% of jobs out there are harder than what we do. I get it, but you know, somebody's got to keep the cost of capital down, and that's the role of us option traders. So what I did was I sold that SPX Iron. You can go to the follow page and type in, either look for TP, Tom Preston, or search by symbol SPX, and you'll see which one I did. Sold it about 9 o'clock for $2.40. Bought it back for an hour later for $1.20. Took 15 or 50% of the capital made, and what's a dollar? About 4% return. Don't think about the returns like that. Okay, I know I posted something on Twitter about that, or I answered some questions about you know, how much you can actually make selling those Iron Condors. The returns on capital can be very high per trade. String them together, it's awesome. You get decent returns doing that, but again, you'll have some big losers in there as well. So don't count your chickens, as they say. One of the things that is going on, and been talking about gold recently, everybody's talking about gold. Let's look at GLD. A little bit more accessible, up another 0.5% today. So this is central to the whole debasement discussion. I am not an economist. I don't want to be an economist. I took some economics classes in school. I did well in the classes, but I knew that's not something I wanted to do. And what you're hearing right now is a lot of talk about debasement. What the Treasury is doing is debasing something. What the heck is that? I don't even know. If anybody, by the way, I have the have the YouTube chat open. If you have any questions, comments, symbols you want me to look at, I got a couple from customers, viewers. They send to me an email, but if you want to post them up on the YouTube chat, I'd be happy to take a look at them, see if we can find a trade. You guys have found me some winners lately, so I thank you. So what is debasement? The idea is that it is a way to it devalues the currency, I guess, right? Traditionally, debasement happens, I believe, in metal-backed currencies, so like gold-backed, silver-backed currencies, where you keep the denomination of the currency the same, you reduce the amount of gold that it represents, something like that. That's debasement. Anybody else wants to come in here in the chat and correct me if I'm wrong and actually give a definition of debasement, please do. I don't really care about the definition. What Scott Bessent, Treasury Secretary, seems to do, and what debasement seems to be in the current situation, is the pressure pushing up bond prices, supporting them by either, buying them on the open market, or pressuring the FOM, the Fed, to reduce rates, to drive interest rates lower, presumably ahead of the midterms, make buying a house a little bit cheaper. But the idea is to drive interest rates down. What does that have to do with debasement? What debasement would be is that in turn drives the dollar lower, right? So if I'm earning less money on my dollar investments, it becomes less attractive. However, once it becomes less attractive, once the dollar gets cheap enough, those yields start to look pretty good. I know our short-term yields, for example, are higher than they are in euro-denominated yields. So the idea, I think, for debasement is driving the dollar down. You get more outside non-U.S. investors coming in, buying up cheaper dollars or buying bonds that, according to their currency, with a cheaper dollar, you buy more of our bonds for their currency. So bonds are a little bit cheaper, and and that presumably could push their prices up and yields lower further. Again, that I think is debasement. That's what's happening. And the idea is that, oh my gosh, if the dollar is going to get weaker, if the dollar is not a holder of value, if treasuries are going to be, generate less interest, why not buy gold? Gold is a store of value. So you look at GLD, it's rallying here. I've been trading gold pretty often. It wasn't necessarily something I want to look at today because I know everybody else has been talking about it on air, and I want to give you something a little bit different. But we could look at a gold trade. Who wants to look at a gold trade? Iron Port Pellets with Millet. I love, that's a good name. And Paul D. Paul's please take a look at WDC. You know what? I got to say, and I love all those guys and talking about gold and how to trade it. It's awesome. But we don't have to trade gold today. There's lots of other things like WDC, like MP. Let's take a look at them. But GLD, I don't know how often they look at this stuff. Gold trading at 425. Let's just look at the skew. 2 points down, 2 points up. 423 puts at 1020. 427 calls at 11. So the skew is pointed towards the upside. The market sees higher gold prices. Let's go look at Western Digital. Actually, I was sitting in a restaurant yesterday with my wife, and a guy across the table with his family. He worked at IBM. Now he works at Western Digital. We're talking about Western Digital. Western Digital down 40% IV rank. What are these? Earnings are coming up on September 8th. Let's look and see what the volatility has been doing. So the volatility is lower. Do they have what is this? Is this earnings, or is this what is this thing here? I think it's I'd have to look that up. Is it earnings? Are earnings coming up on Western Digital? By the by, please give me a little feedback on that. it here, you know what, this leads to it could be an interesting discussion. So Western Digital down almost 5%. And I did a video on this on our YouTube channel, about deltas. The title is, deltas aren't fixed. Okay, I get it. You get it. But really, it was a discussion about which vertical would I buy if I were bullish or bearish on a stock or index or whatever, to take advantage of either longer term, trade or a short term trade. So in something like Western Digital, stock's rating of 436.77. Let's see, right in between 435, 437. Let's go down 5, up 5. The 430 puts trading at 1220. The 442s calls trading at 1285. So my opinion, Paul, is the market sees risk to the upside in Western Digital. 40% IV rank. Let's just see what we'd get for I'm not quite getting the credits here that I might like. Yeah, I could. A little close. Let's just go to the point I want to make here. If I'm thinking about a short-term bounce in Western Digital, I'm going to try buying the 432 calls, sell the 437 calls. Why? Why would I buy something with 4 days to go? Because if I bought something with 39 days, look at the deltas here. The delta's 544. It's not very high. If I extend this out to 116 days, let's go to 39 days, my delta's lower. Again, not dramatically lower in a stock like Western Digital, but the point is a short-term vertical is going to be more responsive to a rally in the stock. Therefore, if I'm short-term bullish, if I expect a massive rally in Western Digital in the next couple of days or ahead of earnings or whatever it is, I'm going to buy a 4-day vertical. If I'm not as confident, if I think the stock might take a while to rally, I'm kind of bullish on Western Digital, whatever, then I'll buy something with more time. I'm not expecting that spread, that vertical, to be as responsive to a rally in the stock price. Does that make sense to everybody? So I'm just going to route this. Western Digital, Paul, I'm going for it. Let's buy this thing. Let's try for 235. Let's lock in the price. See, 230. It's getting cheaper, man. Let's try it. Let's run it. Ship it. Working Western Digital. Let's take a look at MP. MP Materials, that sounds like kind of a gold stock. Is it 15% IV rank, but 72% IV? Yikes. Yeah, volatility is fairly stable in this. Let's take a look, MP. Let's see the liquidity. And this is going to be the make or break thing for me, Scott, is can I get in and out of trades relatively? Look at the open interest on these 55 puts, 9,200 conduit. There's really a lot of activity in here at certain strikes. Let's go down to the 11 days. Not so much, but not bad. These markets are again, I've never traded MP. Let's go down to the 4 days just for conversation's sake. Not bad. I mean, not bad. The stock's trading 57.28. Skew is pretty even. Scott or iron pellets. What do you think about it? Do you think they're rallying? Oh, thank you, Crystal. So earnings coming out on October 29th on EDC. Gold has no future. Live from Vienna. GLD has no future. Correct. GC is the future. GC is the future if you want to trade gold. So gold, let's trade. Let's do a GLD trade. 39% IV. Let's just see what we're getting here. Let's push it out another day. Why am I doing these short-term trades? That's one of the questions I get. I like this one. I like this one. Why am I doing these short-term trades? Partly because I want this show to be very current. I want to be able to put on a trade, have everybody come back the next day, a couple days later, and see the results. See from up money, down money, how I'm trading these things. Because this Tasty Live is the only place where you will see us trade live. It's not talking about trades. It's not showing pictures of trades. It's not describing trades. We actually trade here just like you. So I make and lose money right alongside you. Let's do this one. Let's pull this down a strike. Yeah, let's pull it up back up. Yeah, let's just do a three-day bullish trade in gold. I should be filled. Come on. Give me a fill. Give me a fill, Phil. Anything else? Let's see. Bullish on MP. Bullish on MP. Thank you. Thank you. Let's go back into MP. Did I route an order in there? I did not. Let's see. Again, let's see what we get for a short-term trade in here. You look at this. So here's how I look at these trades. The open interest is okay here. There's some trading activity and nothing. Don't take this the wrong way, pellets. But it's MP isn't like the most active starter, but it's trading 4.4 million shares. It's fairly active, and they're probably coming forward because gold's rallying. This, the markets are kind of wide, but I'm going to try it. I'm going to go in for 68 cents. If this works, it's about a third of the width of the strikes. That is the metric that I use to determine short verticals. Same thing with iron condors, things like that. I look at how much theta I'm generating for a dollar amount of risk or buying power. Buying power effect, how much capital I'm putting up. What I do, see that $5.10. By the way, does anybody need me to blow up the font on the platform? You want me to zoom in? Is anybody else old like me and have bad eyes and needs to zoom? Need to zoom in. So if I have $5 divided by 131 is 3.8%. So I'm making 3.8% for a dollar of capital because of my theta. That's what I like to see. Ship it. Working 60. Probably not going to get that. We'll see. We'll see. Anything else? Let's take a look at Papa Dump. Zoom in. Let's see. So, hi, Tom. Giuliano says, how do you manage zero DTE SPX trades when losing? I do that. The short answer is I keep my position size small so that if I do take a maximum loss, it doesn't wipe me out. Now, that's easy to say, right? So I sold these 25-point iron condors for, a couple of dollars, and I'm risking $2,300 to make half that, so making $100. Why don't I manage the losing trades? And I answered an email about that earlier and say, do I manage the untested side? It's the same kind of idea. No, I don't. The reason I tend not to manage those zero DTE trades is rolling down the untested side is that I've seen the SPX reverse completely in the last half hour of trading. It's turned losers into winners, winners into losers. And so I'm willing to take a profit off the table way ahead so I don't see a winner turn into a loser. And if it's a losing trade, more often than not, Juliano, I keep that trade on because I don't want to lose $2,500. I hate that. It stinks, but I'm going to hang on to it in case I get that reversal. Because, over time, does it work? Maybe yes, maybe no. What you could do is put a hard stop in there, let's say 2 times the credit or something like that. So if I sell it at $2, I'll buy it back if it gets to $4, right? I'll lose $200. Filled on GLD. Let's see if we can get another fill. So that's how I manage those zero DTEs. I generally manage them by position size. All right, let's also do had a viewer come in with a bearish trade in Coca-Cola. Coke's been rallying. And this is just basic. Coca-Cola is poison. I mean, sugar's poison. I gotta say, I don't love soda. But I'm old, all right? I don't really like soda anymore. And I call it soda because I grew up in Massachusetts, not pop or whatever the heck people call it. Anyway, let's go in 25 days. Earnings coming out here, 91.86. Well, you know what? No, let's do this. Let's go back in. Coca-Cola is nice and liquid. Had some pretty good success trading Coca-Cola. Let's look at these 4 DTE options just to play. Just to play. I like this. Why do I like this trade? It's a little bit different than the one the viewer sent in, but it's basically the same strikes, different expiration. I'm betting on a very short, a quick sell-off in Coca-Cola. What do I like about this trade? Well, P50, kind of ignoring that, but I'm generating $1 of theta on this trade, and my max profit 98. If I make half of that, $46, $47 versus 102 of max risk, not a bad return on capital. I want everybody to look at something. Why am I generating positive theta on a debit spread? Why? Because this in the money option, this 93 put is $1.14 in the money. It has intrinsic value of $1.14. You don't believe me? Let's go to intrinsic value. Where's my intrinsic? Here it is. $13, $14. Because the debit of the spread is less than the intrinsic, it's going to give it a little bit of positive theta. I'm going to Ralph this. Bearish trade in Coke. Take a fill. That, by the way, if you want to give anybody a fill, zoom like that. I get a request to zoom in. Thank you. So I don't feel alone. I don't feel like, oh, geez, everybody else can see it but me. Good. Some people have trouble seeing it. Let's go into another. Hey, all right, before I forget, let's do an SPX into the close trade. All right, everybody on the chat. Everyone. Herschel, how long before the follow feed picks up TPs? So I got to do those live, or I have to do them after the show and things like that, because it's a little bit of an administrative process. It can take seconds or it could take hours, depending on what I get involved in. So it takes a little while. All right, so let's point B. Low you will lunch at Wolfgang Puck. When you're visiting Chicago, I don't know, but I like Wolfgang. I've been to that restaurant a few times and I like it. SPX bearish. Let's do it. Let's talk more trade. Uh-oh, why am I frozen here? 0 DTEs. All right. So let's do, I know you guys love, and when I say guys, I mean men and women. I know you guys love these unbalanced butterflies. It's like, gee, I hope Tom Preston does an unbalanced butterfly today. It's like Christmas in August. So here I have my regular butterfly, the 50, 55, 60 for 60 cents. If I drag this down, not getting it, kids. All right, let's see. Let's drag this here. Let's take it down a full strike. No, I'm not getting it. Let's do this. Let's just buy a put spread. How about the 70? Let's see. 70, 55, 65 for $3.30. How about a bigger one? How about a 10 point for 560? Bearish into the close. Let's do it. Everybody's bearish on the S&Ps. Lock it in. 530. Ship it. Come on. Boom. Like I said, let's talk more trade. Take a fill on that put spread. Now let's watch these things crash. So what else was I I talked about the debasement thing. I talked about the vertical thing, and we're going to do some live trades. Let's go in. Let's talk about IBIT. And one of the other reasons is, why do I zip through these trades so quickly? I'm not an analyst. Do I understand all that macro stuff? Yeah, I get it. But that's like Chris and Ilya's bag. They're the experts at that stuff. I let them handle that stuff. I'm about option theory, trading, strategy, stuff like that. So, and also I want to show people that it's really the pace of finding trades. Yes, I've been doing this for 30 years, but you learn in dog years in this stuff. This is unlike any other job in the world. The more you do it, and it's just, well, of course, you want us to trade more. That's not my point. My point is to get you to trade more for commissions. That's not my point. It's that you get better at trading, executing trades, evaluating the risk reward, evaluating the different probability metrics, evaluating the theta, things like that. You get faster at it. So like I do, I take a look at a symbol and within 5 seconds, I can see if I want to trade it or not. And then maybe another 2 or 3 seconds, I can determine whether I might be bullish or bearish or neutral on the thing. It's that fast. You'll get there too. The more you watch this stuff, the more you do it yourself, the faster you're going to be. Let's go into Target. Now, you tell me why Target is rallying while Walmart is down. Look at this, Target. So they're building the big fight out by me in outside of Austin. They're building a new Target on an old horse ranch, or not an old. It was a horse ranch. They used to play horse polo there, and they bulldozed that. And now they're putting in a giant Target. And my wife refuses to even drive down that highway anymore because she just sees that giant empty spot that used to be the Polo Club. Not that we belong to the Polo Club. I don't even like horses that much. But the point is, the Target's rallying and Walmart is down. You tell me why. Anybody in the chat care to explain why Walmart is in the doghouse? And I bought a call spread down here on Walmart. So let's just do a contrarian trade in Target. Again, I pushed this out to 25 days. We could do another short-term trade, another 4 day. Look at this. So negative 15 delta is generating 0.06 of theta. Very handy to use this functionality, by the way. I'm just clicking on the minus expiration to pull it down to closer expiration here. 87 cents of theta. Minus 33 delta, so the delta's higher, theta's higher. Let's do it. Stop screwing around. Just buy a put spread and target. Another symbol I wanted to look at. So what did we do? I had a watch list. USO, I'm kind of neutral on crude oil right now. Had somebody in the chat last week, I was thinking about bearish trades in crude oil, and I was kind of leaning bearish. Right now, I'm still neutral, and I know that a lot of it's hanging around the Strait of Hormuz. All right. Let me address a couple of things before I forget. The big news this week is going to be NVIDIA on Wednesday afternoon. That's the earnings. And we can look at a trade probably on Wednesday afternoon when I do this show at 1 p.m. Can do an NVIDIA trade, a vertical, because it's too much risk. I don't want to sell naked premium in NVIDIA. So that's going to dominate the week. I think Jackson Hole, the meeting, everybody's talking about it. I think that's on Friday. I think Kevin Warsh makes a statement out of there or something like that. I don't think that matters. I think the price of oil is more important right now than whatever the Fed might do if energy prices start coming down. If they do, and I hope they do. And I also hope they stop the war in Iran, because I don't like to see people die. I don't want to see anybody hurt. But I'm kind of neutral on it. I think they're probably bypassing the Strait of Hormuz. Iran, for better or worse, I think has pretty much taken itself out of being an important oil country for the time being. I don't think anybody cares. And so now, but I still think there's uncertainty in the oil market. So I'm thinking about an iron condor. Didn't do one in USO. Maybe we'll take a look at one tomorrow. But I think that oil is more important than anything out of Jackson Hole. And besides, when did Jackson Hole become important? You tell me. I bet. So we did a trade in SPX. SpaceX I want to look at. Maybe we'll do one tomorrow if we have time. I bet is another one. So Bitcoin is part and parcel of that debasement trade. right? People, oh no, the dollar's getting debased. So let's buy hard currencies like gold and Bitcoin. Okay, Bitcoin, I guess, is a harder currency than a fiat currency. Okay, whatever. I'm looking at an iron condor with 2 days. So I loaded this up. I'm not getting a lot of credits for this. Not getting a lot of credits. I don't want to sell naked premium in here. Let's pull this on a little bit tighter. 45, 46. Let's look at the 60-cent options. I'm not getting it. I don't know. Let's see. I might have to go out in time a little bit. 4 days. Let's do the 44, 43s and the 46, 47s. And that's a little rich. Let's go out here. 1 point. Let's take this down to 2 points. And I know why. I want to get this done before I run out of time. 42, half 42. Here, 71-cent credit. Let's try this one. Again, $8.80 of theta per day, risking $129 to make. If I take this off at half max profit. So this is just a neutral trade in Bitcoin. That's it. If you're bullish, sell a put spread, bearish, sell a call spread, something like that. Me, I'm just neutral. Let's just do this trade. Let's ship it. Bing, bang. Fill. Take a fill. All right. So everybody is best. So point B says the best part is the drive-up feature. I never did that. I don't know what that is. So live from Vienna, STP, your account is 100,000. Yeah. Yes. Is this enough to have 80 or 90 open trades like you say? Yeah. So I have the 80 or 90 positions and plus some size. So my account's a little north of 100,000. That's not showing up. That's not me thinking, oh, look at me. That's not the point. But I do have at least about 80 open positions. So any questions? TP@tastylive.com. I will push these trades out as soon as I get them. Stay tuned for some Forex discussion with Ilya. So I will see you guys tomorrow morning. Good luck trading.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
And we are back. And after that intro music, I feel like we're about to talk space aliens. We're here with our Forex focus for the week with Mr. Glenn Freiberger. Sir, welcome to the game.
What's happening? Happy Monday. I'm a fan of the new intro. It's new. It's modern. It's fresh.
I like it. I feel like we're about to bring out some crystals, wave them around a little bit, maybe light some sage,
and the light will refract just so.
Just
we'll
so.
Have our trade idea right there.
Boom! There it is. Speaking of trade ideas, our short dollar situation seems to be doing pretty okay here. Let's go straight to the charts production team so we can see what in the world we're talking about here. And we've got the euro. It's meaningfully weaker, but it's kind of stalling the past 3 days, Glenn. What are your thoughts here? Are you in this market?
Well, first off, I think the Twitter sphere is talking a lot about your potential connections to Scott Bessent and the Treasury with your aptly timed short dollar trade. Some are saying it was a little too convenient out of you, too sharp, and that you might have
what's
a little
good
red
about
phone on your desk.
You know what's good about the Tasty Trade follow page is you can actually see when I put the trades on, and it was weeks before Bessent said anything. And the whole thing was really a function of what I've been talking about since the beginning of July, which is real rates have been surging, and yet the dollar wouldn't rally and gold wouldn't sell off. And so the entire logic there to get short dollar and long the metals was, you know what? This price action doesn't make any sense. And when in doubt, you believe the market.
Very fair. Well, good job structuring your trade to be able to benefit when that happened. Especially in the summer months.
Thank you, Scott.
I feel like it's hard to guess duration there, especially. But yeah, you've nailed it on two accounts. One, huge dollar weakness, but now, especially this euro chart, it's looking perhaps bottomy. Not only did we try in the spot market here 117 once, we tried it twice, failed on both days, and a little bit of a stronger dollar bounce here across the board to start the week, and survived the first shock test of the week in the form of Bessent's commentary. Economic
the man's
D-Day.
back. The man's back. Just because we had a big Treasury announcement last week does not mean that the Treasury Secretary is going to be shy about continuing to throw grenades. Today's episode is called Operation Economic Outcast. Lovely.
Play nice or we won't talk to you ever again.
Yeah, goodbye. We're taking our toys. We're leaving the sandbox. Get out of here. We're taking our friends with us if they'll come. Won't they come? Please won't you come? Was the essence of the Operation Economic Outcast messaging here today. Basically a regime of secondary sanctions where we're basically saying the same thing we said when we wanted to cut off Huawei from providing all kinds of telecom equipment to allied countries like Australia, for example, or a couple of European Union countries where we said, listen, you do business with Huawei, you don't do business with us. What do you want to do? And all of those places said, oh, well, okay, when you put it that way. And so that seems to be the upshot here. But of course, these kinds of things are not costless. And one of the main costs of U.S. economic warfare as it's been deployed maybe over the past 10 years or so has been, there's, by the way, a fantastic book about this called Choke Points. Highly recommend. It's by Edward Fishman, who was an actual official that was taking part in these things. It's a history of American economic warfare by a former State Department official in this case. Highly recommended because it describes all of how this stuff was done and how it worked or didn't, depending. And in the case of Huawei, it was actually quite effective. In the case of direct sanctions, what they found is it's very difficult to enforce direct sanctions on an enemy because the enemy doesn't want to comply. Shock of shocks. The enemy is already trying to say, yeah, we don't want to do business with you anyway. We're in a war. We get out. And so that part is already there. The kind of part that really started to bite in the case of Huawei was these secondary sanctions, where you weren't going after Huawei because Huawei wasn't going to listen to you anyway. You were going after places where Huawei would do business and where people would have incentives to listen to you and to want access to the U.S. banking system and all these kinds of things. So that's what this is. OFAC, which is the keeper of the list of verboten places to do business with, sanctioned 60 entities across individuals and vessels and companies that are ostensibly helping Iran procure nuclear technology, run cyber security attacks, generate oil revenue. And they're kind of scattered here. UAE is in the mix, Hong Kong, China, Singapore, Switzerland, a couple of European countries. So there's a lot here, but the market doesn't seem to be making a tremendous deal about it yet, because I would reckon the question is mainly, will China abide? And what does enforcement look like?
Yeah, very fair. Kind of a nothing burger for the time being, but important economic, historical context. Is there any read through on, market effect from that example if we were to play out a similar playbook? Or is it
in my mind, this is dollar negative. And it's dollar negative because, in a sense, it discourages people from having confidence, not just in the dollar, because let's be clear, there is no alternative to the dollar. Like, let's just live in reality. There is not a currency that is liquid enough with deep enough markets to be the medium of exchange for global commerce. There's just not one. And the day there is one, I'll change my mind. But there isn't one. So this whole nonsense about, everybody's going to lose confidence in the dollar and the dollar is going to crash. I say this being short. Stop it. Stop it. Like this nonsense has got to quit. But at the same time, we can clearly see that, for example, last year's story around the relentless rally in gold, which didn't seem to care about this thing or that thing, seemed more than anything motivated by this idea that, listen, if countries are going to weaponize their economic systems, we need a third-party store of value that isn't sovereign, that isn't tied to a country, that isn't tied to this or that government. And that's whether China wants to weaponize rare earths or the U.S. wants to weaponize its banking system or whatever it is. Other countries are weaponizing their systems because apparently the U.S. is no longer the steward of international norms. And so if there's no cop, everybody's going to do their own thing. And that's been really a story since the Trump administration returned to office, but it predates them. It's just become more intense. The Biden administration used all kinds of sanctions. I mean, obviously, the case of Russia stands out. The Trump administration version 1 did this, as we said, with Huawei and with China more generally. So with Iran, of course, the maximum pressure campaign of that period. So there's a lot here that kind of sends the signal. Fiat currencies are now an economic weapon. And if you want to be able to do business with this side and that side, and you don't want to be beholden to whatever they do to each other, you need a third party vehicle. And so in my mind, this is just, it's not necessarily negative for the dollar against the euro. It's negative for the dollar and the euro and the whatever fiat currency you like against things like gold and silver.
Gold, silver, and Bitcoin, Ilya.
Apparently also Bitcoin.
Welcome to the future.
Which, I mean,
Back
it was
again.
asleep. It was asleep. Can I just want to make the point that my soul burns because everything that I am sort of structurally naysaying in the large sense, the idea that the dollar is going to be replaced by the yuan or some BRICS concoction, that's nonsense. The idea that Bitcoin is money, nonsense. The idea that that gold is a viable kind of form of money in lieu of fiat, nonsense. In the modern world, ridiculous. But I am long all of those things. I'm long Bitcoin, long gold, long silver, short dollar, because the market is the market and you have to trade what's in front of you. So as much as I philosophically disagree with gains in all of those assets, I've got to be long because I have to trade what's in front of me.
Admirable discipline.
Otherwise, you just are asking yourself to lose some money, in which case, I mean, if that's your pleasure, by all means.
Not only lose some money, but a slow, painful death of digging deep, fighting the wave. But yeah, good on you. In terms of getting to more perhaps short-term volatility and price action, where I'm looking for U.S. dollar action is this U.S. dollar Canadian dollar up on the day, but a pretty interesting chart that begs the question of one-day pullback. Pullback here, referring to the upside, a bounce. I guess is a better word, in the stage of a larger continuation. Or the flip side of that is we've known what the tariff headlines of old can do to these markets. U.S. dollar, Canadian dollar, the pioneer of the very first jolt of this administration, we'll remember, had a much bigger effect than 0.5%. So with the recent spat over the weekend and negotiations ending for the time being, Canada looks to eat a pretty big bill. Is it worth entertaining that although the market has priced this in for the better half of however long, that this still could be an underreaction and we could start seeing over the next month or so some economic data that points to a pretty large impact on Canada? Or how are you thinking about this market?
Well, so the initial kind of response from Mark Carney, the prime minister over there in Canada, was, look, the government is going to make Canadian exporters whole. That's funny. It's funny
Good
because
guy
it sort of fits within this whole narrative of, you know what, G10 governments have deficit issues, almost all of them, and we're just not going to go solve them. We're not going to go solve them near term. We gotta keep spending for now. I mean, if Canada's government is going to try to make exporters whole, it's going to be very costly. An overwhelming amount of Canadian exports are bound for the U.S. But of course, in the case of the U.S., this is the kind of thing where you cut off your nose to spite your face, because really one of the great kind of economic strengths that the U.S. has is the incredible North American free trade bloc that allows for these incredible efficiencies in supply chains between the US, Mexico, and Canada. And that's, I mean, everything from like Toyota cars.
Mm-hmm.
Like ostensibly they're Japanese cars, right? But they're made across North America. And so when you look at kind of what this means, okay, let's wag a finger at Canada and put 50% tariffs on them. Who's that going to hurt? Well, primarily it's going to hurt U.S. consumers. And the reason it's going to primarily hurt U.S. consumers is because they absorb tons and tons and tons in share terms of Canada's exports, something on the order of 80%. So obviously there's a bunch of stuff that Americans buy from Canada. And that's, I mean, it's the supply chains for things like cars, it's lumber, it's to some extent energy. So there's a lot. And to do this is another thing that US consumers now have to pay more for. And so for me, this sort of becomes a story of, okay, we keep squeezing consumers. We keep squeezing them sort of incrementally over and over and over again. This was just kind of a reminder that the tariffs are another squeeze on them. Now, obviously, the war in Iran is one squeeze. The tariffs are another squeeze.
We can't take any more squeezes.
How many more squeezes are we going to have? The nature of the immigration policy is that we've swept, rightly or wrongly, you decide, but we've swept a large chunk of the labor force that was in work out of that work. Now, what that means is there are now labor shortages and things are costlier because the labor is more expensive. So again, all of this basically just makes the average American's bill for regular things higher. And so the sort of push and pull here becomes, okay, yeah, this might be bad for Canada, and you see capital coming out of the Canadian dollar because ostensibly there's now this 50% barrier getting in between capital flows from the US into Canada, because if Canada is a net exporter of stuff to America, we are a net exporter of money to Canada. And that's not a bad thing. They spend it here. But when we look at the reaction today, kind of makes sense. Okay, so the dollar is a little bit stronger because there's a little bit less outflow. But what does this mean downwind? Well, probably means that as you squeeze all these consumers, they're going to start to retrench. It's going to start to crowd out their spending. In fact, we see that already. We saw terrible consumer confidence numbers, terrible retail sales numbers, and the consumer is 68% of the economy. You squeeze them too hard, you get a recession and rate cuts, not hikes. So I don't see this as dollar positive in the sort of larger scheme of things. And I think the chart kind of reflects that. We're still testing the underside here, but the trend down is pretty straightforward. And if anything, I would look for this, and for the record, I'm still short. I'm still long the Canadian dollar here, which I got short over here on the break of this shelf. And so I'm looking at this and saying, well, if it holds in here on a retest of this larger level, which we can see here, it was a level of resistance. We found some friction in it. Here it was a level of support on the way down. If it holds somewhere, let's call it in this 139.20, 140 area, like in here, to me, that's a short.
Interesting. I guess the flip side.
I think maybe the juiciest setup, actually, which is kind of, it's not dissimilar from this, but it's maybe earlier innings, is dollar Swiss.
Why is that?
Because this to me now looks like a clean break we're retesting the underside. This looks like a very clean head and shoulders, shoulder, head, shoulder, neckline, clean break. And by the way, you don't have to call it a head and shoulders. You can call it whatever you like. The bottom line is there's a horizontal line here. Clearly it was resistance. Clearly it held as support. We clearly punched through it with a bulldozer. And when we're coming back, we're holding the underside. So I got a little short here. And if you look at, I think, what sort of the upshot starts being, if you take, let's say, a modest measurement here, and we'll take the magnet off so that we can line it up. So let's say that is about the height of your head and shoulders, whatever you want to call it. The textbook would tell you that you extrapolate that down from the head to the neckline, and then you take that same distance from the neckline down, and this would be sort of roughly where you're going for. To come back down into this congestion in here. That's a trade with risk reward that I think makes sense. Not to mention, Switzerland is one of these countries that doesn't have a terrible fiscal issue. And that isn't going to spend a gazillion dollars to bail out its fiscal situation. This is a problem they don't have.
But you do risk on the wider side of the overall Swiss franc valuation that if it gets too strong, their central bank is in favor of intervening to knock it down, as we saw when not only this rate got to 2011 highs or lows when you have this chart, but also against that euro Swiss franc claw.
Well, that's the widowmaker there.
Yeah.
Yeah. You don't want to be on the wrong. Let's see. I would say it like this. When the Swiss National Bank tells you they're going to do XYZ thing, you'd be wise to presume that doesn't mean they're necessarily going to do it.
Also fair.
Because the Swiss National Bank, interestingly, this is a fun factoid for the folks. The Swiss National Bank is a publicly traded corporation. It's not a central bank in the sort of classic sense.
Sure.
Now, it is owned by mainly large Swiss banks and the cantons. So it's not like, publicly owned in the Google and Apple sense, but it's a publicly traded corporation nevertheless. It operates from that perspective. And so it might do something like tell you on Thursday that their cap on Euro Swiss is ironclad, and then later that week just unceremoniously drop it and create a 30% move in the franc in a microsecond.
And that's what makes it fun. Good old-fashioned fun.
Yeah, thankfully there are no hard lines in SNB policy for now, but the moment there would be one, you'd have to get concerned.
Understood.
Because tossing markets around without warning is kind of their thing. Not great. But for the moment, I think the setup looks solid. And if anything, there's lots of room here before they get concerned. Let's get down here. Let's get to 77.60. It's not even the absolute the absolute high here for the franc. Let's just get down here. That'll be all right.
Fair enough. Well, you've got a few dollar markets to watch today with that Canadian dollar, Swiss franc, and euro on a slight US dollar bounce. But in the next couple of days, we'll have confirmation whether we trade through some of these key resistance levels or if this is a one-off on the much broader dollar weakness story that Ilya is calling for. Should be a fun
Indeed.
week.
And risk sentiment wise, you got Australian inflation coming up tomorrow. That's something to keep in mind for the Aussie dollar here. You've got a Warsh speech on Friday, which is going to be big news. The PCE numbers are coming up. So there's a bunch to do here.
Absolutely. Thanks for the time, Ilya. Always a pleasure.
Always a pleasure, sir.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Hello, everybody. Tim Knight here, and it's a new week, and it's a big week. We've got NVIDIA on Wednesday afternoon and Jackson Hole about half hour into the market day on Friday. Jackson Hole always strikes terror into my heart, only because of the scars left from Bernanke's speech in 2011, was it, or 2010? I'll never be the same. Sometimes it's a complete non-event, a nothing burger. But yeah, it's Warsh's first, and we'll see how that goes. I'm excited that NVIDIA is going to do their earnings. And it's a red day where it counts, which is tech. Across the board, pretty much all my shorts are down. A couple of very minor exceptions, but nothing nasty. So let us thumb through. And by the way, on slopecharts.com, which is my platform, I've gotten some requests to make the font size bigger so you can see it better. So I've done so. I can't promise I'll always remember that because, but I'll try. So it's a little larger font, and I hope it helps. So this is the good old Spider. The first ETF, the biggest ETF by far, and we are in the everything bubble for the past 18 years. And as we zoom in here, we've been seeing a very gentle, subtle breakdown, and that's probably overstating it. As we can see here, we've got 7 red bars in a row, and the intraday peak was back here on the 13th, and following that, we started our 7-bar descent. Very slow, very gentle. But as I've mentioned, and I'll keep mentioning it until it happens, we got to get below this gap. To get a failed bullish breakout, we've got to get below that gap. Maybe NVIDIA will do it. I don't know. But it sure would help. Because that would be a real failure to follow through. As it is now, we could easily stay above that price and whoosh to lifetime highs, God forbid. So that's kind of where that's configured. But these moves are not dramatic. I mean, today we're down 0.23%. And the distance we are from lifetime highs is, I haven't measured, 2%, 3%, something very, very modest. The cubes are down a little more lustily, not quite 4 times as much percentage-wise. And the NQ futures are down more than a couple hundred points, even though they were green at times Sunday evening. But I just noticed something here. Let's just put down right there a price gap. And so that's a little bit scary if there's any other bears out there, because this gap may simply mark the bottom of this very modest reduction in price we've seen. If I were going to make the bullish case on this, I would say that we've not violated this gap. We've got a little hammer pattern there on the candlestick. And NVIDIA, of course, could send the market sailing higher. So I'm keeping things non-aggressive for myself. It's a lot of positions, but they're small, and I feel a little easier after this week is over, to tell you the truth, or at least into Friday's trading day, because NVIDIA will be behind us and Warsh's speech will be behind us. So we'll have most of Friday to see what's what. But just as the spider really needs to cut below its price gap, so too do the cubes, because this is still poised to be bullish protection, and so I've left it in green there to mark it as support. The S triple cube is a short-term way for the bears to profit off the cube's descent. And just as we've had 7 red bars in the cubes, now we've got 7 green bars on this one. Another strong day here, up 2.5%. And this obviously is something that one does not buy and hold. This is a relatively short-term vehicle. But over the past 7 trading days, it has been good for tech bears out there. You can see a different flavor of tech. ETF is having a harder down day, which is XLK. This is down almost 1.5%, nearly twice as much percentage-wise as the cubes. And there too, let's just mark that. I just noticed right there. Price gap, we'll mark that in green. Let's mark that in green, like I said. And in this instance, let's make sure we've got this right. The high here is 178.92, and the low today was 178.81. So not a perfect seal, but awfully close, just a few pennies. So cracking that on the cubes, cracking that on the XLK would help mean that this isn't just a 7-day reprieve for the poor battered bears, but something a little more meaningful and also more in line with the seasonal weakness that we're supposed to see late in August and all through September. October, of course, is the most famous for being a bearish month, but it really isn't. I think it earned that because of the crashes in 1987 and 1929 and 1990. But the real statistical truth is that September is the weakest month for equities. And that'll be here soon. FNGS, the FANGs, a little bit weak. Those have been slipping very slightly lower. We've got our own price gap on that as well. And as far as the small caps go, those are also down about 0.6%. They're sporting a price gap between Wednesday and Thursday, and their own lifetime high was just a few trading days ago. But I guess that was Thursday or so of last week. So equities are pretty close to lifetime highs. And there's been a lot of government action lately. Of course, we had the Besant bond thing last Wednesday. We had the dropping of tariff gimmicks on beef on Friday, I suppose. This morning, Pacific time, but early afternoon, East Coast time, Besant again, he has become he's like, it seems like he's become the entire cabinet because the spotlight's always on him. I watched this whole announcement about Operation Economic Outcast, I think they're calling it, and the handful of questions they took from the press. An intelligent man, obviously, well-spoken, and light on his feet when it comes to the questions. He handled them adroitly. But there's a lot of stuff going on with the government in this election cycle, and we'll continue to see that. It's I don't know if you watched that event. I'm not sure how much effect it's had on today's equity prices, but fascinating stuff because it isn't often that the Treasury Department is front and center when it comes to global politics like this. Overseas, speaking of global, EFA down just a little bit, 0.15%, even less than the spider. We've got a modest price gap between Monday and Tuesday of last week, which we tagged on Friday, and we're sinking ever so slightly today. Speaking back to government, Canada, of course, The trade talks fell apart, and there was a declaration about 50% tariffs or something like that. There's a giant shrug of the shoulder here. EWC, Canada's ETF, is down 0.5%, and its lifetime highs were Friday. So not a lot of shock and awe right there. More relevant to my own focus of tech and semiconductors, South Korea, EWI, is down 2.29%. And we've got a price gap also between Monday and Tuesday, which is held nicely. As I've mentioned, the quality of the pattern has descended from a A- to B- if we're being nice, almost a C+. But it's okay as long as that gap holds. And the amped up version of this, as I suspected, has fallen. KOBU has had a big tumble here, down today almost 7%. And weirdly, its own pattern is of higher quality than the non-amped up version. So as far as semiconductors go, NVIDIA, of course, looms large. In 49 hours, we'll all know what's going on with them. And as I mentioned this morning, the conference call is probably more important than the data release. But we are down on this a little more than 2%. Not at the lows of the day. We've actually recovered portion of the drop today. But we have a new price gap between Friday and today. And there's still plenty of sunshine between major support and present price levels. I have ruefully watched my options continue to thrive that I got rid of. I'm still short the equity, but the put options on this are doing nicely because it's just kind of grinding away lower. We were talking about the SQQQ earlier. This is the leveraged bearish ETF for the SOX S, like short, I suppose, and it's doing well. It's up 7.16%. And as with the SQQQ, it's had a good run the past week or so. We bottomed out on this like so. The lifetime low is way back here, which is pretty remarkable for a leveraged instrument, but it shows that the weakness in semiconductors has been pretty persistent. Some individual items that I continue to be short in this space: AMD down 3.33% today. ST Microelectronics down over 2%. Micron down over 5.5%. It's a nice drop there. And this is another fine example of what had been a beautiful pattern, just spoiled with all this nonsense right here. But it's not a bad short, but I just tighten the stop. Here, for example, with the new price gap that we've got going on. I mentioned this rather young issue last week, AMBQ. This is down 3.25%. And this one, I'm not in this, sadly. I talked about this before. Wild chart here. And it was tempting to want to short it up at these levels, but it was such a crazy beast, just these crazy swings up and down. Its last gasp here was around 11, and it has dropped about 50% in the June, July, August, so not even 3 months, lost half its value, and it certainly looks like it could keep going lower, but that's an exceptionally volatile beast. I also made mention this morning that space stuff is an area that I'm short. I'm not short at the SpaceX. I don't touch it. I've applaud the company and hope it is a fantastic success for years to come. But the introduction of this as a tradable instrument and its own so-so performance as a public entity definitely have that's been a 1-2 punch for the other companies out there with rockets and satellites. So some of the items I'm short in that realm are EchoStar, which is down a little more than 1.33% today. Planet Labs, which is down over 2%. today. Rocket Lab, got to work on some more creative names, guys. This one is down over 5%, and Viasat, which is down about 2%. So those are all moving the right direction. I have mentioned many times my bearish position on China, which is the March 2027 $37 strike FXI puts. And up until Friday, that was exceptionally worrisome because it just kept getting stronger. But a couple of good things have happened. One, the Friday peak just about perfectly sealed the price gap. That is the gap where this dashed red line is. And so we had fallen away, down, 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 and we started pushing higher. And as of Friday, it had a strong opening, and it threatened to push past that gap, but it did not. It closed net up for the day, but it opened near its high and it closed near its low. And more importantly, it gapped down today. Nothing dramatic, but it is down about 1%. And in a perfect world, sometime between now and March, which is hundreds of days away, in a perfect world, we would seal this price gap, which would make this a multi-100% winner. I'm not going to, who knows, that would be, as I say, an ideal outcome. It would take a tremendous move. The last time something that substantial happened was during the initiation of the war. So it took a hard tumble right there. So it is possible to make that kind of a nominal price movement, but I'm not counting on it. If we do steadily move lower, my challenge is going to be hanging on. Knowing me, I'll probably just sort of take profits along the way, but I'm not just going to grip my teeth and hope we go all the way down lower. We'll see how that goes, but day at a time, and there's a lot of time left on these, so it's moving slowly in the right direction. I'm just going to just keep watching it, and as long as the stop is not violated, stick with it. A different way to look at this is this long-term Hang Seng Index, which goes back all the way to the Ronald Reagan entering office. And as we zoom in here, we do see the failure of this trend line. And this one is down 1.89% net. So, and you can see here that this is the lifetime high, lower high, lower high. So quite obviously, my hope is that the failure of this trend line will set us on a new pathway lower. Strictly speaking, March 2027, as distant as that seems, it could probably be just as easily like December of next year or something. One who is bearish this might want to give themselves scads of time. But I'm in the March, and the options are pretty crummy because the bid ask is pretty wide across the board. Now, one confounding area has been crypto. As I've mentioned repeatedly last week and over the video this weekend, my bearishness on Bitcoin has cooled rapidly because we never really broke 60,000, which is the base of this giant pink rectangle. I'm not sure what set it on fire. What was coincident with the launch was Trump talking about how he's going to buy crypto and everybody should buy crypto. And for some reason, in spite of his many declarations before espousing crypto, this one seemed to have something special about it. And so it had a tremendous launch here. $80,000 is pretty important resistance for two reasons. One, big round number. And two, it is in the vicinity of the underside of this trend line. I also did a little spreadsheet this weekend to measure the distance between the high and the low and the high and the low and the high and the low. And they are about 55 or so days apart. And but I'm not sure if this pattern we've seen here and here and here is going to play out again. Because this was, put it this way, here's a different way to look at it. We had this high, we had much lower low here, a much lower low here. This is a very modest lower low, really not much below this one. So maybe a corner has been turned, and maybe the nauseating notion about this is digital gold, maybe people are buying it. And if they buy it, That's all it takes. Because it does seem to be moving with gold. Strong precious metals days are also strong Bitcoin days. And the correlation of Bitcoin and gold has rushed toward 1, whereas it was practically inverted not that many months ago. So what I'm saying is that if we do start to sell off here, even dramatically, I think you're going to find an important new base of support down here around 67,000, 68,000, something like that. And if one were just dying to get into crypto but didn't want to chase it, anything south of 70,000 would probably be a pretty appealing price point. So yeah, that is Bitcoin, and we see in a different flavor. Here's IBIT, which is the big ETF, and its own. It has a major price gap here. I've laid down a line right here just as a point of resistance, but you can see even at this distance how swift that move higher has been on that. Strategy, MSTR, is also up 2.3%. It still is sporting a pretty good head and shoulders top here. It's not perfect. Again, going back to the grade giving thing, and give it like a C plus. But this portion here, this was the easy part, moving up that quickly. There's a tremendous amount of overhead supply here, so it's going to be much, much harder for it to just keep sailing higher. This, keep in mind, this lost over 80% of its value. So it's not like it peaked at 100, went to 95, and now it's 97. It lost almost all of its value. It's worth like 18% of what it was in December of 2024, I guess. So yes, it has gone up a lot. It's gone up like 30%. But all it means is it's down 75% instead of 85%. I'm approximating the numbers, but you get the idea. And that elimination of that portion, as I say, the very easy part, that's the swift part. Now it's a lot thicker. I ain't touching it because I've been burned on this too many times. But I would not be at all shocked if today's high on this was all they're going to get for the moment. Here too, if it get battered down, it's going to find support around this area. Let's just put down a horizontal there to mark that. Something like here does represent new support for MSTR. So if one did want to go bearish on it, you might get 12 points out of it or so. But it's not like, okay, it's heading to 20. I think it's more of a nibble trade right now. Ethereum has also enjoyed a great recovery. Their own burst puts them in the vicinity of this resistance line. We are above this reversal top here. And this was very swift. And so if this started selling off, the sell-off could be very rapid as well. It could get back below 2,000 before finding really solid support around here. But the related items around that are enjoying their days in the sun. Here's Strive, which is, I believe, the high-yield instrument for Ethereum. And there's Tom Lee's Bitmine Immersion, BMNR, which is down, which is up over 6% and has had a very strong and quite steady run. It bottomed at 1280, and we basically doubled on that. So from the end of June until now, about 100% increase in price. Non-digital gold, that is to say gold, is doing pretty well. Gold itself is having another green day. It has cut through all kinds of resistance. The first big signal was this day here, because it fell precipitously. It had fallen from over $5,500 to briefly under $4,000. So it lost about $1,600 tip to tail. And it spent some weeks stopping going down, kind of consolidated and found a good base of 4,000. So this was the healing area right here. And after the 4th of August, it leaped above this trend line. And it went up, and conked its head against this resistance. Spent a few days kind of getting its strength back, and then here did another leap above this line. So we conquered this trend line, we've conquered this resistance line, and the next level of resistance is way up here. So that's good. I think that, and notice how similar it looks to the Bitcoin chart. So I think that the new chapter of the precious metals bull market has been opened. I would appreciate it if this thing could sell off some, because I would like to buy more, but I prefer to pay 4,400 as opposed to 4,700 to get more gold. I'll mention as an anecdote that I went to Costco's website where they from time to time sell silver and gold bullion. They ain't got none. It's all gone. So that's been a hit. And as I say, I may not get the chance to get more. This thing could just, it's clear that the world is embracing gold in a way it hasn't in decades. And it's possible that we're at the 6,000 plus level before this year's out. And it's possible we're in quintuple digits before next year's over, maybe. It's not a chart-based idea. It's just illustrative of, I think, of how much potential this has as the fiat currencies of the world just circle the toilet. Here's silver, and it has had its own victories too, and it cut above this line. And this is not risk-free either. These have gone very far, very fast, just like Bitcoin. I would love to see them lower, only to get them at better prices. Different way to look at this is just by way of the ETFs. GLD is up fractionally, and we can see over the life of this ETF the phases gold's gone through. It's kind of interesting, and I've augmented this chart with a few simple shapes. This base here back in 2004, when it was about a tenth of its price earlier this year. This started off this multi-year bull market, which terminated in August of 2011. And at that point, gold just stunk out loud as an investment for a decade. That's how long people would have had to hold on, because we topped out here, ground our way lower, bottomed here, and that was in the course of making this much more substantial basing pattern. And this was really the big basing pattern for this whole move. That finally was off to the races in 2019, and that peaked, and we formed a smaller but still impressive basing pattern here with GLD. And that ended in March of 2024. And it really hasn't looked back since. The kind of move we saw following that one was similar in drama and power to the one we saw back in the kind of 2009 era. And that reached just a mania. And that mania ended rather dramatically late in January. And as I said, proceeded to just have a complete wipeout until such time as we consolidated here. We didn't even get pounded down to this trend line, and we went blasting higher. So if the market gods are listening, I would love to see this just get pounded back to somewhere above this rectangle. But long term, I think it hardly matters what price is paid. Here's SLV, which is actually down more than 1% today. I would say it's riskier than gold, and a much less clean chart. And by the way, if you're thinking that this is all going on because the dollar is one-ply toilet paper, it really isn't. This is the U.S. dollar currency index, and it's been weirdly steady. There's not a lot going on with Forex and with the dollar compared to what we're seeing with precious metals. If this does start to plunge lower, that'll obviously help quite a lot with the gold bull case, but it's quite steady of late. Iran and bombs and all that has seemed to completely disappear. It's now an economic war, an economic strangulation. And I think they were dancing around the fact that China has a lot to do with that, because if you're going to want to punish anybody that dares trade with Iran, then China's kind of front and center with that. But as he said, wasn't going to name names. And maybe that's why Hang Seng was down today. I don't know. But the whole oil drama has died down quite a lot. A portion of the post-war gains are still intact. I'd call it about 50%. I mean, this was pre-war. This was the peak. We're kind of in the halfway mark of that, maybe a little bit less on the crude contracts. XLE, the energy select sector, is down almost 1%, having peaked last week. And XOP, which I mentioned last week as a perspective chart, actually talked about it on Thursday. We're a little lower, nothing very exciting going on. Is a tough chart to read. But just to mention it for the 1000th time, bullish precious, bearish equities. The one chart I'll show to hammer that home is this one, the S&P 500 divided by the long-term continuous contract of gold. And I like this one for a couple of reasons. One, it's nice and long-term. It goes back more than a quarter of a century. And it also captures not just an analog that had taken place, but a really curious one, because a lot of these charts I look at have just nice, simple rounded tops, rounded bottoms. This one's got kind of a combo going on. We've got this and then this green supplement next to it. Same deal here. And you may wonder, well, here we are. What was the equivalent of where we are right here? Autumn of 2007. The autumn of 2007, that's the equivalent. Something tells me something happened after that. Anyway, we are at the bottom of the hour, and I was going to show you the NVIDIA chart, but why bother? Because I'm going to show it tomorrow, the next day too, and there's not much to say about it. It's just really important to watch. So thanks for coming by. Appreciate it, and I'll see you tomorrow. Good night.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hey, what's going on, everybody? Last call here. The duo you didn't know you needed. Jermal Chandler. I'm Jermal Chandler. He's Gus Downing. What's going on, man?
Doing good. Yeah. It's an end to another successful day. Exciting little start to the week. Seemed like it was going to be a slow day, but market always gives us plenty to talk about.
Yeah, we've had a little range here throughout the day, but it's still been fairly quiet. And I mean, it's clear that this is basically a setup to a couple of crazy days in the hours or so ahead here, in the 48 hours ahead. But even the S&P's down 18. We got NASDAQ down 241 points. That's good for 0.8%. We got the Russell 2000 down. The lone positive index of the day is the Dow, up 150 points here. What have you been looking at today?
Yeah. I did a few things. I got, let's see. Most recent fill that I have on the board is Broadcom. I actually put this one on during Risk and Reward at maybe 10:40 this morning. It got filled at 1 p.m. So we had a long wait on that one, but did get filled on some long Broadcom. Just going for the weeklies here. I went for the 357.5, 360 short put vertical. So just looking for a little jump to the upside in Broadcom. Interestingly, we talked on Friday on. I do so many segments. Market movers.
I know. First of all, let's level set. Gus has been a busy guy today. So if he is a little off on where he is right now,
it's true.
Give him a break. You were all over the sheet today.
I feel like I was just opening the show at 7:30, and suddenly it's time for last call, and I got to come racing in there. Yes, absolutely. You do it all the time. I don't know how. It's incredible.
No, I don't anymore, but I have before. I've definitely had times where I did the morning show. I did whether it was OTCL or engineering the trade at the time, and then I did closing bell too. So I've been there.
Sure, I'll tell you who today makes me respect Kirk Herbstreit. That man, he'll be in 3 different cities on a college football Saturday. I don't know how you'd ever know where you were at or what game you were covering. So shout out to Kirk Herbstreit and his cute dog. We love Kirk
for sure.
But yeah,
so AVGO, you got long in here.
Firing on some AVGO. It took 2.5 hours, 3.5 hours to fill for me, but did finally get a fill home.
What'd you do?
Yeah, just playing week long expiration. I'm on August 31st, so a week from today. I'm playing the Mondays next week. Love the availability of expirations on this one. But basically just looking for a plug to get put in this. There's really, really good historical support. And by historical, I mean last 3 months, like amid the tech drawdown. I've been trying not to use the word drawdown. Amid the tech stagnation that we saw over the past few months, 360 has seemed to be a pretty clear floor for Broadcom here. And we talked on
drawdown in AVGO. This is 100 points.
Yeah,
this is 20%
for sure. And we talked about on Morning Movers on Friday about Broadcom posting up $60 billion in a partnership with Anthropic by way of Google. Broadcom makes chips for Google that Anthropic uses, the lovely AI flywheel, and how the market didn't really react negatively to that. Broadcom had a good day on Friday, which is strange. Usually AI CapEx has been scaring people as of late, but it seems like it just took an extra day for that fear to set in, and we've caught this little drawdown. So just hoping for the little tiny bounce. If this one gets off on the wrong foot, like tomorrow morning, I won't hesitate to take this one off and keep it pushing. But drawdown Broadcom down off these lows feels a little attractive to me into the next week.
So you did August 31st so as not to get into the earnings cycle like I did. I mean,
yes. Wanted to stay well clear of the earnings cycle.
But it remains to be said that this is a play that you can make on a name that doesn't have earnings, but will be affected by NVIDIA's earnings.
Yes, absolutely that as well. NVIDIA obviously in the equation for me here. And this is usually what I wind up doing into these NVIDIA earnings reports. It's obviously it's the hype of the market for the entire week. Everybody's looking forward to this big report. And I almost never trade it directly, but I often find myself bag holding 3 or 4 companies that are going to move as a result. And so I do often have a rooting interest, even though I don't have direct exposure to NVIDIA itself. But yeah, happy to grab a little bit of exposure here. And like I said, this is one, if Broadcom opens 355 tomorrow, I'm out. I'll take my 10% loss and keep it moving, or 20 or whatever it may be.
What'd you do?
No, I have I sold a put spread. So
you sold a put spread.
Yeah,
okay, which one?
357.5, 360.
Gotcha.
So yeah, looking for over 360.
360. Oh, okay.
Into next week.
Right at the money. Okay, I hear you.
That's the setup there. Just right at the money. And yeah, like I said, just basically thinking a plug gets put in here. This 360 level has shown itself to be a bounce level. Just hoping we get a few buyers coming in over the course of the week. And I do have the NVIDIA Hail Mary to save me at the bell if I need to.
True.
So we'll see what comes of that. Aside from Broadcom, other activity on the day, I just threw on Dollar Tree, got long Dollar Tree for my trade of the day into their earnings call this coming Thursday. Obviously, the most exciting earnings call from a green company that we have going off this coming Thursday would be Dollar Tree. So yeah, I sold another put spread here, 134, 135 weeklies, just expiring this Friday. And I accidentally wound up with 4 of these. I had on a working order for 2 and then cleared it, but did not cancel it. Thought I was replacing, put on an order for 2 more, got filled. And then as I was on the show giving out my trade of the day in an abundance of professionalism, suddenly 2 more got filled while I was sitting there. So a little bit more exposure than I meant to have, but we're going to let it ride. Feeling good about Dollar Tree. I just think the rotation that we saw, into small caps amid the stagnation in the S&P 500, I think that stands to benefit Dollar Tree at least a little bit. Slightly shifting consumer habits. Those gas prices are hitting me too, people. All right, so sometimes you gotta hit the Dollar Tree, save a little bit of money where you can.
I'm with you on that. Actually, I ended up doing a similar thing, but I did Walmart. I mean, after Walmart just had earnings, and earnings did not go so well, but stocks fairly low there, and I already had a play. I think I ended up after earnings. I'm pretty sure I put on these diagonals in here, and I actually had December, October because they didn't have the November expiration because they still had August. Again, for those who don't know, Walmart had August earnings, right? And the next earnings cycle would be November. A lot of times in those situations, they won't post the November expiration because they still have the August expiration, which has earnings. So now that August just rolled off, they just opened these Novembers today. And I was like, you know what? I was long the 100 strike and D's versus short the 115. And actually stock has jumped today, as you can see, but I was short these earlier this morning. And these were like 80 cents. And I'm like, I don't really want to do that. I actually just rather have a no position. So I just ended up putting on a zebra in here. It worked out great. I mean, like when I put it on, let's see. And you know what? I'll never understand why this thing is an hour ahead, but whatever. So if it corresponds with 11:30, that would be 12:30 this time. I put on the zebra right around here. So stock was maybe around 105. That worked out really well. Stock has taken off since then. So I put on this 95-100 zebra for the trade of the day. And then I still had these long 2 that I had in December versus the short October. I just, and I was short 2 these Octobers. I just bought these 2 back for the 15 cents and sold one of these and turned this into a zebra too. So I got double zebras. I got November, I got December zebras. But the idea is kind of the same. I don't know if you're, my thought process was like this. It's like, if we're going to have high interest rates, kind of like you said, then people are going to be going to the Dollar Trees, the Dollar Generals, Walmarts. And so that's kind of the play. And this one definitely has a ton of cash. I don't even remember what was so bad on earnings, but I don't think it really matters.
Nothing was bad on earnings. I'm long Walmart post earnings as well, and that was what confused me so much, was that they beat revenue, they beat EPS, they raised guidance on everything, revenue, EPS, same store sales, all of it. They just had a slight miss on comparable sales growth was the thing that everybody was a little bit afraid of. But yeah, to me, this one felt like one that the market was quickly going to say, wait, they just raised all their guidance. Let's get back involved with this one. I've gone a little bit more aggressive. I just have a naked short 105 put on the November expiration cycle. Actually, I was able to get that once it became available. I was looking for a put ratio on the same expiration cycle, but I quickly came to realize that it was going to cost me a little bit more buying power to get the put ratio on, and at the same time minimize the rewards. So I did what I often do as a management strategy will be leg out of those put ratios just into the naked put if something is well clear of the strikes where I need it. And so I just basically preemptively did that and just went for the naked put at 105 instead. So that's the second best performer in my portfolio today. Second only to TLT, where I've been accidentally assigned 600 shares. Oh, but hey, there you go. Got a move today though.
There's worse things to be long stock in.
Exactly. That's what I said. Usually I'd be with any other product, like if this was Meta, I'd be racing to cover these or figure out a way to manage this better. But with TLT off 5-year lows, it's like, why not? why not to see what happens? 84.33 is my cost basis, so not a long way to go.
There you go. Geez, good point. Good call out. What else did I do? Did I do in here today? I did a lot of rearranging, and I mean that's it works out on days that I think you have like this, where things are fairly quiet, if you will. Like, what's even the volume here today? E-mini S&Ps 913K. I mean, we usually like to see 1 million, so it's not like it's a dead day, but it's not exactly like a banner day as far as volume. So I just figured this was going to end up being somewhat of a quiet day once we started into it, and it ended up being so. I changed a lot of positions around, actually. You know, it's funny. I don't know what it was. I don't know why I had this thought yesterday, but I was like, you know what? I got all these, I got a couple of diagonals that are long October, short September, as we're coming up. September expiration is not too far away, and they're either a little bit out of the money. And I'm like, instead of having these diagonals, I might turn some of these into zebras. And that happens to me. I don't know if that ever happens to you, where you kind of get an idea or strategy in your head, and it just, you make it fit in a bunch of different, just about every trade I did today here is a zebra. So I closed out Pepsi this morning. This was a diagonal, that short call. I mean, it was mostly in ones where either it was in the money, which this was basically in the money. I was like, all right, cool. This thing is pretty much done. I made some money on this. I'm going to close this out. I still want to be in Pepsi. Why? I mean, well, you just look at the stock. This thing is still kind of down here. So I was like, well, I still want to be long that. I don't mind being long that. So I'm just going to turn this into a zebra. And I did. And that was a trade there. Wells Fargo, I think similar deal, I think. I don't know if I ever posted the other piece of this, but I'm pretty sure I turned this into a zebra too. I forgot. Yeah, sorry about that. I gotta post that one. I forgot to, I posted it, but I forgot to add it into the page. So I did that, turned that into a zebra. Kroger, take a guess. Turned it into a zebra. Walmart. Told you about that one. Definitely a zebra. M&Q. This is a year-long trade, and Mike and I talk about these a whole lot. I was short the 31K straddle and regular September expiration, 24 days to go. Obviously, we got 21 days coming up here real soon. So I was short. This is fairly in the money. This straddle. I rolled up. And further out. And here's the thing. I mean, this is let's call it $300 more, right? As far as this is going from the U contract to the Z contract as far as expirations. And so about $300 more. So I kind of had to roll up a little bit. I was at the 31K. I rolled up to the 31,250 just to make sure I could collect. Because anytime you roll these up, you want to make sure you collect. So I had to roll this up further to be able to collect. I collected $87, which again, for M&Q is times 2, so it's like $174, if you will. So that's really what I collected here. So I moved that up and rolled that out. McDonald's, I did something. I turned it into a zebra. That's right. It's a zebra today in McDonald's. Procter & Gamble, take a guess. Turned it. No, actually, did I turn this into a zebra? I don't. Oh, I did. I turned it into a zebra. I had a short call in September. And I just bought the call spread. I'm already down on this name, so buying the call spread is not like I was actually adding to it. I'm already down on this call. I ended up buying this call spread, so I guess dollar cost averaging, if you will, you want to call it that. So turn that into zebra. STZ, you're damn right. I turned it into a zebra. So the word of the day is zebra here, folks. Zero extrinsic back ratio spread. It's essentially like being long stock. And I mean, you look at the names I did it in. I mean, Pepsi, Wells Fargo, Kroger, Walmart, sure, I would like to see them go up, but I mean, I don't think they're going to tank. They're not dropping 20% in a day. The worst you'll see is Walmart on earnings, and this is McDonald's stock. This is where this thing is. So that's the play.
Yeah, the joke I keep telling with this TLT position is I've converted it into a zebra the other way. I have a synthetic zebra. Usually we talk about a zebra as being a way to synthetically control stock. I have it the other way. I've created 6 synthetic zebras with my 600 shares. Is the way that I'm choosing to frame that to myself. No, I think you make a great point as well. It's really funny the human psyche and the way things work out with how you do just get set into a strategy that you want to try to apply everywhere and make it fit to these things. And sometimes that can work really well for you when you're rolling, and sometimes it won't work so well and you need to take a step back. It's like I don't know, I love a good sports analogy, I guess, to tie it back to that. It's like if you've ever been watching a football game and you say, every time they run the ball, they get 12 yards, and they won't run the ball. Yeah. It's how it feels sometimes. It's every time I sell premium, I make $100. Why do I keep buying things?
I know. Why don't I just keep doing that? Just do it.
Exactly.
For sure. You got any Bitcoin exposure? Again, this is This is 6 days in a row?
Yes. Yeah.
6 days in a row. I mean, I would love to. I'm not really that surprised. Once I saw the 4th day in a row, I was like, this thing has legs. And now I thought we would see some resistance at 75K. We did pause slightly, but not really. We went straight on through. And so now it seems as though, did we touch 80K today? What was the high? We did.
I believe we
80K,
did. Yeah.
80K today. And that's what, we touched 80K today. So that might be the short-term resistance. I guess we'll see. But look, this thing was waiting for some good news, and it finally got it.
Well, and it's funny because it didn't even really get it. I mean, I was talking about this with Errol on Risk and Reward today. I mean, do we have any new information here? Trump pushed Congress to pass the Clarity Act, sure, but we knew before that Trump liked the Clarity Act and loves crypto and wanted to get it passed. All he did was verbalize that, but it was just like this was just a kettle full of gunpowder this entire time, just waiting to go off, waiting for anything to inject some life back into it. And now we do see it jumping. I do have some exposure to answer your question. I'm long IBIT and long ETHA, all in a leap context. IBIT, I am deviously long. When Bitcoin was at like 85, I was just loading IBIT. I was like, it's 120 is inevitable. This is just a holding pattern. And I still kind of find myself aligning with that sentiment. I was just far too early getting involved with these. But I do have long IBIT. I'm long everything. Gamma plays. Let me lead with that. But I have this coming January 15th, 105. I have June 17th, 2027, 100. December 17th.
Wait, hold on. You said 105. Wait, what are you in?
105 strike, yes.
IBIT.
Yes.
Oh, really?
Yes. Yes. Far off. Oh, yeah.
You are up there.
Oh, yeah. This was
this coming January.
Yeah. Okay. Yes. I put these on when IBIT was in like the 60 ballpark, and the whole thesis was never that IBIT would touch 105. It was just that if we suddenly get kind of this move that we're getting right now in Bitcoin, if we suddenly get the $15,000 day, suddenly the call side expansion on these would be giant, and I would be able to just get out of these even if IBIT was just at 70 or whatever. Yeah. Obviously, that has not come to fruition. That one is the deadest of the bunch for sure. That one's basically a hold because I might as well at this point. Then I also have 100 strike.
I mean, this is a trip though that these have like 30-cent bids. Honestly,
it's kind of incredible. I mean, the 105 is sitting at what 21, 22 at the mid right now. Which is kind of insane that there's any liquidity at these levels at all. But I don't know. I mean, there's certainly people screaming Bitcoin to 200,000 out there. So I guess.
Yeah, you think? Wow. Let me see.
Something for everybody.
But where's the biggest open interest in this thing? At least this January.
Good question as well.
That's 47,000 right there on the 50 strike. That sounds about right. It's always the big strikes. 46,000 on the 60. Let's go up to the 105, Gus. Let's see what the party people. 400. 44,000, of course.
I was going to say, at the 100 strike,
Of course. You would imagine. That's how it goes.
Plenty going on there.
This is a powerful move, though, man. I mean,
I have a 4 stack of these: January, June, December next year, and then also I have January 21st, 2028, 135 strike in the back pocket as well. That one's
a believer.
Yes, that one's actually the closest. That's certainly and especially with the time horizon, but that's certainly still redeemable. Was cost averaging down on all of these and extending my time horizon as I went in.
And you said you're in ETHA too?
Yes. ETHA, much less exciting, but much more realistic. I have June 17th, 2027 30s on this.
I had shares in here recently. I should have held on to them. I thought I did. Wait, maybe it's
something like 20% on this.
I got out of this. I thought I had something in here, but maybe not. Actually, this doesn't always show shares, though. I just realized that recently, unless something I'm missing. It shows the option trades. But it looks like the last time I traded any options was in May, which, God, that seems not that long ago, but somehow it is.
Yeah, I'm not even as bullish on crypto as this would reflect, really, like in my heart of hearts. But if there's a product to play for tail risk in, it certainly is crypto. And so, as Bitcoin got lower and lower, and especially as we got sub 70, that was when I added the 2028 strikes. It was like, it feels like it becomes my obligation to at least have some exposure to the space. Because if there's anything that's liable to suddenly 2x in a month and a half or something, it's Bitcoin, it's crypto as a whole.
Yeah, it's a fascinating time when you look at what's going on with these 30-year yields. Again, they were at 20-year highs. I mean, they backed off a little bit, but they're still kind of right there. Everybody's waiting around for this Jackson Hole thing to see what Warsh says at his first Jackson Hole meeting. I mean, he hasn't said anything really at the previous 2 Fed meetings we have. I don't know why we think he's going to say something, but it is what it is. Let's see. SPX here is expecting anything.
It is hilarious. I mean, he just keeps saying, "I'm going to be quiet. I'm not going to tell you guys anything." And everyone's like, "I can't wait to hear what he says."
Yeah, right.
He's very transparently not going to tell us anything.
Well, 14%, 14% move for the end of the week. Not 14%, 14% IV implied volatility for the end of the week, which is not ridiculously high, and then not much for Monday. At least not as expected, which I'm kind of surprised by because that's the end of the month, and we all know the end of the month flows sometimes make markets move. But nevertheless, I would say the biggest thing has been the TLTs, the bonds of the world. We've been seeing those move around. One minute you come in, you see ZB down to 107. Next minute you see it hitting 110 almost. Which Chris faded last week, which was a smart fade. But I like trading the other stuff around it. Like I like trading the tech vol, because again, if the interest rates are going to stay high, that's going to affect tech vol for sure. They're going to go up because, again, a lot of tech is based off of profits in the long term, and we'll see how that plays out. The Walmart play, the Dollar Tree play, I like those probably because I want more the movement, I would say. But it's definitely become a big story in the market, this whole interest rate situation.
Yeah, and I found myself, especially in an earnings context, gravitating towards these more boring companies, brick and mortar companies, Walmart's, Dollar Trees of the world, just because it's nice to actually have some semblance of an idea what's going to matter on the earnings call. Because that's the thing about these tech earnings is obviously, it feels like the core numbers don't matter at all anymore. It's all about guidance. It's all about CapEx. There's this whole giant calculus that you have to do. And the joke I told on Trade of the Day today is if somebody just came to me and told me every single thing NVIDIA is going to say on their earnings report, it would still be tough to trade because you have to decide how the market is going to digest all of that information as well, which is kind of its own thing. So, it's refreshing having some Dollar Tree and just saying, man, I hope they beat EPS. It's like I don't get to have that thought very often anymore.
Unless NVIDIA gets below 200 in the next day or two here, I don't think I'll get in. Because again, I got plenty of other things. I got the M&Q. I got countless other different names, honestly, that are going to be affected by it. So I don't necessarily feel the need to jump in. I mean, at all. I mean, I'm sure metal will move off it. I got NBIS. I traded out last week. I got WDC. I got all these different things that somehow are going to be affected by it. Some of these I might have to close, actually, particularly maybe the last two, NBIS and WDC. I'm actually short following both of those. So I'm going to keep an eye on those because who knows what happens here. Again, we're still in a low vol environment. I mean, front month VIX futures are 17.5. VIX itself is 1585. So it's not like we're in this crazy high vol environment and waiting for that number to come out from NVIDIA and then vol is just going to completely collapse across the board. Like, might not necessarily go that way. We'll see.
It's true. Marvell on Friday too. Sneaky.
Is it really?
I think so.
Damn, I didn't even realize that. I haven't traded this one in a minute too. Yeah, August 27th. Yeah, how about it?
Or is that's Thursday also?
Yeah,
alongside NVIDIA.
I don't know. I don't know if I'm going to be as focused on that because by the time it gets to Friday, it's fantasy football draft week.
That's true. That's true. I'm going Wednesday, Thursday this week.
Yeah, Wednesday, Thursday. Yeah. Okay. All the games are done, right? There's no more games, right? I'm seeing these trades today. I feel like all the preseason games are done.
I believe so. Yeah, because the first game is
4 weeks, but now it's 3 weeks, right?
Yes, I think so because they decided
you get a whole week to do all these transactions.
Well, plus they're starting it on a Wednesday this year, which is weird. Yeah, it's the Wednesday after this Wednesday, the first Wednesday of September.
Wednesday after.
So 9 days from now. So yeah, they're not gonna. They wouldn't have preseason.
Yeah, I think they stopped doing preseason this week because why bother? And it's just you have enough time. Well, I think the cutoff changed too, right? Like you have to cut basically like 40 dudes now for the next you have basically since late last weekend.
Yeah.
To next week to cut 30 dudes.
I believe so.
Right.
Yeah, and then it's a giant shake up after that of where everybody winds up if people get signed Yeah, it's craziness.
So our point is, who cares about Marvell earnings?
Exactly.
You know what I mean?
Who cares about NVIDIA earnings, really?
Who cares?
I'm trying to figure out if Rashad White really injured his ankle doing an ALS ice bucket challenge. Is that what that's? Yeah, that's the speculation right now. Yeah, the Commanders, they posted a video of him doing an ice bucket challenge, and he's in a chair and he stands up and his foot kind of slides out from underneath him, and then he hasn't practiced in 2 days.
Oh my God.
so that's the growing speculation. He tweaked his ankle doing the ALS ice bucket challenge.
That's rough. Prayers up, Rashad.
Yeah, hope we find a cure for ALS.
Prayers up.
Genty got hurt at practice as well.
I did see that. Yeah. That sounded bad. I haven't heard any details on it, but it sounded bad.
Yeah, yeah. It's ankle sprain. It was bad. They all went to
They said he couldn't put any pressure on him.
Yeah, he was helped off the field, but it looked like knee. And
apparently he's fine now.
It's actually ankle. Yeah,
apparently he's fine now.
That's the deal. It's like now they're back to
either he's fine now or Ben is trying to get us to draft him this weekend and get us in charge.
There you go. It's wishful thinking. I already drafted
Ben. Already drafted Ashton J. You can draft him as well. Don't worry about it. We got about a minute and change here for the close here. E-mini S&P's down 18, NASDAQ down 265 points. The Russell down 20, and again, the Dow is the lone one up for the day, 158 points. Not many big movers that I remember on today. Honestly, that I can think of when I look at a list. I don't remember. NVIDIA is probably one of the bigger ones. Other than that, there really hasn't been many names moving in any direction. Which again, this is a lower volume day, 960,000 contracts in the ES. But I would say it's a reshuffling day. You can kind of see it taking shape. Few themes still taking place here. The gold is moving to the upside, and Bitcoin's still moving to the upside. So those themes are still intact, but everything else is up for grabs, at least for right now.
Yeah. Philip Morris logging another quality day here.
Is it?
Yeah, I have a running commitment with myself. I use the Zins. I'm not proud of it, but every time I buy a can of Zins, I put $1 into Philip Morris. that's how I hold myself accountable.
I thought you were going to say you put $1 in for cancer research.
Oh no, heavens no. I might need the cancer research later, I guess.
That's what I thought you'd do.
Maybe later I can take my giant Philip Morris bankroll and liquidate that and give it all to him in a lump sum.
Give you more.
I'm going to be killing the cancer research people on transaction costs if I'm donating $1 at a time.
Oh, that's great.
But
that's great.
Yeah,
there it is. Markets close. E-mini S&P 7669 down 22 points. The NASDAQ down 286 points at 29,100. The Russell 2000 basically at 3,000, down 20 points. And the Dow is your lone winner on the day, 53,476, up 124 points. It's fairly quiet today. Market seemed a little bit lower volume, but I think it's just a day that we're gearing up for. NVIDIA earnings coming this week and Jackson Hole. So stay tuned for more content. We got Tasty Crumbs coming up in a little bit. Me and Jim about to go at it. He's a good dude, very, very smart and knowledgeable guy, former floor trader and the proprietor of Kai Wealth. So we're going to be here talking about options and things that you can look for, not only in the past week, but coming up this week. So stay tuned for that. Gus, good to hang out with you, man.
Yes, sir. Been a pleasure.
See you tomorrow morning.
That you will.
All right. See you. Don't let today's market fool you. It might not have been a whole lot of volume, but I tell you, there's a whole lot coming along the way. Welcome to Tasty Crumbs. I'm Jermal Chandler with tastylive, and I'm joined by Jim Karsan, the proprietor of Kai Wealth. How you doing, Jim?
Happy Monday.
Happy Monday, my friend.
Post-expiration Monday.
Yeah?
Jackson Hole Monday.
Yeah?
Few things going on.
Absolutely. NVIDIA Monday.
NVIDIA Monday.
If you will. I mean, where do you want to start? I mean, we got those three things. We got interest rates. Where you tell me where you want to start today? We could start with NVIDIA, I guess, but it's up to you.
Yeah, no, your call, man. NVIDIA is probably a shorter conversation for me.
And it's in order. I mean, that comes up on Wednesday after the close.
Yep.
Earnings are going to really be felt on Thursday morning. It's gonna. I know you don't. I know you dabble a little bit in the single name trades, but
sure.
This is a big ecosystem.
Yeah, absolutely. This is an options ecosystem too. So it's more important and more predictable, I think, than the flows in other places. If you look at the historic movement in NVIDIA into and out of earnings the last several years, abysmal.
More recently, you're saying?
Yeah, last several years. So not just a couple of months, last several years. And I think the average, give or take, 3 to 4% on average during this week. So if you can take it from several different points, it's pretty consistent from the morning of earnings through the end of the week to the end of the close, the end of the week, from the beginning of the week, the end of the week. They all tend to be about 2 to 5% negative. And I don't think that's a coincidence, because where is most of, again, I like to teach people how to fish, not just give them the fish here, a couple crumbs. Why do you think that is? What is the positioning in NVIDIA in terms of like the call versus put positioning? Where's the
long?
skew?
People are long.
Long what?
Long calls.
Long calls.
Yeah,
long calls. And that's important. It's not like the index. It's the opposite, right? So what do you think happens when you get through an event? So you have a big event vol, which is earnings. And most people, retail, institutional, everybody's long calls. So what happens after post-event?
Little collapse, little pullback.
Vol collapses. Dealers are short those calls, long stock. So they got to sell that stock. These are the Von and Charm flows. It's the same reason for Fed meetings, elections, big event vol, and the index level, you have the exact opposite. You tend to have the opposite reaction. Every election, we've talked about this at length, every Fed meeting has an initial push up, at least, post-event. Because no matter what happens, whether it's Trump who gets elected or Biden or whoever, an event, once it's done, is done. And that means that vol that existed.
Can apply to a lot of things, actually.
No, but the point here, right? You understand what my point is?
No, for sure.
This is an event. There is an event vol. There is, and that vol, once whatever the news is, it's done, and the net reaction to that event is whatever the flows from that are going to be whatever the skew positioning is. So the big idea here is long calls in NVIDIA by most customers. Dealers are short call, long put. So the event comes out, and the higher probability during this period is NVIDIA down. And they have, by the way, beaten every single one of those earnings. So don't tell me it's fundamentals. People will tell you after the fact. The narrative will be, what will the narrative be? Well, they beat the earnings, but just wasn't in line. It wasn't as much as people hoped for. Oh, okay, you can always change that narrative after the fact, but it's flows. It's flows that matter. So that's my view on NVIDIA. I'd be looking for opportunities to sell this week in NVIDIA. Of course, we have the other issues this week, which could affect it as well, which is Warsh and Jackson Hole, which we'll get into.
I was going to ask you that in general, and again, it can be NVIDIA, it can be whatever, but there's really not. I mean, I guess we can add maybe Apple or Meta to that mix. Does that make you want to less trade on days like that, where you expect that type of flow? I mean, because these are also similar names where maybe Meta not so much recently, but by and large over history, people are long calls into those events. They're playing for the crazy upside move afterwards, and they're playing for the excitement. And like you said, a lot of times, if the excitement doesn't happen, then the vol collapses. And then sometimes we see a move to the downside, I would say, smaller than we would expect, mostly because it's like the people have been let down, even though the numbers beat.
Yeah.
So does that make you not want to play those, or are you interested in
I want to be clear. This is one of the few pressures that we know This is supply and demand. We know those call positions are where they are. We know the skew is where it is. We know dealer positioning is there. Does that mean the only thing that can happen is this thing goes down? Of course not. It means it's a pressure, which means if it's bad news, things going down big. We already know that, right? If it's really good news, it's still going to go up. And if anything, you get a gamma squeeze. The thing could be a real powerful move. But the good news is the bar is so high that the beat will have to be so far beyond. So the odds of that, it can happen, but the odds are quite low relative to the rest of the distribution. At baseline, if they meet or even beat small, those expectations, the amount of pricing in those calls is so high that the move is just not going to be big enough in that situation. And the odds are that those flows will lead to a decline. That is how this works. Does not mean the reality doesn't matter. But this is why flows matter. They are an edge. Right? It's one of the few things that we know. We know positioning. And positioning, at the end of the day, is one of the few things that you can measure and say this can be measured and is supply and demand on the other side of this. So my point to you is, yes, can we get some crazy number that well beyond what anybody expected is possible? Generally not likely because, again, the world is pretty tuned into these data sets. The range of outcomes is relatively small, relatively speaking, unless they have really, really been able to hide things. And odds are they, if anything, they beat, just like they have every other time, by some relatively small margin. They're relatively good numbers, but the flows lead to a poor outcome.
So this is definitely one of those names where it's one of the few times where you can actually trade the index level, right? Because it does affect that.
Yeah, and I didn't answer your question fully. And you said, well, in this case, would you not trade it? And I would say no. I think because it's big options positioning, because it's a center for options positioning, you have an edge. So you want to trade it. Now, I do think you should be active. I think those flows are generally expressed not just over the course of the week, but over certain windows during the day. And if you get those pullbacks, you want to take those profits and keep trying to capture from that side. I don't think it's just a max short, right? It is an active short, particularly when those flows are present, and you want to be monetizing and revisiting it throughout the week as that ball decays.
I think you kind of stated this. I don't think there's any question of whether NVIDIA beats. It's just a question of can the expectations be met, right? And I think some of that dovetails into our next topic of convo, which is the 30-year yield and what's going on with bonds more recently, right? For those who don't really understand, I mean, look, it boils down to this. A lot of tech is based off of future earnings, and if interest rates are going to be high in the future, then that's going to affect them. And maybe that's something NVIDIA has to answer in this earnings. Maybe they choose to stay away from that, but we're aware of that. And so this is the conversation between NVIDIA and between, which we'll get to, I guess, probably at the end, Warsh's upcoming Jackson Hole meeting. But this has been the thing that's been weighing down stocks more recently. What do you think?
What do I think? We've talked about this, and I've said, people that have been following me for years know my views on why the long end of the curve is going higher. There are three major reasons. The first, which has been around for a long time, now decades, and is consistently building and will continue to build for the next decade, is populism. You have, it's really been since 2010, 2015, Occupy Wall Street, the Tea Party. This was the beginning of that generation, that millennial generation who was born in 82, who has only seen increasing inequality. 36% of them from 18 to 36 are stuck at home and with mom and dad. That populism, that political coming of age and baby boomers dying is driving a need to spend to give money to these people. That fiscal spending, that protectionism that's coming from that, all of that leads to structural inflation. And that's a big part of why you're seeing the long end of the curve going higher. But there are two other reasons which are connected. We've talked about the Strait of Hormuz. Strait of Hormuz is a function of the U.S. needing to deal with these circumstances and underpin the dollar. We've talked about that on here. That is not, as I have told people, going to end. When everybody was like, look, I told you there was a memorandum of understanding, we got a deal. I'm like, oh, wait, just wait. And sure enough, that also has not come to pass. Strait of Hormuz is not opening, and that is a structural inflationary pressure as well. But there is a third reason, which is supply and demand. Everybody and their aunt and uncle and mom and sister refinance in 21 because interest rates were zero. If you didn't, I'm sorry. Can't help you. Right? Like maybe you should tune in another show. I think you're beyond help. But everybody refinanced in 21. Average duration of that debt, 7 years. That means there is a tidal wave, whether it's corporate debt, sovereign debt, real estate, you name it, debt, margin debt, that has to be refinanced, not exactly at 28, but starting now for the next 2, 3, 4, 5 years. That is a tidal wave of supply for bonds or a bid for yields.
I think
who's gonna come on the other side of that?
I think we have a debt slide, actually, don't we? Let's pull that up if we do. To your point about the debt, I mean, that's obviously been one of the bigger things too, the amount of debt that we are accumulating on the regular as far as the U.S., but you've mentioned it to that degree as far as how that's affecting regular people.
So the majority of money in this world is debt. People are like, debt, money, they're the same thing. The only difference is one has an expiration date. And when interest rates were zero, they're almost identically the same thing because there's almost little to no interest. But the expiration of debt, in other words, that 7-year duration, means the higher interest rates that we have been experiencing, that the majority of companies and people have not felt the pain of yet, are now, from a supply-demand perspective, going to have to start making decisions based on that higher interest rate. If you bought, for example, real estate, right, and you had a 7-year ARM, and you did it as an investment, not as to live in, and that was yielding 6% after costs, and you borrowed money at 2.5%, that was great. You're making 6% on the cash, the 25% down, and the other 3 parts, the other 3 quarters, you made what? You made 3.5%, 6 minus 2.5, 3.5%. 3.5 plus 3.5 plus 3.5, that's 10.5 plus making 16.5% a year. It's pretty awesome. What about now? What about when that debt comes due? Now you can't borrow money for less than 7%. It only yields 6% cash on cash. You're going to borrow more money at 7% with the hope that those interest rates come down, you get to refinance, or you're now going to have to go sell that asset. That's real estate. That's true for every single business on the planet that is using debt. This is why, the biggest reason why profit margins are so highly correlated with interest rates over the long run. People don't understand this. It's not just multiples in the market that are highly correlated with interest rates, but it's profit margins over longer periods of time. Okay? Profit margins in 1982, when interest rates were at their peak, were at the lowest they've ever been in 125 years. That's not a coincidence. When you can't borrow money, the leverage that you get to improve profit margins disappears. So understand that these higher interest rates over the long run, that Schiller won a Nobel Prize on looking at 500 years of PEs, normalized for 10-year interest rates, and all it is for 500 years is a mean reverting sequence. I get all the time, well, Cape, look, last 10 years hasn't. Over the long, long run, it really, really is 1-to-1 because the earnings yield you're getting, ultimately from the S&P 500, has to somehow be linked to the risk-free rate that you're getting, right? And profit margins are also highly correlated with it. So the big idea here is interest rates matter. They're the most important thing in macro. Not even a question. They are the cost of money. It is money supply. And it drives not only multiples of assets, but drives profit margins of assets as the primary input. And here we are with interest rates breaking out for all the 3 reasons I just laid out. Strait of Hormuz and all the global conflict, populism, right, and fiscal spending, and a runaway amount of spending. We're not going to austerity anytime soon. And lastly, supply and demand. Everybody on the planet has to refinance.
So I got to unpack a couple of things here. First, I got to start with Occupy Wall Street. You threw me for a loop. I forgot about that.
And it happened the same time as the Tea Party, I'll highlight, which was just the left and right of the same dynamic, which is the beginning of populism.
Where we were, and I think you were at the Board of Trade at that time, right? I was at the Board of
Trade. The CBOE, yeah, across the street.
It's across the street. But I was working at Peak 6 at the time, and we were on the old grain floor, and we were looking right down to LaSalle, and they were right there in front of, of the whole bill. I mean, we had to walk right by people when we were walking in.
They were occupying LaSalle Street.
It was a trip. I mean, it was absolutely a trip. So it didn't just happen in New York. It happened in a lot of places. For those who don't know, that was quite the movement. I totally forgot about that. But Jim, if I'm a trader day in and day out, if I'm a retail trader and I've been trading, let's just say since the pandemic, we've seen the volumes. We all know a lot of people have. And I've seen this time period, I'm thinking everything you said, I'm not worried about. The government's going to fix it, especially the Trump administration. It'll be fine. Why should I worry about interest rates being high? Why should I worry about that at all? They just came out with what they just called it today. I try not to pay attention as much, but Operation what? I don't even know what it was.
They're going to bomb the bomb traders. They're going to use the military to take out.
Thank you, Ben. Operation Economic Outcast. If you hear that, you're like, we're going to get saved again. We're going to be fine.
Yep.
Or it's another taco trade, right? I mean, why would I be worried about this environment?
It's a great question. The reality is when you are in a time of structural deflation, when you don't have this populist impulse and political pressure to stop doing supply side economics, but people are saying, I need money, and you have this refinancing, all these pressures I've talked about. The bond market, the long end of the curve, can be bigger and more powerful than the most powerful country's Federal Reserve and Treasury, believe it or not. It's actually probably the only, I would argue, force that's more powerful than the US government and the Federal Reserve itself. We see this again and again throughout history. Now, it doesn't mean that they won't have enough. They're going to try. They're telling you, they've been very proactive. They are going to give it everything they got. He keeps firing round after round, right? Yen intervention, right? Buyback, doubling of the buyback on the long of the curve. Now, this operation, what is it called again? Point being, it is
economic outcast.
Economic outcasts.
Because I think the idea is that they're going to basically
isolate Iran,
cast aspersions on those who don't follow.
Yeah, if you haven't been playing along, it hasn't worked out so well so far. And if you think the Treasury is big enough and powerful enough to just isolate Iran, you're missing the big point. This is not a war with Iran. It's a war with China. So when they say Operation Economic Outcast, that means we are going to try and cut off China from Iran. How do you think China is going to feel about that? Is that going to be an easy thing? No. Much like it hasn't been an easy thing to beat Iran because it hasn't been about Iran. It's China versus US. This is why we've told you the Strait of Hormuz is not opening, because it's two giant Goliaths, fighting over control that neither one can ultimately win. The same is going to be true economically. This is just them firing another round, trying to support this market, trying to convince the market that this is going to be resolved. This is not going to be resolved. You cannot easily open up the Strait of Hormuz or beat Iran, because it's not about Iran. It's about beating China. Do you think the US is going to easily, or any time in the near future, be able to isolate Iran from China? Ask yourself that. I'm not saying it's not possible. Not likely.
The last thing we got here that's going to be big towards the end of the week is Chairman Warsh's first Jackson Hole meeting. And it comes amongst the backdrop we just named. NVIDIA obviously is a big earnings play, but that has nothing to do with this, really. We've already talked about the effect that the rates are going to have on NVIDIA. It's more about the bond market and Warsh, and how his lack of really saying anything has led to more activity than you would have expected.
I have not seen somebody with credibility lose credibility more quickly than I have at Warsh ever. And it's his own undoing. I mean, the reality is to argue based on your history that you are going to be kind of a protector of the independence of the Fed, to protect price stability at all costs, and then to, in your first meeting, essentially, set of meetings, basically say, hey, we're going to change the inflation measure we're looking at. We're going to go for the one that gets rid of all the recent kind of outlier data and it's literally the lowest measure of inflation they could find. That's automatic skepticism on my front. And then to say, you know what, we're just not going to intervene. We're going to let market pricing do things and we're not going to communicate. What does that tell you? What does that tell you? That tells you that his mandate, in my opinion, is to be as uninvolved as possible, to have no constraint that forces him to do the things that are actually necessary, right? Which then allows what? The dominance of the Treasury in the short term to take control. I'm willing to bet you by the time he is forced to do something, it will be lowering interest rates. I'm not saying it's now, but he is going to stand pat in the face of, he should likely be raising interest rates in the next 5 months, right? As we start to see inflation tick up.
Theoretically.
Right? And I think he's going to, what this allows him is to say, look, we got to wait the data, let the markets do what they want. We'll follow the markets. And 2, he's going to have a measure that's very slow that allows him to not react past the midterm, right? That's why they're laying out this framework. And then what comes next, as I've told people, is an eventual step away from the administration and allowing of inflation to go higher and the markets to come down, at which point he will have an excuse to respond with lower interest rates. I will bet anyone on the planet his first move, not now, but coming up next year, will be lowering interest rates.
So you don't think
in the face of inflation?
You don't think there'll be a hike in December?
There will not be a hike in December. Okay. And now to Jackson Hole. What does that tell you about Jackson Hole? This is going to be a bit of a nothing burger. He is going to talk in circles, much like he has, buy himself time, buy himself space in terms of lack of accountability, because we're just not looking at the numbers anymore. We're going to let markets, we're just going to step away, which is what he said so far. And any inflation measure which would hold him accountable is going to be either A, manipulated, or B, changed to a measure that validates his thesis at the time, which is to stand pat.
I mean, it's not exactly a Super Bowl week, but it's definitely a week where we got a lot going on. There's a lot happening here. I'll tell you right now, myself, I'm looking at NVIDIA. I'm not playing it unless stock below 200. I don't think I'm going to put on any trades, but I got more than enough stuff right now. I mean, I still have the MNQ year-long trade where I'm short upside in that and shortfall in that overall, but it's really a long delta play. I have plenty of other tech names that will be affected by the NVIDIA earnings. So those are the ways that I'm playing it. Again, unless the stock takes a big digger below 200, I'm not getting involved. And as far as the rates, I'm playing everything else besides the rates themselves right now. I just find those much more of a compelling trade, especially in the tech space. Like, that's much more compelling trade than playing rates itself. I don't love being a bond trader. That's most of the reason why I stay away. However, I will say, if I see 107s again in ZB, that's an interesting level. I think that's the level that causes, honestly, the White House to panic. I think we've seen that a couple of times, and it's clear they're watching the bond market, and so I will keep an eye on that for sure. 10-year yields are being at 4.7, but that corresponds right now to 30 years at around 5.3. But again, we saw a week ago, an 818, we saw 30-year treasuries hit 107, and that's when they panicked. And we saw what happened the very next day. And I feel like that's something we saw earlier in the year too. As soon as they see these levels, it gets scary. So if you're looking for an area to jump in, that's it. We got a few seconds here, 30 seconds. I'll give you the last word. What are you thinking for the week and end of the week? And August 31st, end of the month flows, possibly too.
Listen, we talked about 3 weeks ago now, about watching momentum. Remember, I want to revisit that theme. Momentum was strong, I said, but watch it. If it starts to weaken again and starts to head back down to its downtrend, that's your sign. That's your sign. And it started to do that about a week ago, right as we're going into OPEX, which is when I said, be very careful. That's the window. Take a look at that momentum chart. How does that look? How's the NASDAQ doing today relative to the S&P? Not so hot, right?
Lower by 1%.
Yep. So watch that. That is a kind of danger sign for this market if that continues, which I think is likely in the short term. And again, we just talked about NVIDIA and that general complex, and post as we get through NVIDIA earnings, how that's likely to have negative flows that only exacerbates this here. You're likely to get kind of things drawn into this vortex. I do think by the time this is done, this will be about just less than a 10% decline, 8 to 10%, could be more. I think that's about what we'll be looking for, peak to trough. Not going to be volatile per se, and maybe that last part, maybe we get a 2 and 3% candle at the end. But this is really market down, vol down.
Like a sliding low.
Yeah, it's a sliding low. And I think it'll be a viable dip eventually. Now, question is, will that be at 8 or 10 or 12? Again, I would bet 8 to 10. I wouldn't hold it past then probably. But I do think that's what we're experiencing now. And eventually, I think they're going to come in with a whatever it takes type response, this bond market, which is going to give us a nice little rally back towards the midterms and get, but it's going to be volatile from there. And this is an expansion of the VIX, particularly in the long end of the curve. As I've said, calendars have worked well. I think you're going to continue to get that as long as you're playing that general range. And then from there, right, things start to get really, really interesting into and out of the midterms.
That's exactly what I would put on NVIDIA if it gets below 200 a calendar. Folks, thanks for watching. He's Jim Karsan, founder of Kai Wealth. I'm Jermal Chandler from tastylive. Thanks for watching us here on Tasty Crumbs. Join us every Monday at 3 p.m. Central Time. We're going to bring the heat and have fun with you. Take care.
What's up, Tasty Nation? Welcome to the show. Happy Monday. Hopefully you had a great weekend. My name is Mike Butler. I'm here with Gus Downing, and we are ready to talk all things markets, including football markets. It is my first draft tonight.
Oh, tonight?
Tonight. Kind of early.
Getting them rolling? This isn't the league that I'm in with you, is it?
No.
Okay, this would be a good heads up.
Yeah, surprise.
Yeah, I have. Mine are going off Wednesday and Thursday this week. Are my first two of the season. So I'm excited. Fully researched. You and I both obviously have drafted tens, if not hundreds, of lineups by this point already.
Yeah.
I'm excited to get things rolling and hopefully put my friends into the dirt this year.
Yeah, it is one of those funny things where it's like, if you're an options trader, you're probably a fantasy football junkie or some kind of fantasy junkie. You probably have played poker in your past life. You're probably an engineer of sorts. Like, it's just, everything's just all the same. It's all just numbers.
Yes. Numbers, expected value, law of large numbers, statistics. It's all the same. Speculation, appetite for speculation.
Yeah.
There's a lot of overlap across the board.
Indeed. Speaking of appetite for speculation, NVIDIA earnings this week, it's going to be wild. We're calling it, some are calling it the Monday Night Football of earnings season. They have a 12-point implied move for the earnings announcement on the 26th here, a couple days away on Wednesday after the close. So we'll have an earnings preview written on the tastylive News and Insights tab. So check that out. Probably today, get that done. But yeah, it's going to be wild. Markets are selling off here. E-minis down 20, NASDAQ down 200, down the Russell, chopping around. But Bitcoin continues to just skyrocket here, up another 1,400. Certainly less than the last couple of days, 5K every single day at least. But good to see for those Bitcoin bulls that it is continuing its charge higher.
Yeah, quite the move out of Bitcoin here. I personally am going to need Bitcoin to see something like 120, 130 to realize some gains on my existing IBIT positions. But in a world where we go to 130, it would start something like this. So I'm pleased to see the run as well. Going to do good things for me in the portfolio. Is Bitcoin a correlated asset with bonds? You guys let me know. That's the way that things have seemed over the past week here. But yeah, just an incredible move. The crypto bulls going crazy, no doubt.
Absolutely. Join us on the YouTube chat if you haven't already. We're streaming live there. Just pop over to tastylive and you'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat. We do have a packed schedule for you today. A couple of fine guests. Jermal will be on with Jem a little bit later today. But Gus, why don't you lay out what we've got for the rest of the day?
Yeah, we can. Let's throw the graphic up. Show it to all the people here. We have. Yeah, sorry, off kilter this morning. We got Chris Vecchio coming up here shortly with us for morning news. Following that up, I will be doing my daily segment, Morning Movers, 8 a.m. Central. We're rolling right into the prediction market segment after that. That'll be Mike and I. We're very excited to get that going. And then into the opening bell at 8:30. Stay tuned for Tom Preston coming up at 8:45 for live trades from him. Love TP. Such a great guy to talk to. And then, yes, we have a great interview at 9 a.m. as Mike outlined. Followed up trading charts with Tim Knight at 9:20, trades from research with Julia at 9:30, confirm and send with Chris and TP at 10 o'clock, and then risk and reward. I will be right back here with Errol at 10:30. Rolling into the afternoon, we have trade ideas of the day, everyone's new favorite segment going out. You see the order on screen there: Jermal, Mike, myself, Errol, Chris, Ilya, rounding things out. Full hour and 15 minutes of straight trades for you there. Into the afternoon, we have more live trading with TP starting at 1 o'clock. Into what is this? Futures Focus. Always gotta be careful. It's not futures in 5 at 1:30. So exciting day we have ahead.
Yeah. And yeah, you alluded to the trade ideas of the day. People are loving it. I think it's really just, I say this every time, but it's really like a great segment if you're newer or even if you're an intermediate advanced to just get the absolute full breakdown of every trade idea. I don't think I've even done such elaborate detail, like going through what happens if it's a winner, what happens if it's a loser, what happens if this is a vol crush, what happens if that's a vol crush. And it's just a nice way to get the full breakdown of a trade.
Yeah, I've had the same experience. And I mean, sort of unexpectedly, it's been great for me as a trader as well. I feel it's like, having to, which it's a good exercise. It's not one that I would necessarily recommend for everybody at home, but having to find an idea every day that you're highly convicted about and can talk, uninterrupted for 15 minutes about is a real challenge. Really forces you to get deep into your bag of strategies, of companies, and really try to find some attractive spots where you typically might not before. I traded Boston Beer on Friday. That's a new company for me, but stumbled across and found an advantageous position there, which I'm gonna check on right now. Looks like we're gonna open up a little bit. So shout out Boston Beer. Love it.
Love to see it. No, it is funny you say that because when I first started here, I was working and just answering customer emails left and right. And that's how I learned how to trade, was looking at other people's positions and then analyzing it and then being like, well, you could do this. And that was like my job the whole day. It was literally just like thrown into the fire, learning, forced to learn for sure. But yeah, little Sam Adams kicker today. Love that. But yeah, let's bring in Mr. Chris Vecchio. He's always got stuff on his mind, of course. Chris, how you doing this morning?
I broke the body of my razor blade, right? Like the stick itself. So I was like, yeah, I'll just shave with the head. Like I was a trained violinist as a child. I have great dexterity. Could be a surgeon. Could not be a surgeon. So lots of bleeding after this morning.
Perfect. What a way to start the day. What a way.
Yeah, not quite a steady hand. It's like what was it from Superbad? It's like you don't have the dexterity or skill to pull that off. I do not.
Did you go? You went for the grip on the sides, or was there enough stick left to have a little tiny bit of stick?
No, I just took the head itself and put it on my finger and then gripped it with my other two and kind of just shaved.
You know what? Given the circumstances, I think you did a bang up job. This could be a lot worse.
It was at the very end too. Is when I got the cut in the final minute. I was like, "Oh, you were so close."
I love that. Yeah, I have I used to have a mirror that would hang in the shower, and then it fell. Like the suction cup thing fell off and just broke. So now I just have this literal handheld mirror that I hold in my other hand, and it's insane. There you go. Yeah.
That's exactly what I was thinking of. And that movie now is almost 20 years old, guys. Like that may be a little dated for the audience. Gus, have you seen Superbad?
I have seen Superbad. Yes, a number of
God.
times. It's still a classic high
Thank
school
God,
college
right?
movie that you got to watch for sure.
It reminds me, I have to ask Julia if she's watched Hackers yet. There's no chance she has, but I'll remind her today.
More up her alley. Yeah, you've been trying to get me to watch Hackers for a little while as well.
You got to watch it. It's incredible. it's truly incredible stuff.
See, Gus, there's a certain point where, like, at least for me, I'm like, oh, have you seen this? And it's, oh, you haven't seen this? Oh my gosh. And that's an indictment of you. And now when it's like, have you seen Superbad? It's like, please tell me you have so I don't feel so freaking old. Like it's not really going after you. It's more like, okay, thank you. Self-soothing for me.
No, yeah, I've seen most of Jonah Hill's filmography at this point. I love pretty much anything that he's in, and Superbad certainly no exception.
Careful what you say about him these days. Apparently he's doing jiu-jitsu, and if he hears you saying any, as real tough guys know, you threaten everyone around you constantly.
Yes, as they say, the loudest dog in the room is the scariest one.
Yeah. Okay.
Yeah, it is. I think E was the one who said he's never seen Austin Powers, and I was just like, okay, come back to me when you've seen that movie. I can't engage in this conversation anymore.
I was the most recent flight that I was on had Austin Powers Spy Who Shagged Me, which I have not seen that installment of the series. So cross my mind to give that a watch for you. There's Jonah Hill doing some jiu-jitsu.
Oh gosh, he's gonna come to Chicago and kick our butts.
I noticed the color of that belt doesn't indicate a ton of experience in this craft. I too have taken one Brazilian jiu-jitsu class in my life. I learned how to put somebody in half guard. What do I do with them from there? I don't know. Hold them down till help arrives, I guess.
Yeah. Hey, he's got some
You
stripes.
get out of half guard, you swing over into an arm bar. Now you're really cooking there.
What are you looking at this morning? Seems like, oh, perfect. Full mount. Great. Full mount,
cool.
Bleached head. Incredible stuff.
Thank you, producers. Note that the producers have a thing for Jonah Hill. Have lots of photos of Jonah Hill just in their pocket, which is odd.
It is funny,
that was definitely. Go ahead.
Dana White has said that Mark Zuckerberg actually is a weapon. Like he actually has trained enough to be lethal. So that's hilarious to me because I can never see Zuckerberg in any other way other than him surfing it with his full dry suit on with the sunscreen on his face. That's a good picture. If you can find that picture, that is an incredible picture of Zuckerberg. But yeah, apparently he's changed his tone a bit.
To what extent? What's the quote here? What's he implying about Zuckerberg? He's not saying Zuckerberg can hang in the UFC.
I don't think that. I think he's pretty close though.
Interesting.
No, he's just letting you know, if you see Mark Zuckerberg out in public and you're thinking about fighting him, think twice.
Yeah.
If I get to Mark Zuckerberg, there's been a security failure somewhere along the chain.
Truly.
Yeah, Zuckerberg's be like, no, guys, sorry, security team.
That one's too
I've got
cool.
this.
That's too cool.
That's way too cool.
That's way too cool.
That's the coolest picture I've ever seen of Mark Zuckerberg. Yeah. I don't know where you guys found that.
That's way too cool. That's got to be AI. But no, there's a different one where he's in his a wetsuit and he's got tons of sunscreen all over his face. That's the one I'm thinking of.
I've definitely said 4th of July, happy 4th of July to people using that photo.
Yeah. Yeah, it's way less cool. Trust me. That is actually one of the most incredible pictures I've ever seen of him too. What a day. What a day we've got so far. But yeah, anything crossing your mind this morning in these markets?
Besides making Jonah Hill and Mark Zuckerberg look real cool.
We're gonna bingo card this morning. There it is.
All sorts of places.
That's what I'm talking about. Yes.
Oh my God.
He's not even surfing. He's using one of the fake ones, the foil ones. Yeah.
Gosh, he doesn't even need to be worried about melanoma anymore. Hasn't he seen Moderna's new drug? Get rid of that sunscreen, Mark.
You got a GoPro? What's he got going on?
It's like an actual propeller behind the surfboard. So he's actually just.
So he's not even foiling. It's completely fake.
Yeah, he's synthetically surfing.
I see.
He looks like one of those Victorian queens.
Yes. This is the picture that pops into my mind when I hear Mark Zuckerberg, just so everyone knows.
Queen Elizabeth. Okay, so what are we watching here today? So obviously what's happening in the precious metal space and the crypto space is top of mind still because over the weekend, U.S.-China trade war, sorry, wrong trade war, U.S.-Canada trade war picked up with 50% tariffs going both ways here. And we see Besson's unveiling a new financial package of doom of sorts. That's not the exact quote, but it's pretty darn close to what he said he's going to hit Iran with here. Oil prices are in though this morning, right? And so if the sanctions are going to be truly about the economy and the risk can stay low while the oil flows, then all the better. Apparently, Axios is saying that there's a 400% increase in ships transiting the Strait of Hormuz over the weekend. So oil's coming out of the gate a little bit softer here, down almost 2% right now, which is good news for everyone. But gold and Bitcoin, those are probably the two most important things to watch at the start of the week. Bitcoin's getting up there, guys. We're starting to look at what territory getting close to 80K again here in the futures market. Gold crossed $4,700 an ounce right now. And I saw a great stat over the weekend. Silver has not touched a new 52-week low in over 4 years. That's how strong this market's been. So we now have a turn higher in these scarce assets with this pressure in energy markets, pressure on the long end of the bond curve. Stocks can do their own thing at the moment. We have a fun macro trade now in the works thanks to Scotty B's intransigence and refusal to heed to just not interfering in the bond market. That's really all I can say nicely here. I've been told to be a little bit nicer about how I talk about the Treasury Secretary. It's hurting his feelings.
Oh, I tweeted something mean about him this morning, so I guess I'm picking up what you're laying off of there. I noted that in every picture I've ever seen of him, he looks like a villain in an animated Disney movie. I don't understand why they take such villainous, dark angles of him all the time.
Yeah,
he also punched Elon Musk in the face. So listen, like you love him, you hate him, it's true.
That's the fight that needs to be commissioned. The Zuck versus Elon fight.
Yeah,
I think
we talked about it.
Yeah,
they were going to do it in the Coliseum.
Yeah, which would have been insane. So
cool.
The aliens would have come and just struck us down if that's what happened.
I'm for it. If we're going to have the billionaires fight, let's use the billionaire resources to have them fight somewhere cool.
It's true. But yeah, crude oil getting out of backwardation a little bit. We're less than 2 points now between the September and October, and then these back months fading a little bit. But this is, of course, a living, breathing thing. So I don't really read too much into it, but it's nice to see that it's not above 90, soaring into the hundreds for sure.
Yeah. Can I made a roll here, if you will, because I was trading a GCV6 contract. I have a few different gold things on right now, but about a week or so ago, I put on a position in GCV6 looking for, just a small move to the upside. And it was a $5 wide spread. So it was in at the 42.35, 42.30 there, was put on for $1.40. On Friday, it was decaying down to 60 cents there, guys. And with 31 days to expiration, I do not need to hold a position. That's decayed down to more than or less than 50% of its original cost. Move on. But gold's breaking out. So don't want to move on too quickly. Instead, I actually rolled up the position into the 44.75, 44.50 short put spread here, collecting $8.30 of credit on now that $25 wide strike. So $1.40 on $5 wide was a little bit light, but now that this thing is really ripping higher here and vol's expanding a little bit, I want to take advantage of that. And I'm feeling pretty confident on gold. So instead of $5.25, $8.30 is a little light. It'd preferably be closer to $8.33. Oh, wait, that's not pretty light. That's only 3 cents, or should be, 3 cents off of our preferred 1/3 of the width. So I have that on gold right now. I like rolling up when it's a position that, we've milked most of it. It got far enough away from the short strike where when you're $400 or $500 away in a product like gold, 30 odd days to go. I mean, look, if it's 60 cents and I have 30 days to go, guys, I'm making $2 a day holding on to that position. It's time to move on and look to extract some premium elsewhere. So that's the big adjustment for me. Otherwise, just delightfully holding on to the 45.50 call spreads. Put 10 of them into the follow account last week when Bitcoin started breaking out. So we may be looking to monetize that fairly quickly now.
Love it. Yeah, Bitcoin has been crazy, and we've been idly positioned for this rally just by picking up Delta, holding shares. Like I had 100 shares of ETH for so long after getting put 100 shares of stock, and then I just closed those shares for a scratch, kept the premium for net profit. IBIT had 100 shares, got into a new position, sold a 40 put to buy a 50 call in December for $1.70 credit. I just recently closed the another position where I sold a 35 put to buy two 45 calls. That was a almost $400 winner into the rally last week. So we're looking good in terms of upside exposure in IBIT, at least right now. And MicroStrategy, same story. Short a, this one's actually a diagonal spread, 110, 140, long November, short October, call diagonal spread. And looks like MicroStrategy is going to continue to open higher with Bitcoin up again today.
MicroStrategy is the number one. That's fine. Show goes on, Gus. We I was taking a look at our top movers and what's been discussed the most over the weekend here in social media. Surprise, surprise, MicroStrategy has the most 24-hour upvotes across all subreddits on Reddit right now. SLS is number 2, SpaceX 3, NVIDIA 4, SPY 5, ES, which is Evercore Sciences, not the S&P futures. Evercore Sciences, ES 6, GPS 7, Meta 8, DTE 9, and GLP 10. MicroStrategy here, Mike, I know that you've been trying to pick this up and maybe Sailor can survive another day or so. It would have been nice to see him get knocked out just for the sake of clearing out that like over-leveraged whale, as we did with situational awareness for semiconductors back in July. We saw how that turned out. We saw this worked out with Bitcoin previously with FTX. You get rid of the guy who's mucking around in the system and over-leveraging things, and the market can finally bottom. But evidently, Besant did that trick, that little favor for the market here. So listen, MicroStrategy, Coin, look at I think we should be looking at Coinbase here, quite frankly. The volumes that we've seen in the crypto space over the past week have been astronomical. Last week, we had the highest short covering window in a 24-hour basis in Bitcoin ever, right? There have been bigger 24-hour liquidity events in Bitcoin, but this was the biggest short covering one ever where shorts are vaporized. So clearly something's going on right now. And a lot of people are getting back into the game here. If there are pullbacks in some of these, in Coinbase in particular, I'd be interested in selling a put spread there.
Yeah, IBIT had more share volume. The last day I checked it, I think it was Thursday. It had more share volume than SPY, QQQ, DIA, and IWM combined. So that tells you everything you need to know about, like you said, the reintroduction of the volatility in the space, but also the participation for sure.
Looks like we're going to open up at 44.80 or so in IBIT. There's 40 minutes to go, so a lot can change there. But it's a market that just continues to run. Yeah. We get to 46 or 47. I'm at 25 days to expiration on the 45.50 call spreads here. So those were put on, and this isn't a short premium trade, right? So I'm going to be a little bit more flexible with how